probably going to hear a lot in the coming days if you haven't already. And this is the newest sort of Russian weaponry, which they are now producing on a mass scale. Some of those attacks on Ukraine have been specifically at their energy installation. So in the middle of winter, large parts of the country went dark yesterday. You can be sure that there will be a retaliation of some sorts, because all of this has started, this latest leg, though, has started with Ukraine using US-made weaponry deep into Russia after the outgoing US President Joe Biden watered down the rules and allowed this. Now, US markets have not reflected this because they've been shut for Thanksgiving on Thursday. In fact, there's a truncated trade on Friday as well, and even Wednesday volumes were fairly weak. So there has been no major reflection there as far as US markets or Treasury, etc. is concerned. No major movement in oil either. So one thing that happened yesterday was OPEC Plus has postponed its key meet in which it's going to decide whether to increase production to December 5th. So you have the Brent fairly stable around the 73 mark as a result of that. Asian markets, meanwhile, not too much great news. And we'll pull up. They opened in the red. Let's pull up the current rates and see what's happening. But Tokyo inflation came in at 2.2%, higher than an estimate of 2%. That's why the Nikkei down in the red. Shanghai Hang Seng seeming okay right now. As far as implied open for India is concerned, and let's just pull up that implied open figure, 31 points up. But look at the fall yesterday, and led by foreign investors. And in the middle of that geopolitical pain, if you watch the closing show on NDTV Profit yesterday, Gautam Duggar came in and said that what's really hurting markets apart from expiry, of course, is foreign investors fleeing to dollar havens as winds of war blow. It seems to be the safest place if it all goes nuclear, maybe. Foreign investors sold 11,756 crores, while domestic investors did come in and buy 8,718 crores. Peter Maguire joining us, CEO of XM Australia. Peter, great to speak with you as always. Just trying to understand whether we're going to see a longer lasting impact of all the geopolitical news in the last 24 hours than we have previously, because markets have been happy to shrug off bad news so far.
Yeah, I think so. I would have thought that you may have seen a little bit of a move in price, but it does certainly seem to be shrugging it off, and we'll have to just see whether something severe or something, if it does materialise, really creates that friction and and that dynamic nature of building in $3 to $5 or $8 as far as a premium from a geopolitical stance. But at the moment, crude energy is certainly bearish and has been sold off over the last probably best part of a week, and we're still waiting to see what OPEC's prepared to do, now pushed out to the 5th of December.
Peter, it's Amina. Good morning. Thanks for joining in. Do you then think the best trade in town is long dollar?
Oh, Samina, I've been, it's the first backward week that we've seen as far as correction over the last 2 months. It's been very, very bullish, and I think possibly some of that hot air blew off it. It's around that 106 level. I'm still a believer in King Dollar. As far as interest rates, you've got better than 50% chance of a rate cut by the Fed, so maybe that is going to take a little bit of steam out of the US dollar. But I think overall, King Dollar trading into New Year's Eve would have to be the trade. And I think that volatility will remain against, the major pairs. Yen, look at that. Have a look at euro and, of course, pound.
Peter, good morning or good afternoon to you. Neeraj here. One question, Peter. If indeed the geopolitical situation looks a bit worrisome currently, will it impact the market sentiment? Thus far, there have been spurts, both in crude as well as markets, but they have recovered very quickly. Did you get a chance to look at the recent developments over the last 24 hours? And do they worry you, or are you unfazed?
Well, I'm aware of it, Niraj, and good afternoon. Greetings from Sydney. No, I think that, look, it's hit traders between the eyes, and they're very conscious as far as, the dynamic nature of, geopolitics and all of those concerns. And it is seeming to shrug it off as a term. That I'm waiting to see. I really thought, years gone by, this would have really ratcheted markets up. But at the moment, it's not gaining the traction but that can change very, very dynamically. I know it's a long weekend into the best part of a long weekend for New York traders, but if something happens in the next 24 hours, I'm sure that will be felt as far as price. And I would think that you'll see, a return as far as volatility. It seems to trade within a range. It gets sold off, and then all of a sudden it booms again to the upside and then gets sold off. So at the moment, it's bearish, and I feel as though it'll hit an inflection point and it'll take another, run up again.
Peter, what would be the take on India right now? I mean, we've seen foreign outflows in yesterday's trade, but then, let's not look at a trend line with just one day. The China preference compared to India as an emerging market seems to have waned. The Trump trade also seems to have waned. But if this escalates, this Russia-Ukraine situation escalates, would India not be the right place to look at for investments as far as foreign investors are concerned?
I would think so, and I'll say this because, first off, it's going to be very hard for any small, medium, or even large enterprise in China to manage a 60% tariff, let alone putting another 10% on it. So I think that's going to be fairly crippling for the Chinese economy, and how they're going to impact that. I think it's going to be very, very tough leading into Q1 and certainly Q2, how that all impacts their trading around about $500 billion a year as far as exports into the US market. And I think it's about 15 or 16% of their global exports go to US. So there's the first thing. So I think you're going to do very, very well India-wise as far as flows. The next part is, where does the Trump trade go? We're still on the high, and I'm pretty sure that will continue at least for the next couple of weeks. I don't know. I just want to see where we are by Christmas, whether we're going to see a blow-off. But the Russell was up 10% in the last week, so it's been extraordinary, or this month I should say. And as far as your other point, geopolitics, they're all uncertain points. I've been in it long enough. If something was to escalate, big time, then I'm sure the market will take it and digest it and probably ramp up price very, very quickly.
Peter, very lastly, we've talked about crude, we've talked about equities. Base metals has been giving us very confusing signs and signals. Piecemeal approach from China hasn't helped. Industrial-wide demand, we saw that in terms of readings that came in from Korea as well this morning, aren't looking too promising in this part of the world. How would you trade base metals? Would you consider long strategies on any of the base metals? And also, does gold become a buy with rising geopolitical stress?
I think first off, gold, yes, it'll come a buy, and certainly silver as well, Samina. Silver's running up 30.88, gold's 26.70. I feel as though that they'll go on another boom to the upside if you get that geopolitical tension. As far as copper and aluminium, copper's languishing. It's back at 9,000, aluminium at 2,600. I thought aluminium may have taken a bit of a run, but a lot of the hot air's come out of that as well on the LME. So where we run, keep an eye on gold, keep an eye on silver. I think I believe that they'll test all-time highs in December. And I think there's a lot of components that are going to drive price higher, and that is what's happening as far as Fed policy, what's happening in the Eurozone, and naturally, geopolitical tensions.
Peter, always great talking to you. You have a good weekend, and we'll see you soon. Well, it was a tough day, but it didn't come in as too much of a surprise, let's put it like that. 24,350 turned out to be the tough resistance that the markets found difficult to take out, and the bulls touched those levels and actually declined post that quick touch and go situation. The Nifty ended with a 350-point cut, down sub 24,000. For the November series itself, this Nifty has lost about 300 points. It's pretty much given up everything that we saw in terms of the last few days of trade. Geopolitical tension, expiry could have led to the fall. That's what we're attributing it to, but who's to tell what led to the bulls taking some profits off the table. Nifty is up 1,000 points from last week's low that was made on Thursday afternoon. Post that, we've recovered 1,000 points to close out the November series. 46 out of the 50 Nifty stocks ended lower. Infosys, Reliance Industries, HDFC Bank, ICICI Bank, M&M all declined quite sharply in trade. Broader markets, though, surprisingly outperformed the benchmark, and I think this is what surprises me the most. While the value is in the large cap space, it seems to be that the broader markets seem to be outperforming the benchmark, and they've done so all through the month of November, ending flat, thanks to the way PSU banking stocks gained in trade yesterday. Bank Nifty was also oscillating in a very wide range of 1,000 points. It did face resistance at 52,800. It's where it touched and finally ended the day sub 52,000. So that's what we've had. We've had a tough day of trade. But I don't think it was very surprising, Neeraj. 24,350, we've harped about this enough. If that was successfully taken out, then you could see levels of 24,500 and then 24,700. I think fair to say that the last few days could have been a Maharashtra euphoric reaction, but it's back to business, back to reality, back to US being the best trade in town, the dollar looking good, crude looking okay, and gold being a buy.
Yeah, so it was interesting that all the notes that came in post the Maharashtra election verdict mentioned that this could be the start of something positive, right? And it could well be over
Luckily
the medium
they didn't give
term.
us the timeline of it.
No, I mean, let's coincide the two that people are not really writing for 12 months, but maybe the next 3 months. Plus December, maybe a Santa rally, who knows, FIs being absent would all be helpful, right? But the interesting thing was the rollover. The rollover for the Nifty yesterday, right? And for the series, 79.3%. The last expiry was 72.9%. The 3-month averages are 76.4%. Clearly suggests that shorts have been carried into the new series. So the market is not quite approaching this series with a lot of optimism. And if there is a whiff of good news, because the market is entering into this series, market-wide, Nifty-wide positions with a bit of a bearish stance, what is to say that there will not be a short covering, if indeed there are some positives? So somehow remain hopeful. I mean, for example, IT today, right, could see a bit of a bounce. I mean,
my question is, where would the positives come from?
Absence
where
of
are
negatives.
they? Yeah, no, but that's this surfeit of negatives.
Yeah.
And I think when the Maharashtra play, I think is done for now, unless you have a very clear positive view on Chief Minister, but that's very mild.
And I think that's what most people said, right? And we saw this even with elections at the center. The election rally was rather, or the decline, both of which was rather short-lived.
It was a week.
It was a week and was back to business. And I said this as well, I don't know whether you remember, but the reasons we've fallen were not the reasons why we started recovering. So the reasons for decline, the concerns still remain.
No, but just the point I wanted to make is I think we'll have to wait and see what this escalation looks like, because they're now, both sides are talking nuclear. Is it just big talk? Will Trump coming in be the next positive trigger? Then that's mid-Jan, Jan 20th onwards.
Yeah.
So, I mean, I don't know. It's looking rocky for today.
Yeah. I don't know. I'm not so circumspect about today's trade, part one. And two, I mean, I think on the election front, just 1-2 bit before I get to specific pockets that you should watch out for, at least according to me, that does the Haryana and the Maharashtra win, aside of what it does to the states individually, kind of reinforce the incumbent NDA government's control, and which is why I think people have turned constructive, not just Maharashtra government's individual thing.
Absolutely.
So therefore, somehow a bit more constructive
it's
on
complete
these aspects.
control. So any concerns post June 4th now have disappeared.
Yeah, so I somehow, I don't know, I may be wrong, but I think for December, maybe things don't look as shaky. But let's...
But new highs are ruled out for now.
Yeah, most certainly.
So I think as long as we remain in this range and don't break sub 23,000, the street will be okay.
Yeah, exactly.
And I think the one good thing, Neeraj and Tamanna, is expectations have eased out. So it's no more a transient trading idea where you buy and you sell and you know you're going to make money, right?
Most certainly.
It is a tough market to make money, which we completely, I think, agree and resonate with. IT, I don't know. Apart from dollar strength, tech stocks aren't looking fantastically placed on Wall Street anymore.
I think there could be a bounce today.
Yeah,
I think
there could be low-level buy.
There's no reason for IT to fall the way it did yesterday. Yes, and maybe expiry-led, so maybe that will bounce back. But, two pockets very quickly. MFIs will see pain today. I mean, the note from Goldman Sachs kind of reiterating what Sridhar Shivaram told us in the interview and warned viewers about looking at the MFI space. So I would reckon that it's not just Credit Access Grameen, and we'll talk about that. But I think the whole space may see a bit of a red today. And CDMO stocks. I mean, we talk about the Syngenes and the Lauruses, yes. Look at the Indian CDMO pocket, the Innova, CapTabs and the others, which are domestic CDMOs manufacturing for the Ciplas and the Reddys of the world. The last 1 month performance for some of these stocks have been fabulous. So I think people are looking at the CDMO pocket with a lot of strength, and certainly something that we should watch
Yeah, and
out
it's also
for.
defensive play in some ways, right?
Yeah.
So there is enough and more action, but it's the
And a
FI.
great listing today, guys.
Yes, you've got one. It's a small one, and hence oversubscribed to the extent that it was. So we'll watch out for the listing that we have, which is Enviro Infra Engineers. After many days, I think, talking about listing, you have a stock that's going to list with a grey market premium of 40%. We've been seeing very flat listings on companies that have been phenomenal, to say the least. But this one may keep parts of the street
It also shows
excited.
you what the level of appetite is in the market
Yeah.
for a large issue versus a small issue.
It's
But
just,
the
yeah, it's just-
appetite utni hi hai.
It's that typical demand-supply dynamic, right? I'll give you a little, so I'll get some more back. But for now, a few stocks that I have. It's been a tough morning to identify counters that could be reacting positively. I've got a short list. Zomato and KEI Industries, both of those have concluded their fundraising. Zomato successfully, if anyone had any doubt, closed its QIP and raised 8,500 crores at 252 rupees a piece. This came in at a 5% discount to the close of day before yesterday, actually, so nearly 7-8% close to yesterday's close. KEI, I don't know whether we've highlighted this, but this one has also raised 2,000 crores at a QIP, through a QIP at a 2% discount at 3,800 rupees a share. Lots of very solid marquee institutions came into KEI Industries. So you had ICICI Pru, Kotak, Government Pension Fund Global, and Motilal Oswal that have invested in KEI. PCBL, we've talked about this for the last few days. They've announced the commissioning of their second and final phase of a pretty significant large chemical capacity at their Mundra plant in Gujarat. Their manufacturing capacity now stands at 7.9 lakh MTPA. So large should be a positive reaction in terms of news flow, and we'd love to talk to the management to get perspective on what sort of revenues we could be expecting from this added capacity. So all in all, I think few names, not significant news flow, but I think successful completion of a QIP for Zomato and KEI and solid names coming in could be viewed positively.
I have two clarifications to add my list. And I love it when we cover clarifications news, because it's you don't know if it will be seen as positive or not. The first is HDFC Life and State Bank of India, SBI Life. Both took a beating yesterday. So HDFC Life came and said that potential changes to bank assurance regulations by the RDAI, which have been reported, is something which is news based on rumors and speculations and is inaccurate. Their claim is that IRDAI will not take such a decision without actually having any kind of a conversation with stakeholders. That's the same thing that SBI Life is also saying, that adopted IRDAI's consultative process and we seek stakeholder feedback. So it's not going to happen today. But look at the kind of notes that are out. And the reason why this is still, actually it's a thumbs down, please, if you can make it a thumbs down. The reason why it's a thumbs down is this is more likely to happen than not. It's a clarification.
But for today, I think it's a big bump up on the stocks.
Do you think so?
Yeah.
I think not.
Let's
because,
see.
Okay, let's see. I'll tell you why I think it's not, and then you saying because they've said कि अभी तक हुआ नहीं है. I'm saying this because it's likely to happen. It's coming from a very clear direction from the finance ministry. They're not interested in banks selling insurance. In the report here is that the IRDA is going to cap bank assurance from the parent bank. And this is something very clear that has come from the finance ministry. And for big banks like State Bank of India, your job is not to sell insurance of only SBI Life. You have to sell it for everyone. So that's where the cap comes. So it's a big hit for brands like HDFC Life, SBI Life, which is why I'm saying it's a thumbs down despite a clarification. And then see what Morgan Stanley is also saying, what Bernstein is also saying. So Morgan Stanley says the IRDAI is likely to have asked insurers to limit bank assurance business. Bank assurance business to be limited to 50% of individual APE. IRDA may consider capping parents' bank percentage share, and then that really is a negative pressure unless clarity emerges. Bernstein also sees the regulatory scrutiny on bank sales of insurance, of course, intensifying, negative for SBI Life, HDFC Life, Max Fin. Proposal would prove difficult to implement and detrimental to growth. So it's a gain, in fact, for an LIC and ICICI Pru and a PB Fin. Yeah.
In fact, even for LIC, because I think there is a note. So, okay, no, please finish your point.
No,
first.
so my point is that they have, look at the quality of clarification, which is why this clarification is a thumbs down according to me, and the next one is a positive. Because my point is, what are you clarifying? You're not clarifying that, no, this is unlikely to happen. You're saying that, you know, there will be a whole process before we do this. Yes, there will be a process, but intent from the central government is very clear. That you want these companies to sell, you want banks to sell everyone's policies, not just their own insurance arms.
Agree. Yeah. So completely well taken. I just think that because it's not happened as yet, for today, there might be a bit of a bounce, one. And for players like ICICI Pru and LIC, which all, by the way, comes into the FNO segment from today, there could be, this could be construed as a positive. So you might actually see some bounces for SBI, because it had cracked quite a bit yesterday, SBI Life and maybe HDFC Life. But ICICI Pru and LIC, I'm looking forward to seeing how they react today. There might be a bit of a green.
So which is what we're saying? LIC and ICICI Pru may see a bit of a green because the loss for the other two is their gain, which essentially means if an HDFC bank or an SBI has to go out and sell insurance, they have to give equal platform to everyone and not just push HDFC Life and SBI Life's product. So, okay, we'll wait and see how that works out. But for these two counters that I've picked, which is SBI Life, even if there's a bounce back today, the news largely is negative. Now, M&M, let's come to the second clarification and why I think that's a positive. So, reports yesterday that there's a 7,300 crore rupee penalty on them for pollution, etc. So, M&M has come and said the stated references to penalty imposition are factually incorrect. They've confirmed that no penalty has been levied or is under consideration. I mean, the fact that they're saying it's very emphatically that there is no penalty, and then the size of the penalty for what the case is, leads me to believe that this is in for a bit of correction. No doubt that the next stock I've chosen is a thumbs down. This is Z, where Puneet Goenka has failed to get a shareholder's note to be reappointed. 50.4% of votes were against the reappointment. Now, on 19 December, if you remember, he resigned from his role as the MD, and this comes as he wants to focus completely on his operational role. Earlier, the board had set higher targets for evaluation of Goenka. That's fine. Here's the current board of directors: R. Gopalan, Puneet Goenka, Deepu Bansal, Saurav Adhikari, Shishir Babubai, Uttam Prakash Agarwal, independent director Venkata Raman is also there. But the fact that you have a free float of 96% and 50.4% of your shareholders have come in and not voted for you as MD will be definitely a directional thumbs down for C. So yeah, those are my three.
Interesting list. M&M could be interesting also because over the weekend when the numbers come out, brokerages expect only M&M and Maruti to probably show double-digit numbers or close to double-digit numbers. All the others will probably be flatlining because of the preponement of the festive season this time around. Anyways, my three stocks to watch. First one is a brokerage note. Credit Access Grameen. Goldman Sachs has downgraded the stock to a sell from a buy. The target price has been cut to 564 from 986. That's about, I mean, the current price is 986. That's about a 42% downside to the current market price. They expect a further buildup of stress due to over leveraging in the industry. They're negatively surprised by the accelerating decline in asset quality in Q2, and they view the recent sector derating as structural rather than cyclical. Now, I repeat, if you had heard Sridhar Shivram on our channel, I mean, he mentioned this categorically about the kind of stress that he's seeing out there. So certainly seems to reason that MFI as a space may not have great quarters coming up. Credit Access Grameen will see a slam dunk today, but maybe some of the others, Fusion Micros, etc. of the world might also be under a bit of a cloud. So watch out for these in trade. Watch out for Fine Organics, is going to resume the Badlapur plant operations from today and is actively working on fully restoring all other plant activities to normalcy. Maybe this gets construed as a thumbs up. So do keep an eye out for this one too in trade today. And I'll watch out for Aster DM Healthcare. Just look at that stock. We'll talk about it in detail. We'll get my colleague Varsha to talk about it. But Aster DM has a board meeting today for a preferential issue. Bloomberg reports that they might also merge Care Life hospitals with themselves. So interesting developments might happen post the board meet. Let's see if Aster DM has a bit of a positive outflow today. So that's something. These are the top 3 on my list to watch out for. Now, what else should you watch out for? Well, the last 2 days, the Adani Group stocks have bucked the trend, literally bucked the trend, if you will. More good news overnight for the group. Agam has all the details. Agam, good morning.
Good morning, Neeraj. So, yes, you're absolutely bang on when you say that there's been a recovery of sorts, even as we see markets wilt under pressure. And there are a handful of reasons. So in the wake of the management of Adani Group companies coming up with the clarification through Adani Green, well, that's followed with a lot of other entities, well, coming through to support as far as the Adani Group company is concerned. And I'm going to start off with the Kerala government, in fact, who has signed, a multi-year agreement. This is a concessionary agreement as far as the Adani Virinium port is concerned. And this is, of course, an extension. This paves way for earlier than expected revenue gains from the Virinium seaport. Moving on, do remember that, one of the states involved in the allegations was Andhra Pradesh. So, when it comes to the former CM, Jagan Reddy, he has also refuted the charges against the allegations surrounding Adani. And in fact, he has said that he will look to file a suit against all the media companies who have made these incorrect allegations to the tune of nearly 100 crores. Well, moving on, we also have several other entities in focus. Tanzania in one. Do remember that back in the month of May of 2024, Tanzania had signed an agreement, a 30-year concessionary agreement with the Adani Group company to operate its Dar es Salaam port, one of the terminals there. And, well, Tanzania said that there's going to be no change there, and they do not see any problems at the moment. In fact, they have also extended the support, along with Sri Lanka Port Authority as well, where we understand that the chairman of Sri Lanka Port Authority has also suggested that there are plans of there are no plans for cancellation with respect to the ongoing agreement that they have with the Adani Group as well. And let's not forget, finally, it's something that we've spoken about yesterday, but it's worth reiterating, that Abu Dhabi's IHC, has also reiterated their stance on Adani Group companies. Their outlook remains unchanged, as do their investments. So a lot of entities coming together in support of the Adani Group companies, and that's also one of the many reasons why Adani Group companies have advanced even as markets were under pressure yesterday.
All right, thanks for that. A bevy of good news really coming up for the last 2 or 3 days, since Wednesday morning, if you will. So in that sense, which is why I think these stocks have done what they've done. Standard disclosures, of course, the Adani Group owns NDTV, and you're watching NDTV Profit, so bear that in mind. But the 1 month charts will look bad. This week's charts, and if you just see what Adani Enterprises or Adani Total Gas, Adani Green, etc. have done this week, you will see that rub of green from Wednesday actually doing very well for them. So not bad going. Okay, but like I was mentioning in the trade setup as well, that this seems to be a fairly heightened pace of rollovers in the new series. Now, my understanding or my assessment was that some shorts seem to have been carried forth because the rollover percentage was way higher than the 3-month averages or the last month as well. How have you viewed the roles, and what is the setup for the new series? Indeed,
Neeraj, again, when it comes to rollovers, they have been considerably higher, but it's also a question of whether or not this has been towards longs or shorts, and I tell you why. Because the 2 sessions prior to yesterday's expiration, we saw a lot of strength coming in, and that was followed by, yesterday's day of trade, where we in fact did see some selling come through. So it's still going to be a wait and watch. Rollover standing at that substantial mark, but we are talking about the December futures, and at the moment we're looking at a 68% increase in open interest towards what at least yesterday looked like fresh shorts. Moving on to the Bank Nifty as well, where what we're seeing is a decline of around 0.8%, once again back below the mark of 52,000. And let's move on and talk about the other factors here. Open interest in distribution, of course, is also looking at 24,000. That's the middle point right now. is where we are seeing a lot of accumulation in open interest. And finally moving down to, I'm just going to talk about the open interest gainers in today's day of trade. That's where we're seeing a substantial change there too. If we can actually pull that up. Of course, it's a new series, so naturally we will see considerable increase in open interest for a lot of these players. So Glenmark, Astral, Aarti Industries, HDFC Life, as well as Samvardhan's Motherson, all of them are looking at that up move coming through, an increase in open interest. Though even though the overall picture when it comes to the market breadth wasn't very encouraging. But let's move on and take this conversation forward with Brijesh L of IDBI Capital and see what his views are here. Brijesh, good morning and thank you so much for joining in. Brijesh, let's start with your first pick of the day. What are you doing with them and what sovereign option structure are you looking to deploy?
Yeah, hi, morning, Neil. So the view, I think it was more with the expiry trade. So definitely there has been a distribution in yesterday's session. But then somewhere I believe that this level of 23,900, 23,800 is likely to act as a support zone. And maybe once we settle at this level today, also being a monthly close, I think there would be some kind of ease off will be there. But lately, post this monthly close, I think that again the buying should pick up. So as I believe that we are in the kind of a short-term bounce, and technically if I need to take a view, then we are bullish, and then 24,500, 24,700. This would be the immediate upside which I would be taking a bet on. On the way down, 23,800, which will be the immediate support. So any long positions which I will be taking, I'm having a stop loss of 23,800. So, and beside this, if I need to take it trade setup, so Indigo is something which is I'm liking, both from the technical and the derivatives point of view. There has been a long build up for the December series. So I believe this momentum should carry for the next couple of days. So Indigo can be bought at current price. The stop loss would be 4310 for the target of 4,500. This would be some 4 to 5 days kind of a time frame. Secondly, Oberoi Realty was from the realty space, which has seen a very good build-up, and the structure is also positive from the technical point of view. So Oberoi Realty should be bought at current price. The stop loss would be 1958 for the target of 2050.
All right. Brijesh, just a follow up on both these. In case if you want to, perhaps deploy options and just buy calls. Would you recommend that under those and under what circumstances would you actually consider something like that? Because, and I'm asking you because we are still earlier on in the December series.
Yeah, I understand that. So I would avoid Nifty at this point of time. I'm pretty confident about the Bank Nifty. So Bank Nifty, I believe this levels of current levels of this 51,900 is likely to be held. Even the percentage fall as compared to Nifty was quite little low. So I would take, if somebody wants to take a risk, then 52,000 out of the money, and somebody wants to play safe, then 51,900. So both these strike price is worth taking a chance, because I believe that Bank Nifty has got a support at 52,000. There are put writers who were active as of now. I believe this level is going to act support. So 52,000 or maybe 51,900. Both the call options can be bought and with a limited risk. So that should be the buy trade setup.
Okay, Brijesh, we leave it at that. Thank you so much for joining us and taking us through your views here as far as these two specific picks are concerned, Indigo as well as Oberoi Realty. With that, it's back to you, Neeraj.
Thanks for that, Agam. So that's our daily dose of all the derivative talk that you need to know and option strategies as well. But as we said, today is also a day of an interesting listing, because the company Environ Engineers got subscribed nearly 90 times. Samina Johnson, as usual, to put some spotlight on the company and what she thinks of it. Samina.
I like the as usual bit, Neeraj. It's been a fantastic opening, and you know, till yesterday, because the market sentiment was looking so much more better than it has looked in the last few weeks, the grey market premium for this one had also gone up quite sharply. But from what I understand, it's a good company, and most brokerages are very, very constructive. So there's not one single brokerage that has come in and said that this is an avoid in terms of the ones that are tracking Enviro Infra. Just to take you through a little bit about it, they list today. It's not a very large IPO. Remember, the last few that we've seen have been upward of a couple of thousand crores. The last one, of course, NTPC Green was 10,000 crores. So this is small as compared to that. 650 crores is what the IPO size is. The price band was in the range of 140 to 148. The subscription was overwhelming. It was oversubscribed over 60 times, 61 times to be precise. Part of it is fresh issue. In fact, most of it is a fresh issue. 572 crores is a fresh issue. 78 odd crores is the OFS. And the expected listing is expected to be in the range of 15 to 25%. So you've got extremes. About 200 odd is what the street should be expecting, as Enviro will debut on the exchanges at 10 a.m. this morning. Promoters, member, hold 93% in the company, which is a big sign of confidence if you're a minority investor looking to invest in the counter. Well, what are they going to do with the money? They're actually going to spend it to expand their facility and their capacity. About 180 crores will be kept aside for working capital requirements, but apart from that, 30 crores will be invested in Uttar Pradesh. You've got 120 crores that they're using to repay their borrowings. That, of course, will help their operational efficiency for the company by reducing the finance costs. 319 odd crores, they said they're going to be looking at acquisitions. So inorganic growth is what the 300 odd crores will be used for. Now, what is Enviro Infra? The name doesn't say very much, but quickly highlight and take you through what the company is all about. The company was launched or set up all the way back in 2009. So it's an old hand in a fairly strong business in that sense. They're a leading engineering company specializing in the design, construction, maintenance of water and wastewater treatment solutions. They have aggressive and excessive capacity already from where we stand. They've completed about 28 plants they built 28 plants since 2017, and they have a very healthy order book which is up 42% with 21 projects as of December 31st, 2023. So as of last year, the projects that they hold is about 21 odd projects in the pipeline, which is up 42%. Well, why do brokers and brokerages or retail participants like Enviro Infra? One, the valuations are fairly reasonable and compelling. Second, the promoters own significant stake in the company, and a large part of the issue is fresh issue, which means that the money will be used for expansion and will go back into the business for growing and expanding. The global water and wastewater treatment market is also expected to grow by 6% to reach $521 billion by 2033. The company continues to expand aggressively. They focus on very sustainable practices, and they have a very solid established track record in delivering large-scale projects on time, suggesting a strong future growth potential. Considering all those parameters, considering the fact that the market sentiment isn't looking as bad as it did a few weeks ago, and the subscription numbers, it seems like this should be listing quite well on the exchanges this morning. In terms of financials, the company's revenue is up 116% CAGR, while profits are up 101% between 2022 and 2024. So very solid growth, and valuations are reasonable. It's in a growth industry, and it doesn't have too much competition, at least in the listed space. So and of course, it's not a very large subscription in that sense. So considering all factors, Neeraj, I think they should list well. The excitement is there. Now, the question is, if you do get a 35-40% uptake in opening, do you hold the stock or do you take profits on listing day?
A lot of HNI investors, Samina, seem to believe that anything related to water treatment, etc., could do really well. So maybe, just maybe.
Just say. And there aren't too many opportunities in the listed space, and this is coming in pretty cheap. So from what I understand, valuations also looking very reasonable.
Yeah. So in that sense, maybe, just maybe,
they'll stick in.
People might stick in. I mean, I know spoken to a few people who invested, and they are very keen to hold on to it. So let's wait and watch how it does. But yeah, that's Samina highlighting, as usual, what's happening in the primary markets and on the listings as well. Well, one more development that happened. Shareholders of Z, didn't vote in favor of the reappointment of Puneet Goenka as the company's director. Now, Rucha Johnson to tell us why is this important. Rucha, take it away.
Thanks, Neeraj. Good morning. So, as you rightly mentioned, Puneet Goenka failed to get shareholders' approval to be reappointed on the board of Zee Limited, with 50.4% of shareholders voting against the ordinary resolution. Now, remember that the Companies Act require majority, that is more than 50% of vote, to pass a resolution at an AGM, and that is why Puneet Goenka failed to receive that majority from the shareholders. Now, remember that recently on 19th of November, he resigned from his role as a MD because he wanted to completely focus on the operations as the CEO, and back then the stock zoomed up in trade. So seems like the street was happy that Puneet Goenka resigned as the MD, and from this we also reckon that the shareholders don't want Puneet Goenka on the day-to-day operations as well as on the board of directors of Zee Limited. But currently, as we look at the current board of directors, 7 including Puneet Goenka, with 3 independent directors is what we have. But earlier the board also set higher targets, performance targets for the CEO Puneet Goenka, which includes stating quarterly revenue and EBITDA margin guidance, as well as targeting a payout of 25% of net profit to the shareholders. But Neeraj, if we look at the share price, well, not done well over the last 1 year, slumped over 50%, and over last 6 months slumped down by 20%, even after it had settled merger disputes with Sony. But if we look at the analyst recommendation, we'll see mixed kind of view over here. We have 9 buy recommendations, 4 hold and 7 sell, and the consensus target price still says that there's a 30% upside to the share price based on the consensus target price.
Thank you for that, Rucha. So, Zee, one to watch out today as well. We'll take a very short break, but we'll be right back. Stay tuned for more.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them
shown exemplary strength. The relative strength has been much higher, and the stock has now managed to cross and sustain above its intermediate swing high of 69.57,000, which was there in the first week of November. So the kind of strong closing for 5 higher top, higher bottom formations on the daily chart, I feel that this stock could do well going into the December series. The rollovers also have been pretty strong. So 7050 would be the stop loss for Polycab, and on the upside we are eyeing around 7300, 7350 levels as the target. Now, we also feel that while there was quite a lot of selling pressure across the F&O space yesterday, there were a lot of mid-caps which were still holding out. So one from the mid-cap space would be Aegis Logistics. Now, here this stock has broken out of a long consolidation. Maybe since August month, the stock was in this zone between 860 and 700 on the downside, and without any critical downside, any strong downside. So post that, now we've seen the...
Those are the 2 ideas though. We're losing Sudeep Shah, but Aegis Logistics, which was up yesterday, so that's one, and Polycab is his other idea, so watch out for those 2. Nirav Ashar is with us as well. Nirav, good morning. Amongst the sectors in focus this morning has to be insurance, because while the sector got slam dunk yesterday, life insurance that is, there are some clarifications coming that abhi tak it's not happened, right? Because there's no consultation process, but certainly seems a step will come about. So are you, okay, so 2 questions roll into one. Is this implication negative over the long term, and therefore are you bearish long term? Part one, for SBI Life, HDFC Life, etc. And could the stocks bounce back a little bit today simply because the move hasn't happened and the stocks have already corrected on that assumption?
Yeah, good morning and thank you for having me on your show. Actually, as we had pointed out, that these life insurance companies were the best bets in a bad market, in a bearish market, because they were perceived as defensive bets. But now this development which has happened has spoiled the sentiment as far as these stocks are concerned. But the fact that it hasn't happened, so I think at least we could see some bounce back in these stocks. But it is at best likely to be a short-term phenomenon till we get perfect clarity on what is the way forward.
Nirav, okay, that was one bit on insurance. The other conversation we've been having in the studio as well is how would you look at the announcement on Z? And interested in knowing your view. So Puneet Goenka has been, not got the shareholder nod for his position on the board as MD. 50.4% shareholders voted against him. How would you look at that for the stock today?
Corporate governance has been the biggest issue at Z, and I think not being voted by the shareholders, I think should be seen as a positive development, at least as far as the short term is concerned.
No, this was an interesting debate, Neeraj, and I stand corrected, but I'll tell you why I thought it was a negative development for the company, because there is no clarity on who would be the alternative to Puneet Goenka. But I get your point that if most shareholders, it's a win for shareholders. So shareholder ki jeet hai, correct? So that's maybe reflecting in the first few minutes. But then who's going to run that company? Because no clarity or no clear second line or alternative has ever been there in the offing.
Yeah, okay. So that's the second question. And you may be right over the long term, who knows, it may hit. But for the short term, near term, the street may just feel that in perception that, oh, Puneet Goenka not being appointed by shareholders, so therefore, would the collective body of the shareholders have some other thoughts along with the board? Can they have a sharp, I mean, in a 140 crore population, surely we'll find somebody to do that.
So I mean, if he did that, if that was true, then there would be no political dynasties in this country. There would be no dynasties in businesses. So that's for another day. But okay, now since we've seen the first rates open up, just a quick look at how markets are behaving, and very, very early minutes yet. But is the mood severely negative today? Maybe in the first second or so. The question really is, will you see a bit of a pullback? And I want to come to you, Sudeep, on that question, and then let's just look at an M&M. As another stock which is on our radar, again has clarified that they did not get that 7,200 crore notice. We don't know if they're going to or not. They've said we've not got it as of now, so it's false. Slight bump up in the first minute of trade, but how are you looking at M&M as a buy on the charts? And then let me extend that to anything else you're tracking in auto.
Morning, Tamanna. Tamanna, what we are seeing here is that, is that post the last 3-4 days, we have been seeing M&M being under pressure right from 3,100 levels. And the stock on the back of this news even fell harder. But even if you look at the entire auto index here, the entire auto index is on the verge of a breakdown. There is some serious selling pressure coming here. So I would not, even though M&M is an overall outperformer, for me, I would just wait right now till M&M crosses and sustains above this level of 2950, 2940 on the upside. It may open up with a slight gap, but 2940, 2950 is that level that I am watching out for, that at least some kind of a bottom formation happens here and it crosses and manages to sustain about 2950. So about 2950, yes, once again, you could start looking at long positions with 2900 stop loss, but not till 2950 is crossed.
Well, that's M&M for you in pre-open trade. It's expected to be a flat start. Don't expect fireworks. 23,900 looks like it could be breached as we get set for trade this morning. But of course, What you also want to keep in mind is the broader sentiment doesn't look great. One stock that had it pretty good and was indicating to a good start this morning is Aster DM. Still about 1.5% higher as pre-open trades settle down. But Varsha is joining us as the company, I believe, is set to meet today to talk about preferential allotment. Varsha is standing by with more on it. Varsha, what can we expect? Shareholders are getting quite excited about this board meet. In pre-open, at least, the stock is trading marginally higher.
Board meeting is scheduled today at 5 p.m. and they're going to approve equity share issuance. So basically, the board meeting is for preferential allotment of up to 5% post issue paid up capital. Now, the interesting thing here is, which investors are waiting for, there's this Bloomberg news wherein Aster DM Healthcare and Quality Care India, which is backed by Blackstone, are near close to merge. They're gonna, so potentially making them one of the India's largest hospital chains with over 10,000 beds. Now both this company are expected to merge. Now the shareholders of Aster would own 57% of the combined entity and Quality Care investors would hold almost 43%. Now this merger is aimed to boost profitability, growth and cost efficiency. Now, Aster and Quality Care are finalizing details of the transaction, which is expected to be announced today. So maybe we can hear this in board meeting. Now, Blackstone was among several PE firm and pension firm that has been considering a potential deal with Aster, and Aster shares have risen yesterday. We saw that because of this anticipation of the deal. Now, day before yesterday, we did have a news from Aster wherein they actually increased their stake in one of their hospitals called Prerna Hospitals, wherein they came out with a kind of guidance wherein companies expecting that India revenue growth of almost 18 to 20% over next 3 to 4 years. This growth will be driven by higher occupancy and capacity expansion, and they are expecting operating EBITDA margin of around 23 to 25% in next 4 to 5 years, and ARPOB, which is the key element for hospitals, that is average revenue per occupied bed, is expected to increase at 7 to 8%.
Thank you for that, Varsha. This is why you are seeing a little bit of excitement on Aster DM in early trade this morning. Let's get perspective, and of course we've got a fundamental view in terms of what we should be expecting from this board meet. But Kush, on the charts, is it looking like it's showing some strength?
It is, and there was this long consolidative phase with a positive bias, and we saw a breakout of that 2 sessions ago on the back of good volumes. The news is out now. Perhaps there could be some profit booking that might come about, but from a technical standpoint, I think the stock is on a very good footing. I think on the downside you've got support near the 470 mark, so if that is held, you could see the stock move higher. Also, there's a gap that has to be filled around the 505 mark, so there's a possibility that in this rally you could see the stock move to 505 levels and perhaps even higher. So all in all, on a good footing. If anyone's got this, already holding it, then you should continue to ride it. If not, I think perhaps wait for some time, because a bulk of the move is already done, so the risk-reward ratio will not be in your favor. But if you've already got a position, continue holding on for levels of 505.
Okay, that's one name. Well, some positives, but I wonder if the next stock that we are about to discuss has a slam dunk already or no, because it's the top brokerage note of the day as well. Goldman Sachs' view on Credit Access Grameen. Mahima Johnson to put that into perspective. Mahima, why is GS bearish?
Right, Neeraj, so as you rightly mentioned, it's the top brokerage call of the day, and they've double downgraded the stock to sell from buy, and they've cut the target price to 564 from 1426. So this poses a 42% downside from its yesterday's closing. Now, why it's bearish? They expect a further build-up of stress due to over-leveraging in the industry overall. What they're saying is that they are negatively surprised by the accelerating decline in the asset quality in Q2 FY25. And lastly, they also are of the view that the recent sector derating as a structure is structural rather than a cyclical change. So these are the 3 key reasons why Goldman Sachs is really bearish on Credit Access Grameen.
All right, thank you so much for that. Credit Access Grameen seeing a bit of pain. So, look at the financials today. And Nirav, let me come to you on that. We spoke earlier in the morning about microfinance institutions. There's this clear take on Credit Access Grameen. We're looking at the life insurance play overall. Is financial something that is giving you a little bit of worry right now? Or what would be your top picks in this space? Would you look at it right now?
Yeah, I think it's better to stay away from the tier two players, and I think be focused on the frontline stocks. And I think there, of course, the private sector banking space is looking quite attractive. And other than that, we've been looking at stocks selectively, stocks like Bajaj Housing Finance or Geo Financial Services. That's about it. Rest of the pack we have been avoiding.
Well, thanks for that, Nirav. Well, it's looking like it's going to be not such a great start this morning. There'll be pockets of interest which would look good. Sudeep, quick check. IT looked sold off yesterday. Now, does this become a good candidate for a bounce back? Would you consider initiating fresh longs on maybe a TCS, Infosys, LTI, Emphasis, anything you like really for the December series?
Out of the IT stocks now, yesterday we saw these stocks getting battered, and from higher levels there was some selling pressure. But yes, out of these IT stocks, I would go with HCL Tech and Infosys to be added on dips, because both have now shown some good strength. HCL Tech was, as it is outperforming, it was just the first day of that profit booking move yesterday. So while if you go about the levels, then HCL Tech 1810, 1820 will act as a support on the downside till the time this is held. 1810 is held, we could see a bounce back till 1900. And if we even just have a look at Nifty IT, Nifty IT also is above its 20-day exponential moving average, which is placed somewhere around 42,500, 42,600 mark. So till the time this zone is held, I feel that there could be some consolidation, and post that once again the trend could be resuming on the upside.
Okay, well, 5 minutes left for the markets to kickstart. We're gonna have a rocky, if not a rocky beginning, a flat beginning, not a rocky beginning, quite unlike yesterday. But the point being, can the market breadth hold out? Because yesterday too, the breadth was in the green, even if the markets largely were in a bit of a tizzy. So that's insurance is one. Even though Kush, if we have spoken, I want to pull up Z Entertainment firstly. And I know we've spoken about it twice already, but Z becomes a very active stock. And Kush, even if we've spoken about it, now that we know the rate to Z, it's 129, it's opening 4.5% higher. It's no longer as trader friendly a stock as it used to be. Would you trade it this morning at these levels?
I wouldn't. For me, it squarely falls under the SpiceJet, Vodafone category, where you see a lot of trader interest, a lot of retail interest, but it's not really materialized into a lot of gains. And if you see the medium-term trajectory, at least over the last year or so, the trend has been lower. Now, while the stock is holding above the 20-day moving average, and today it will open above the 50-day moving average, so you've got a few technical points going for it. But because there has been such a sharp cut and an unsustainable up move, over the last year or so, there's a possibility that even this rally might fizzle out. So I'll wait for some levels on Z. Broadly, that level comes to 140. If that is taken out, if that is sustained, will you see a move higher? But up until then, this could be a trading bounce which could be sold into. So I will not initiate a long position on Z just yet.
Kush, I don't even think traders have made money on Z. This is such a difficult stock. Forget fundamental investors. I have not heard of a single technical trader as well who's actually gone on and said I've made money on Z. This one, best avoided. The stock might be up 5% in pre-open trade, but it's not here to stay, is what we can all agree. IT has done okay. I want to quickly get a view on HDFC Bank, Sudeep. Yesterday actually the week has been pretty good for HDFC Bank. This morning as well, it's around 1800. Good level to get into. A couple of brokerage calls that have upgraded the stock. But for 50, 100 rupees, would you go long for December on HDFC Bank?
Yeah.
Sudeep, you're in mute.
Yes. Yeah, I would like to go long here, because see, this is one stock which has supported Bank Nifty till now, and the stock in the last 2-3 days, the price action has suggested that it has now crossed and sustained above all its important swing highs, which were placed around 1785, 1780 levels. Whether you talk about the July or September highs, all those have been taken out, and the stock is firmly trading above that. Any dip towards that mark of 1790, 1785 can be used to go long. And overall now support on the downside for this stock would be around 1750 where the 20-day exponential moving average is placed. And till this is held, I feel overall the stock could head up to 1850, 1870 zone. May not be too fast, but yes, the trend is still firmly on the upside.
Just a few of the gainers as the pre-open market has settled and Adani stocks back in focus. Adani Green, Adani Energy, popping today. You are also seeing HDFC Life showing a bit of hope after those clarifications coming in. Honasa is having a second good day in a row, as is PCBL. Macrotech also showing some action there. Kush, anything that you would pick looking at the pre-open action?
Well, one stock that is popping up, and I would have loved to recommend Polycab. I mean, I'm sure I can, but Sudeep's already mentioned, so I'll give another one, which is CAMS. This is also one stock that we discussed yesterday during closing. 3 good sessions yesterday on the basis of relative strength alone. This stock makes the cut. So I think for targets of 51.50, this is very much a stock to consider on the long side, and your stop loss comes in close to 47.50 kind of levels. So CAMS on strong footing, good volumes and relative strength. It's got a few things going for it. So Polycab, in fact, yesterday was one of our picks during the closing show as well, and it closed at the high point of the day where the markets were exactly opposite, and closed at the low point of the day or close to the low point of the day, and there we had targets of 7300, 7450, and 6950 was the stop loss. So continue on Polycab.
Okay, 6 seconds left for the markets, but watch out for Polycab. Seems to be a consensus idea from both our experts. So that's something you want to keep an eye out for from a trading perspective. But here is the first trade. It's a 0.25% higher. So good start, really. I mean, we did a bit of a corrective move, largely because of expiry-led fears yesterday, maybe. A combination of geopolitics and expiry. But flattened out completely. IT2 not quite correcting the same vein that it was correcting yesterday, but down nevertheless. Not as good and brisk as the bank nifty. Broader markets flattish. Let's get the heat map up on the screen and see if life insurance is bouncing back. Yes, it is. HDFC Life a couple of percentage points, SBI Life about 1.7%. This may be a day's move, by the way, or maybe a morning's move as well, but let's wait and watch. The correction yesterday was severe and a bit of a pullback out there. Dr. Reddy's up, Adani Enterprises continues to move up, probably the 3rd day or the 4th day on a trot now that Adani Ent is in the green. HUL, Sun Pharma, NTPC amongst others. Adani Ports makes a bounce back today, by the way, after a corrective move, but a lot of green, very little red. IT sulking yet again. I was of the opinion that IT could bounce back. Clearly not seeing that with the 2 biggies, which is TCS as well as Infosys and HCL Tech. Actually, all 3 are in the red this morning. So that is the one which is pulling it down. But a lot of green and life insurance clearly standing out.
We'll have to see if strength really picks up, but not a bad start at all for the markets after the kind of day that we've had yesterday. Let's pull up the sectoral indices just for a second if we can and see what's working. We already know that IT stocks will probably be at the bottom, and there they are about 0.5% down. Realty has been hurting. Nifty Media, I suppose, because of Z being propped up there. Dr. Reddy is pushing up the Nifty Pharma and Healthcare pack. Energy stocks doing okay this morning, and oil and gas in focus. No clear trend. So let's get to the specifics and the stock ideas that we're talking about. Adani stocks back in focus. Adani Green, Adani Energy. We saw Ports and Ent also working on the Nifty. But let's look at how they have opened. Remember, this was an island of green yesterday in an otherwise very tough market. So 9% up on Adani Green, and Energy about 7% up. Z, we talked about Puneet Goenka's bid to be director has been rejected. 50.4% shareholders have voted against it. Market seems to be welcoming it for the moment. HDFC Life and SBI Life, Neeraj mentioned it, but I'll reiterate, those clarifications have worked, but it's coming off. It's bump up this morning. In the long term, is this cap on bank assurance something that these companies will have to live with? Actually, we should have quickly pulled up LIC and ICICI Pru as well, but if we can, that would be great. Credit Access Grameen, the other one that we are looking at, double downgrade by Goldman Sachs. 11% down. This is the pain point of the day, I would say. Aster DM, big deal between Aster DM and the Care Group chain of hospitals is going to shake up the industry. That's what's expected. We'll know. There's a board meeting today, 1.2% up on the stock. I'm wondering if we can see what LIC and ICICI Pru is doing so we can get a broader idea of this space, and those two up in the green. It's expected that they will benefit if big banks have to sell all products of insurance companies and not just their own. But that's the long and short of it. I think a little bit of a slower start for a Friday, a wait and watch mode.
Such a bad thing, Tamna. It is Friday, so we should take it easy and not have too many people going home with losses. But I think you've highlighted most of the counters that are in focus, and I think the easy trade this week was Adani, right? Go long on Adani Wednesday morning and you've laughing your way to the bank. Those gains continue to roll in. I mean, look at that. Adani Energy up 7%, Adani Enterprise, and I think that's the two counters that are supporting the Nifty as we see it right now. Adani Green up 8%, Adani Energy up 8%, Z Entertainment is up 5%. Honasa has also been looking good over the last few days. This morning is no different. The stock is up about 6.5–7% is what we have. NCC is looking good, 4.5% higher. Adding to the Adani list is Adani Total and Adani Power, both trading with 3 to 4% gains this morning. Keynes Tech looks good, 3% on the stock. Aegis Logistics is up 3%. Newgen Software, they've managed to bag a pretty big deal in terms of relativity, of course. And the counter is responding well, up 2% on that. A quick check on how Zomato, KEI are doing. They've concluded their fundraising plans. The stocks, interestingly, Zomato is still down 1% despite that 8,500 crores coming into their bank. KEI is up about 0.5%. Take a look at Swiggy while we're at it. It's always good to see how Swiggy and Zomato work. They've not really been they have been working in tandem with each other. Swiggy reflecting the similar sort of cut that Zomato is this morning. Pharma is not looking too bad. Fine Organics is up 2%. Angel One is having a positive morning. On the sell side, Tamana's already highlighted how Credit Access Grameen is down. It was down 11% at the get-go this morning, now down 8%. You know, your shipbuilders, that was the theme for most part of this week after Maharashtra state election outcome, are seeing some profits being taken off the table. So Cochin Shipyard, Bharat Dynamics, actually even Defence as a pack is all trading with a negative bias as we see it. Mascot Docks, Bharat Dynamics are all trading with cuts in early trade this morning. 361 MAM is down 2.5%, but no real trend emerging. If I can quickly pull up Bank Nifty and see what it's getting up to, and then do a check on the PSU index, because that held out in trade yesterday. Bank Nifty is up comfortably above 52,000 for now at least. The PSC index is trading flat. Broader markets that closed out flat yesterday, outperforming the benchmark. Let's see what they are doing. They're also trading in line with the Nifty itself. Nirav, come in on this one and help us understand this, right? For most part of this year, most fundamental analysts and stock pickers have talked about how the value is in the large cap space. But unfortunately, the large cap rally hasn't picked up. And for whatever it's worth, even when the markets did bounce back recently, the leadership came in from the broader market names. So stocks that were down 30–40%. Now I know these have probably a high down capture ratio. There is momentum. But if one is seeking not very aggressive returns, but also not underperformance, do you feel like there are more opportunities in the broader market universe?
Yes, definitely. I think in the broader universe, we have to be very, very selective. But if you just see the commentaries of quite a few companies, they have given very strong guidance and the vision documents till 2030. So just take the case of companies like Praj Industries. Praj Industries, they have recently come out with a presentation where they intend to triple their revenues by 2030. Then there is a company, Piramal Pharma. They have targeted 2 times revenue growth by 2030. We had a very interesting presentation from Indian Hotels Company Limited, where they are also targeting revenues to double by 2030. The expansion plans have also been highlighted very, very clearly. We are also looking at companies like Varun Beverages, which recently completed their 7,500 crore QIP. So, of course, all these proceeds will be used to fund expansion plans. So we are keeping our eyes on these type of companies, those companies where there's a lot of clarity and where they are talking about the sector also. So I think particularly the Indian Hotels presentation was very, very impressive. It also talks about the hotel sector. It's at a cusp of a new beginning. And I think that was followed by presentations from ITC hotels, East India hotels. So we like this space very much, and we started looking at it in a very serious way.
Okay, so Indian hotels is one pick as well that you're seeing. Kush, I'm just wondering that would you have a constructive bet right now on any of the Adani Group stocks from the run-up that has already come in? Are you seeing a further upside?
So I was constructive on Adani Ports, even Adani Enterprises yesterday or day before, if you remember, we had that discussion. My only concern is that, the up move isn't really as sharp. And what do I mean by that? It is sharp. In fact, if you see from the bottom that it made, it's just that, if it was the news impact and if that is out of the way, then the stock could have perhaps regained the, entire loss that it made, which it did not. It's on the way there, but it's still not there yet. So this could also be because of the way the markets are shaping up. I would still remain constructive, on both the stocks. But my first preference would be Adani Ports, and here my positional stop will come at 11.30. And as far as Adani Enterprises goes, here my positional stop is close to 23.50. So long on both of these. It's just that you could have a gradual recovery and not like a one-way, upswing all the way up until the gap that was created when the news came about and the stocks fell.
Okay, standard disclaimers there, of course. Now, news coming in that's also flashing on your screen, and we'll get Vishwanath Nair up on it in a bit. The Finance Ministry has proposed to raise FDI limits to 100% from 74% in insurance companies. So, net owned funds requirement for foreign reinsurers are proposed to be reduced to 1,000 crore rupees from 5,000 crores earlier, so significant reduction there. Proposal to empower IRDAI to bring down entry capital. Remember, the winter session of Parliament is on, where this was expected, but there was no clarity on when it would happen. Now, the proposal to empower IRDAI to bring down entry capital requirement for companies in unserved and undeserved segments on a case-to-case basis. So what that does is, and this is a ministry document from last night, a circular which has come in from the Finance Ministry, which is why perhaps you're seeing that kind of a spike in insurance companies. It opens up the space for new players. It's very, very positive for incumbents, and it also helps get FDI in. It's completely change in stance or loosened up the FDI rule. So that's why insurance is in focus, and we'll just try and get Vishwanath up. But Nirav, we've been talking about insurance, so much news flow from so many angles. As a business, do you like insurance at all? Would you be looking at it?
Yes, definitely. I think it's a business which has got a long gestation period, but I think once the returns start coming in, then I think definitely the prospects are quite strong. And considering the fact that the penetration of insurance has been increasing in the country, I think overall positive as far as the sector is concerned.
Nirav, if you track this closely, is there going to be a beeline for increasing the stake into some of these players in the first place? Simply because even if there is an FDI availability, I don't see the larger insurance players, HDFC or SBI, really wanting to give up so much stake. I mean, 100% is a separate thing altogether. I don't think they'll be even giving more than 51%, right? So it's great for maybe some of the smaller players to get it. The larger players won't benefit fundamentally out of it.
Yeah, the larger players already have the benefit of scale, and essentially they have better quality margins also, a better hold over the market.
Nirav, excuse me. Nirav. No, sorry, not talking about scale. I'm just saying ownership, right? Why would they give up majority ownership?
Yeah, so with the kind of efforts which they have put in to build up all this scale, I think they would not want to part away with the stakes so easily. But of course, for the smaller players who are in need of capital, definitely they could look at giving away some stake to the newer players.
Interesting to see. By the way, they've cooled off completely, some of these names. LIC is separate, viewers, because I think there is maybe one brokerage note today which says that with this bank assurance thing, the one which is the least impacted is LIC. The fact that it comes into the FNO space as well today, starting today, is important. By the way, we'll talk about DMart a bit later on, but because that comes into the derivative space as well. But insurance is the big thing and we should stick to it. So, Sudeep, are you there with us? If you are still there with us, I would love to know, between an LIC, HDFC Life, SBI Life, with the first 10-12 minutes gone now, what's the trade on the life insurance companies?
So, out of all these insurance names, what we are seeing now, even HDFC Life also is not seeing much of a focus. There's some pressure even at higher levels there. But what I would really go with is LIC, because last few couple of months, in fact, right from October, there is some kind of a base formation happening. And last few days, we have seen a serious uptick, and I feel there is a consolidation breakout here. So LIC would be my top pick out of the entire insurance space right now. And at current market price of 956, I feel a stop loss of 920 would be a decent stop loss. And on the upside, we could see the stock head back closer to 1030, 1050 levels, because this was a big outperformer until July, and steadily it has now slid into a period of consolidation. Now I feel this is a time for the stock to once again bounce back.
Vishwanath Nair joining us for more on that story. So now, this was, I believe, a notification from the Finance Ministry last night. Vishy, is this something that will go through the process in Parliament? At what stage is it, and what is the intent behind it?
Right, Tamanna. So what the government intends to do is bring up the FDI limit to about 100% from currently 74%. What they also want to do is for foreign reinsurers, they want to bring down the net owned capital requirement from 5,000 crore to about 1,000 crore. It is also intending to empower the IRDAI to ensure that the entry capital barrier is lowered for companies which are specifically targeting underserved or unserved areas. These are all proposed amendments at this point in time. What the Finance Ministry has said is that it has invited comments on these proposals, and depending on the commentary, then they will come out with draft sort of norms, draft regulations, which will then be brought into formal amendments. So there is a long way to go at this point in time. This is still just a proposal stage. Depending on when the announcement, when the responses are received, the deadline for now is set at 10th of December. After that, we'll see this process move ahead. Suffice to say, still very early stages.
All right. So this is the big story to watch today, and of course the question that Neeraj asked, that you can open it up, but
are there takers?
Are there takers?
Are there givers?
Yeah, are there people who want to come? And I think yes. This is a highly underserved market.
Yeah.
So foreign players will want to come.
But are there companies in the large space who want to give up so much of ownership, right? I mean, if I was in HDFC Life, why would I give up? Even if FDI permits me 100%, why would I give up 100% ownership to a foreign player?
Yeah.
74 hai वैसे भी, right? You can go up to 74, they are not even there.
I mean, there could be many permutations and combinations come in. Smaller players with a large global player comes
That
in.
will happen.
Because the push is very clear from the government's end. We need to insure more Indians, by hook or by crook or by whoever does it. So,
completely.
So you'll have to be ready for that. All right, I quickly want to thank Kush, Sudeep and Neerav for joining us today as we start our first corporate conversation this morning. Thank you so much. Let's shift attention to the auto sector. Has been in focus for a whole variety of reasons, and we're speaking today with Rakesh Sharma, ED at Bajaj Auto. Thank you so much, Mr. Sharma, for joining us. Great as always to speak with you here on NDTV Profit. Now, last we spoke was, I would say, at the tail end of the festive season, and you had talked about how the initial few days was surprisingly positive in terms of demand. Now that you've had a chance and you know that's kind of behind us, can you give us a sense of how festive season actually turned out for you?
Yeah, good morning. You know, it's very difficult to read too much or to extrapolate what happens in a season. And it's very dangerous to read too much into what happens in those 36 days. Like you rightly said, actually the first half of the 36 days was slightly muted, but it was very exuberant in the second half. You know, so overall, I would say that it was a good festive season for Bajaj Auto. Our area of focus, as you know, is the upper half of the industry, which drove the industry, which grew faster than the lower half. And we grew, thanks to that, we had a great season. We recorded our highest ever festive volume of 270,000 pulsars. And Pulsar is the main flagship brand of the company in targeting the upper half of the industry. Three-wheeler business also did exceedingly well. We had a record three-wheeler sales. Also, all-time high for Chetak, but that, for that, the base is small, but be that as it may. So I would say that all the business units, the domestic motorcycles, the electric business, and the three-wheeler business had in the end, by the end of the season, had a very good season.
And do you see that? I mean, you started with that qualifier, Mr. Sharma. So do you see that now sort of, lowering, or do you see that petering out as we go forward? What's the sustainability of the kind of push that you've seen, and what do you think you're ending the year at? Because that overall question of auto demand, I'm just wondering if that's behind us or is very much there.
Well, like I said, it's dangerous to read too much into the exuberance of the final 15 days of the festive. You can imagine it's not right to extrapolate that. And frankly, we have to wait for the natural downturn which will be there post-season, because there is an advancement of sale. In India, particularly, it's very auspicious to buy. So people who want to even buy in November and December to some extent advance their sales into the festive. So there is, but what degree of advancement has taken place, etc., is very difficult to pin down. The right way to understand industry behavior is really by first week of December or middle of December, when all the registration data, the backlog, etc., is completed. Be that as it may, the 36 days going off very positively, and the first quarter and the second quarter being a tad lower than them. I think the industry is definitely hovering at about, motorcycle industry is hovering at about 8% growth, which is what we had sort of anticipated in the beginning. So we are very happy that it is meeting those expectations. So we would stick to that we see that kind of a growth number. And obviously, like I said before, this 8% is an average of the two halves, and the upper half would be higher than the 8% and would continue to drive the motorcycle industry.
So, Mr. Sharma, good morning, Neeraj here. The expectations of a flattish November are not out of whack. I hear you say that don't extrapolate. The expectations are that November might have been a flattish month for you on the two-wheeler side, not the three-wheeler, the two-wheeler side. That are not out of whack, right?
When you say flattish, I don't understand.
Month on month, November 24 over November 23.
It's an erroneous comparison. It's a flawed
because of the
comparison.
festive month.
But see, this is a superfluous discussion, because Diwali last year was in November.
Fair call.
I don't understand what we are trying to drive out of that.
No, perfectly. So therefore, the 2 month combined, October, November combined, let's say, you think has not been a bad festive season this time around because of sentiment. Fair call. Okay.
Yes. That's the right way.
That's the right way to look at it.
Okay. Actually, because there is a significant Pitru Paksh involved also, which also so we actually internally also, we compare September, October, and November.
Fair call.
And November data you get by, let's say, first week of December. So that is the right way for us to, at least within the company, for us to understand what the industry behavior
Point
is.
well noted. Okay, Mr. Sharma, let's leave the festive season out completely. I'm just trying to understand now, how is business per se looking, sir? Because there is a lot of chalk and cheese opinion out there around the buyer sentiment. Split it into urban, rural, split it into whether it is modern tech gadget equipment versus non-gadget, split it into staples. But there's a lot of chalk and cheese opinion. I would want to understand, how do you feel about business as of now? Post-festive season, let's say going into the next 4 or 5 months, whatever little you can crystal ball gaze.
Yeah, sure. So that's what I was saying, that we started the year with an expectation of about 6 to 8% growth in the motorcycle industry. And it started off slowly in Q1, Q2, but picked up, and particularly picked up very well in the festive. I think the next few months, we should be looking at, for the industry, a growth of about 8% or so. Now, it could lie between 6 to 10%. So I'm saying about 8%, which according to us is a very healthy growth, particularly if you break down that growth between the higher end of the industry, which is the 125cc plus, which is going to be in double digits, and which is healthy because that's the where you get better revenue and better margin. So that's a very good sign. I think various factors, things like a reasonably stable economic backdrop, advancing penetration of retail finance, a reasonably okay monsoon, which is ensuring that the small town wheelers moving. All these things are combining to say. But of course, there are issues like the very bottom end of the market, whether there is enough economic inclusion to lift those people up into the consumption cycle. We are still seeing a little bit of softness over there. So we are seeing a much better performance in the middle part of the industry, which is sort of driving this 8% growth.
Right. Hi, Mr. Sharma. It's also Samina joining in. Exports has always been a critical driver for Bajaj Auto. What percentage of overall revenues do you expect from exports in FY25? And there are some geopolitical stresses, currency fluctuations in LATAM and Africa. How do you feel about that space? Where do we see that going in terms of contribution for the second half of FY25?
Well, our year-to-date growth in exports over same period, which is April to October, is about 9%. This is actually driven by LATAM and parts of ASEAN. Like I've been saying, that every month and every quarter is an improvement over the previous one, because the situation in Africa is improving. LATAM has been doing very well, so I'm not sure what you mean by geopolitical tensions in LATAM. We are not reading any of those tensions in LATAM. South Asia is also recovering, and ASEAN, particularly for us, Philippines is an important market. It has done very well. So when you put all this together, we are getting at about 9% growth. We feel that Q3 was better than Q2 by about 10%. We feel that Q4 should also be better than Q3 by about 10%. So step-by-step growth. Having said that, I would still say that even though Africa and countries like Nigeria, which is very, very big in Africa, have been showing month-on-month improvement, because of the macroeconomic conditions, the volatility in the currency, the situation remains fragile. And we have to see every month it goes. But we are very happy that for now about 6 months or so, or more than that, 6 to 8 months, we are seeing a step-by-step improvement even in Nigeria and therefore in Africa as well. And we are hoping that that continues. We have planned for that to continue. And we are obviously engaging with our channel partners with that hypothesis.
Planning to add any more geographies, Mr. Sharma, before I go into the conversation on EV?
A big thrust area for us is Brazil, where we have, which is, as a country, the third largest or the fourth largest country for market for motorcycles. We have launched, we commissioned our plant over there in July, which has unlocked a bit of supply chain. And that's an area of focus. As we speak, we are again we've got an initiative to expand capacity for 25 because we see a lot of traction for our brands and good demand over there. So that's one. We've also launched Bajaj in Spain and Portugal. We expect that to start to pick up March onwards because now there is the onset of winter. But we did an early winter launch just so that we put in the infrastructure, etc., over there. And so those are the few markets which we're quite excited about for the next few months now.
Sharma, just wanted to get your sense on if you have seen any impact on the possible hike of CNG prices. Policy moves have now ensured that you will see an increase in CNG prices. How do you see that impacting, especially your three-wheeler segment? Or overall, do you see that impacting demand?
No, we don't, because so the three-wheeler CNG we have been in the market for more than a decade, and it goes through these ups and downs, and we find that with a lead and lag effect, the arbitrage between CNG and petrol comes back to that about 30% odd. Sometimes it increases because the petrol prices suddenly increase and vice versa. But over the years, the demand is actually being driven by the expansion of the CNG network, which is the basic factor which has led to the penetration of three-wheeler CNG and almost the eclipse of the diesel and petrol-based three-wheelers. And now, there is a 70% odd coverage of the key towns. And we are told just when we take the government plans, this is going to go up to 80-90%. So that is actually the key driver for CNG demand. The arbitrage swells and diminishes over time, but it still is much more profitable for a driver to take a CNG three-wheeler rather than a petrol or a diesel.
So fair enough. So one hike here and there is not going to make a big difference if you have such a huge part of the market. Just was wondering, I'm sure you've been seeing this closely, a couple of interesting EV launches in the two-wheeler category announcements actually, and in the scooter category from others in this space. How do you view this at Bajaj Auto? I mean, one segment, of course, catering to gig workers, another very popular model now going EV. Do you see these as positives or competition heating up?
Oh, we see this whole thing as a positive, frankly speaking, because, it is very difficult for one company to completely come and create a new market. So we've seen this, for example, in premium motorcycles, where, the penetration of premium motorcycles is, when you benchmark it with even countries like Indonesia, etc., is much small. So when you get 2 or 3 good companies with good technologies, good products and brands entering the market, it stokes the market. And in automotive, there is nothing like products to stoke interest and build demand. So we have seen, for example, in Africa, the Chinese coming in and developing the motorcycle market in the early 10 or 15 years ago, and companies like us then profiting. So if you take a long shot view of these things, good responsible participants entering the industry with good products is very good. It's good for the development of the industry, because that it's not a straightforward case in EV. There remain amongst the late adopters and the late majority anxieties about various aspects of EV. So more and more vehicles on the road erode those anxieties, and it's good. But having said that, our own view is that the use cases in India are so diverse. Some people commute very long distances. Some people commute very short distances. Some people want to cut their fuel economy. Which means the implication on fuel systems for this is that there will be multiple fuel systems. We feel that there will be the gasoline-based fuel system. There is CNG now with our freedom. There will be electric, and soon to say there will be ethanol, which is backed heavily by the government. We are already seeing this in three-wheelers. For example, our three-wheeler dealership, if you walk into, today sells you a three-wheeler which is based on LPG, CNG, diesel, petrol, electric, and a sixth one, ethanol, is in the offing. So we don't think that it will be the victory of one fuel system over the other, but it is good to have a vibrant sort of arena over there, which helps build demand.
Mr. Sharma, just staying with the EV theme, if you can help us understand what has been the revenue contribution of the EV two-wheeler segment so far, and what are your expectations for growth in the next couple of years? And please correct me if I'm wrong, but what we understand is that there has been an increase in battery and component charges, or cost rather. So in cost, raw material, sort of cost inflation. How much margin pressure are you seeing in the EV segment, and how are you looking to negate that?
First of all, we are not seeing cost inflation on the battery and cell side, the kind of the point which you are making. Quite to the contrary, through sourcing and supply chain development, product development, we are actually seeing better margins in our EV segment as we go forth. So that's slightly different. The EV two-wheelers has been growing at about 36%, between 30 and 40%. And I think there is enough now interest and traction, and there's enough sort of enough customers out there to maintain that kind of a growth of about 30% going forward. So that's what we are sort of going to be basing our own plans on.
It was actually a brokerage report that pointed out the cost inflation on the battery side, but good to hear that the industry is not facing that.
I didn't say about the industry. I said
that's what I said.
I can't say about the industry,
an aberration,
but I can say
so that's a
not.
good thing. Good to know.
Yeah.
Just one last one on the EV segment. What is the timeline for achieving break-even here?
Sorry?
When would you achieve break-even in the EV segment? I mean, I guess
we are already breaking even in our EV portfolio.
Okay.
Our EV portfolio today constitutes, in revenue terms, I think over 25% of Bajaj Auto. In fact, our green portfolio, as we call it, which is EV and CNG put together, constitutes over 45% of our domestic revenue.
All right. Great speaking with you, Mr. Sharma, and thank you so much for all your time and taking all of our questions. We hope to chat with you again soon. Rakesh Sharma, Executive Director of Bajaj Auto stock up in the green. But a quick check on markets before we get to our next conversation that we are looking at today. And you have seen a bit of recovery. Nice to see a spot of green on the Nifty as well. Adani stocks in focus actually. Your big gainers over there. Adani Green has hit the 10% circuit for a second session in a row. So that's where you're seeing some action. Life insurance companies in focus as well. And HUL has, I just want to pull up the HUL stock because I thought this was interesting. On their capital market day, they have said they are focusing on premiumizations. They have said that margins will moderate due to a favorable mix and turnover leverage. Volume growth of 100 basis points is what they're looking at. The HUL stock also in the positive.
Yep, and one of the big things to focus on. By the way, the new listing, or the new kid on the block, will list in about 9 minutes from now, listing at a significant premium to its IPO price. No surprise out there. But the point being, is the Indian consumer seeing some of this optimism in the markets? And is it translating into sales in a very busy wedding season as well as an upcoming holiday season? Akash Agarwal, whole-time director at V2 Retail, with us on the show. Akash, good having you. Thanks so much for taking the time out and joining us. How do you characterize sales, not just for the festive month of October, but even post that? Has the traction stayed on, or has it been, is it difficult to call that?
Yeah, hi, thanks for having me. So in quarter two, we grew by almost 64%, and we were expecting a very strong festival quarter because of festive and winter demand. And October, in fact, was the best quarter in the history of the company for us, both in terms of sales and in terms of per square feet sales. So we have seen very good demand, and it was actually better than expected. We saw a high double-digit SSSG, and it has been continuing into November because of now winter's here and the temperatures are dropping. So and because of weddings, so we've seen a lot of uptake in the occasion wear sales as well. So yes, I would say the festive demand overall has been very, very positive.
Just to lay it out, you mentioned that there was a strong number in the month of October, and that is continued in the month of November. So October festive demand was very strong. That's continued thus far, and therefore places you almost a high probability of having a very strong quarter three as well.
Yes. So we expect to grow by at least 40 to 50% in revenues, and also establish a double-digit SSSG in quarter three as well as in the coming quarters.
So consumer sentiment is strong. It's not taking a dip. Or Akash, would you attribute this to the pockets that you are present in and the goods that you are selling? I'm trying to see if this extrapolates into other categories and other formats as well, or is this specific to a North India retailer wherein because the weather is also now turning cold, then apparel sales of that kind also sells? How would you characterize it?
So we have seen growth across all regions and across all categories. But I would say this is more pertinent to value fashion because, customers are getting more value conscious. And when they see more value being given by, other fashion retailers, maybe there's a movement happening from an upper tier to a lower tier. That is why we are seeing this kind of demand. But when you see the reports of different FMCG companies and car companies, yes, they show a certain, rural and urban slowdown. But, gladly, we haven't seen any of that sort in our business. But I think it's also because of the value proposition that we offer to them. And, being a fashion retailer with only a 55% markup, that plays into our strengths.
Akash, hi, it's also Samina joining in. I want to talk to you about your current store network and what you're building out as well on the e-commerce space. With the upcoming e-commerce launch, what revenue contribution are you anticipating from this vertical? What we want to gauge is, given the nature or the type of customers that you attract, would e-commerce be a good play, and how would the cost-benefit analysis work there, and where do you see that sort of contributing in the next couple of years?
So we have changed our e-commerce approach. Instead of having a centrally distributed e-commerce, what we are focusing on is omni-channel, where we will leverage the existing inventory at our stores so that significantly reduces the logistics and return costs. So we are just providing e-commerce as an additional channel to our existing customer base. So we have an existing customer base of more than 2 crore customers. So we don't expect e-commerce to be a very significant contribution to revenue. It should be around to start with 1 or 2%, and moving ahead in couple of years, it should move up to 3 to 5%.
Akash, I just want to talk about inventories and the full price sales. Full price sales have accounted for 91% of your total sales in the first half of FY25. How are you managing inventory to maintain this sort of a number that you're pulling out? Any challenges that you're foreseeing, or your costs have gone up as we go into the second half, taking a cue from what you saw in the first half?
So the 91% full price sales is a testament to the efficiency of the merchandising department. So the kind of forecast that we do, the kind of data analytics that we do, and we leverage that data in, planning our next assortment season. So in terms of colors, in terms of fits, in terms of fabrics, so that has really helped us increase the full price sale from almost 80% to 91, 92%. And going forward, our target is to have it more than 90. So that gives us an edge in terms of we are passing on maximum benefit to the consumer, and we believe in true pricing instead of hiking the price up first and then putting on discount.
Your prices have been gradually moving up, right, from what I understand?
So we have changed the product mix. We have reduced the space allocation that we give to general merchandise, and we have increased the space of apparel, which is our strength. That is why there has been an ASP increase. We also removed a lot of entry price points where we couldn't give a certain standard of quality. So we have removed all the substandard quality products in terms of fabric from our stores. So that has slightly also increased the ASPs.
Just one quick last question from my end. Revenue per square foot has increased, and I believe you put out a target of 1,200 rupees per square foot going ahead. When can we expect you to achieve that? And also on operating margins, slight dip is what we saw. You want to give me a sense of what the outlook on margins is going ahead? Because I'm guessing this is more of a revenue business as opposed to focusing on profitability or bottom line.
Yes. So about 2 years back, the revenue per store per month was about 68 lakhs. In 2 years, this year we'll achieve more than 1 crore per store per month. And we plan to reach 1.2 crores. That is about 1,200 rupees per square feet per month in 18 to 24 months. So even if we grow at a 9 to 10% SSSG for the next 2 years, we will reach that number. And in terms of operating margins, so we always talk about pre-Ind AS EBITDA margins. So in pre-Ind AS EBITDA margins, last year it was around 6%. This year, again, we are targeting 6 to 7%. But as we move towards that 1,200 number, the EBITDA margin pre-Ind AS should move to 9 to 10%.
Okay. Well, Akash, congrats for the stupendous growth. Just 10 seconds. What is the year-end, what is the FY25 growth number? Sorry, very quickly, 20 seconds. Akash?
So we closed last year at 1,150 crores, and this year the target is 1,800 crores.
Wow. Okay. Well, wish you all the best for that and wish for that growth to continue, Akash. Keep up the good work. Thanks so much for talking to us today.
Thank you.
That's a very confident V2 retail of nearly a 50% growth target. And they've done that. They walked the talk thus far. Let's see if that continues. By the way, Samina, new listing and some stupendous numbers, very likely, if the discovered price is anything to go by.
It's an exciting one. 200 plus is what the listing price is expected at. Remember, this is a very interesting business. And also the good news is 93% of the equity still remains with the promoters of the company. And you can see those very happy, smiley faces as the company Enviro Infra Engineers list. Ooh, 224. This is even better than the most optimistic expectation number that was put out. The grey market premium was indicating to start in the range of 200 to 205, but very clearly they've got an even better response from the street. 54% on a day when the broader markets are looking very, very quiet. So the buying is coming in as we see it. When Neeraj discussed the fact that would one exit this for listing gains, probably unlikely. So it seems like it's a great story. And if you want to play the water and water waste management theme, this one is a rare find or a rare gem in that sense. Very well priced, valuations are attractive, order book is extremely healthy, financials are stable. There is nothing wrong from the look of it, Neeraj. Well diversified portfolio, and they've also got a reputation of delivering very large projects in stipulated timelines.
Yeah, clearly seem to have done some right things, and which is why it's showing in the way the stock is reacting. 56% on open. Let's see where it goes. Okay, we need to slip into a very quick break on that listing note. Come back and talk about the new FNO entrants and how are they doing, as well as have a conversation with a very special guest, Prateek Agarwal of Motilal Oswal AMC joins it.
It has risen substantially over the last 12 months. Among others, let's pull up the next set of stocks and see what else we have there. We also have names like PB Fintech, Nykaa for that matter. KPIT Technologies once again makes an entrant. Let's not forget Paytm as well, and Macrotech developers. GSW Energy is the other one, which re-enters the F&O space along with something like Prestige Estates and Tata Elxsi as well. Let's not forget Nykaa. That's the other one which is very, very interesting. And And perhaps we could take a look at the last set as well. Well, that would also include something like a Yes Bank or Varun Beverages, as well as something like Zomato, of course. So some very interesting names there with considerable market capitalization too, which means that their entry into some of your crucial indices too, well, it becomes a lot simpler for that. But that's going to be something that we're going to keep an eye on going forward.
There is excitement for a number of companies who get added to the NSE. So 45 new stocks or trading ideas that you will now have for the December series. But one block of companies that's pretty much been the biggest story for all this week is Adani stocks. 2 days of losses followed by 4 days of aggressive buying. In fact, the stocks are surging in trade as we see it. We believe there's more good news overnight for the group, and Agam is standing by with more details. Agam, if there was any more reason to buy into Adani stocks, I believe there are a few more.
Right, absolutely. So it's yet another day of trade where we're seeing significant gains for the Adani Group companies. And well, you know, we thought it was a good idea to actually gather up all the support that we have been seeing as far as Adani Group stocks are concerned when it comes to entities from across the globe. Now, right at the top, of course, we have Kerala government, and we start off with Home, where they have in fact gone ahead and signed a supplementary concession agreement, and this is to do with the Adani Virinium port, and this is the seaport. It's a very crucial seaport as well, and this is a positive because this actually paves way for earlier than expected revenue gains coming in for the group. Let's not forget the port is expected to be fully operational by 2028, which is just a few years down the line. Besides that, we've also had an update from former Andhra Pradesh CM Jagan Reddy, where he not only has refuted the allegations with respect to bribery and the state, but he has in fact also suggested that there could potentially be a lawsuit worth well 100 crores against all the media companies who had incorrectly reported on this particular matter. Well, moving on, we have Tanzania, an update coming in from there as well. They also maintain the support. Now, do remember that back in May of 2024, the Tanzania government had signed an agreement with the Adani Group to operate one of the terminals at the Dar es Salaam port. And well, Tanzania for now has said that there is no change in that agreement and they continue to issue support. The other entity which also continues to issue support is, of course, the Sri Lanka Port Authority, where the chairman himself has also suggested that they are not considering any cancellation whatsoever with respect to their respective agreements with the Adani Group as well. Moving on, besides that as well, you know, we do have several other factors and several other players also in favor of the Adani Group companies. And in the latest, of course, we also have Abu Dhabi's IHC, who has suggested that not only have they maintained their outlook on the company, but there will be no change in their investments either. So all in all, a lot of support from various entities across the globe for the Adani Group companies.
Thank you for that, Agam. Those are the Adani Group stocks that are bucking the trend. The participation is obvious, all those stocks trading sharply in positive territory. Well, we have with us Prateek Agrawal now, MD and CEO of Motilal Oswal Management Company, joining us with a quick sense of what's happening in the markets, where's the buying, whether there is the buying, and whether or not the much-awaited recovery is here to stay. Hi, Prateek. Good morning. Thank you very much, Mr. Agrawal, for talking to us this morning. I want to start with what we are currently seeing. I know structurally India is in a good place. We've had concerns. We've had concerns up until a few days ago where growth is slowing. Inflation is not going to be easing off. Earnings were largely disappointing. Foreign flows were turning out to be aggressive outflows. But as we look into the next couple of months of activity and earnings season, where is your bias? Are you a buyer in this market, or do you feel like a better price will come soon?
Okay, a lot of questions in one question, but we think you saw the worst in Q2.
Actually, I also.
Now look at what has been happening. Q1 was the period when you got general elections, and general election has its own dynamics. You know, obviously the code of conduct comes in, decision making are frozen for some time. Mind you, a lot of pre-election decision making happened. So Q4 had pretty strong ordering from the government. But Q1 was lackluster. Now, if you move into Q2, you got good rains. You know, when you have good rains, for example, it's cooler, you use less ACs, your bills are lower, electricity guy makes less money, and so on. So the coal guy who does open cast mining is able to do less work. People come to offices later. The productivity falls if the rains are very good. Now, quarter 3 is when you get the benefit of all of this. If we look at rains, if they've been good, well spread. So quarter 3 should see benefit of that. Now, government spending, you got just 26% fiscal deficit in the first half. It will get covered in the second half, which again gives you some sight of momentum from the government side. I think if you look at today's newspapers, they cover the fact that government wants to accelerate spending in spaces where it can be accelerated. So what you are going to see in quarter 3 and quarter 4 will be significantly better than what you saw in quarter 2, is what my sense is. Now, don't look at staples for feeling better. That's not the story. The tailwinds are in spaces where government policy push is strong. This is a period when capex is going to lead growth in the economy. So if you look at those spaces, it will be good. Look at luxury consumption, be it houses, ACs, etc. It will be good. But if you are going to look at, to my mind, food companies, staples kind of stuff, then mostly one should expect to be disappointed.
Good morning, Neeraj here. So, would you believe that Q3 shows a marked improvement over Q2? Obviously, it will. But in terms of commentary, will we see a normalized quarter 4? Because all 3 quarters, Q1, Q2, and Q3, by virtue of the fact that it kind of follows Q2, will not necessarily be normalized. So, will we see a normalized Q4, and will the market take heart from it?
So I would suggest ask every promoter who comes on your business to give you some sense of how the festival season went. Our sense is from people that we have connected with that listed and unlisted, the festival season has gone very well. The same thought that this is slow and that is slow, and it is pertaining to staples, food kind of stuff where competition is coming in, and you won't use more of talc, right? You won't use more of soap. You will not use more of toothpaste. So that is where disappointment.
Inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees
to Gaurang for the first question, and it has to do with do we have a caller, by the way? Okay, this is on WhatsApp. Haresh Thakkar is asking, and he's writing in from Mumbai. He's asking about Zee Entertainment, Gaurang, and we see the stock reaction in trade today. The stock is up 5% or thereabouts on account of this development that you saw last evening, where the shareholders have voted to disallow the continuation of the directorship for Mr. Puneet Goenka. How do you rate the latest development, and what should he do if he's bought at levels of 145?
Well, thank you, Alex, and morning to all of you all. So I think this stock has been more of a news-based driven stock rather than the fundamentals. And we all know the recent history with respect to the merger. Not going into all those because now that's been put to rest. I think this flip-flop as far as, the role of Mr. Puneet Goenka has been in the spotlight for the last about a fortnight or so, correct me if I'm wrong. And the stock has reacted accordingly. And as a disclosure, we do have coverage on Zee Entertainment. And I think like everybody, we are also eagerly expecting for more clarity to come through and getting the company back on the growth trajectory. Because these news flows will possibly drive the stock depending upon which way the news flow is coming, either positive or negative, Alex. And more importantly, let me say this, I think investing in Zee Entertainment would require a lot of patience and a long-term time horizon if the company has to bring back its past glory. As of now, we would recommend a hold for all those who have gotten at lower level. But let me say this, like I mentioned, it's going to be a patience game and a long drawn investment.
It's a hold and a patient game and a long drawn game is the view coming in for Zee Entertainment. We have our first caller for the day, who's Govind Raj from Chennai. Govind, hi and good morning and welcome to NDTV Profit. I believe your question is on Bank of Baroda.
Yeah. Hi, Alex and everyone. Good morning. Yeah, so I have an investment of 40,000 quantity in Bank of Baroda, and I've been holding it for past 5+ years, and I would like to know, will it ever cross 300 by 2025 April, and what is the fair value of this stock?
All right, what's the price at which you bought this stock?
79.80.
All right, so that's a very interesting quantity, first of all, and you've been holding it with a lot of patience. I'll go to my funder guest and ask him what's his view on Bank of Baroda. Gaurang, I'll come to you for this one. He's sitting on a, Govind is sitting on a significant amount of profit, and he...
Buy price, Ranjan wants to know, should he sell now or should he average his price? What's the view?
Well, I have a neutral view on the stock simply because the stock has corrected a bit and it's likely to show some reversal signs. The stock is nearing the 200 DMA and I feel the stock can do well. If 200 DMA is sustainable, we have some closing about 261. So I would recommend to hold your positions. Wait for the levels for the 271s to be taken out, and I feel further momentum can be expected about 284. So I would ask him to sort of hold his position and put a trailing stop loss near 240. Let's say if we have a dip below 240, he should book some losses.
All right, I do want to pull up Enviro Infra because this is a stellar listing. It's turning out to be a lot. Of course, it's off the high point of the day. It's up about 43% as we speak right now. Of course, it is the new kid on the block. It listed on Dalal Street today and very strong listing. Subscribed 61 times, so there was quite a lot of retail interest. We caught up with the management and started by asking them if the 100% growth that they saw in revenue, EBITDA and profit in FY24 is sustainable. Listen in.
The CAGR of the company was around 80% and the EBITDA margins were around 130%, and and CAGR on the PAT, it was around 132%. If we look at the performance of the company in the past, we are quite confident we will be able to maintain the same growth. Looking forward, the same number we will not be able to achieve, but the growth will be in the range of 30 to 35%.
Okay, so 30 to 35% is the growth that you'll plan to achieve for the next 1 to 2 years, as you said. And the margins, do we expect a further upside from these 23%, 24% levels, or will they also sustain in a similar range? Mr. Manish, and I'll come to you on this.
No, they will be sustained in the similar range. We are quite confident whatever we have done in the past, we will be able to maintain the same growth pattern.
Okay, now coming to the order book of the company, so 23 to 24% of margins along with 32 to 40% growth. Now coming to the orders of the company, you've had an order book of about 1,906 crore. This is across 22 projects that we are looking at. Want to understand what is the execution period generally like, and in the next half, how much do you plan to execute from this order book that you currently hold?
The order book of the company as on 30th of June 2024 was 1906 crores. One more project, which is a HAM project, that got added to the order book. The size of that project is 267 crore. The total execution cycle of the project is in the range of 18 to 24 months. So this entire order book, that should get replicated into revenues within 2 years cycle. Going by the past trend, the way the company has been executing the project on the back of the execution capabilities, So the timeline, within those 2-year timelines, we are quite hopeful that the growth momentum the company was doing in the past, we will maintain that growth momentum, and same is being replicated in the current financial year as well. For first quarter, the results are already there, and we are quite hopeful we'll continue to maintain that growth trajectory going forward.
Right, so that was the management of Enviro, and just for the viewers' context, we'll play the full interview during the day, and otherwise also this will be available on our YouTube channels as well. We'll take the next query. The next query is from Vandana, who's from Karnataka, and she wants to know which is the best stock amongst the Adani stocks to buy at this level, and it will have more than 20% uptake in the next 1 month. Kushal, I'll come to you for this one. Your view on the technical side of things for the Adani stocks, which one do you think will be the best pick according to you?
I think Adani Green Energy is one of the stocks that can be kept on radar, especially because, when you see the stock has almost risen 395% from the February lows. And against that, we've just seen a 60% correction. So I think that's a good sign where the savvy investors are continuing to hold their positions, which has limited the drawdowns as compared to other Adani stocks. Plus, the kind of recovery that we've seen throughout the week is quite, commendable. So I think this is considering the oversold conditions, high oversold conditions in Adani Green, I think the stock can do well from a short-term opportunity. So probably, yeah, this is the stock that, can be kept on radar and looks good for buy. So my initial targets on the stock is, close to 1420 levels and 1450 levels. Probably when these levels are sustainable, we can, hope for a further upside towards 1650.
Okay, thanks, Kushal, for that view. I believe we've got a caller that is logging in from Indore. Jeet, thanks so much for calling us. Do we have Jeet on the phone line? Let me confirm that. All right. Jeet, what is your question for us today?
Hello. Hello.
Hi, Jeet. Thanks so much for calling us.
Good morning. How are you?
Good morning. Very well. How can we help you today?
Thank you for asking. Well, I own about 300 shares of Ion Exchange.
Yes.
So my query is basically, is that particular stock, is it good for long term? Or should I just book my profits or my losses, whatever it is, in the future?
Okay. So you bought at levels of 648. Can you tell me when you bought?
I bought it actually a month ago.
Okay. And what was the intention that you had? Did you buy based on the price action, or did you see something in the fundamentals of the stock?
Well, basically, the reason why I bought it was because I see that was the only particular company which was in India itself that works in the water space. So that's the reason why I bought it, and nobody else does what they do. So I was wondering if it's for long term or short term.
Incidentally, the stock that just listed today is in the water treatment space, and it's doing particularly well. And there are a couple more I must point out. If I'm not mistaken, Vatek Wabag is also in the space. Jeet, so let me get you a fundamental view on this. Gaurang, there are a few companies that play in the water treatment space. Is this the best option available, Ion Exchange?
So the one where it got listed today, we had an IPO note from a long-term point of view on the subscription side. That's a disclosure from my side, Alex. Well, I won't be specific to help out Jit with respect to Ion Exchange, but this is also a very sound company in terms of water treatment, affluent treatment, etc., etc. But the other name that you mentioned, that is Vatek Wabag or Vatek Wabag, this has been a wealth creator, if you see, over the last maybe about a year or so, a little bit more than that, a year and a half. Stock was languishing at about 300 to 500 for a pretty long period of time. And then I think the opportunities that the management was talking about in terms of the order book execution, and more importantly, Alex, this company, Vatek Wabag, if I'm not mistaken, it is also into desalinization of water. And that's a huge opportunity as far as India is concerned and the rest of the world is concerned. Prudent to give a disclosure, we have a fundamental coverage on Vatek Wabag. And as we go forward, I think the government at the center and the government at various states will do a lot to conserve water and, of course, to create more resources in case if there is any deficit with respect to the monsoon season that we have. So this is a good company, Vatek Wabag, but I won't be able to be answering specific in buy, sell and hold with respect to the investment he has because we don't have coverage on that.
Sure. Oh, I forgot to give you the standard disclosure. We spoke about the Adani group of stocks just a short while back. NDTV Profit, as you know, is part of the NDTV group, and that is owned by the Adani group. That is a standard disclosure that we have to take every time we discuss the stocks.
Right. Our next query, Alex, is from Nimesh, who's from New Jersey, USA. He's holding 28 shares of TCS, and he's bought it at the levels of 3720. If we can pull up TCS and see what price it is trading at right now, it's trading at 4287. So he's sitting on good amounts of profits, and he's been holding it from a long-term perspective, and he wants to know in terms of he's saying that TCS is trading sideways. Please advise whether to sell and swap the funds to any other IT company. Gaurang, I'll stick with you for this one. Your view on TCS, because he's been holding it from a long term. Do you think that he should keep holding it, or he should switch to some other IT company?
Well, I would not advise him to switch to any other IT company because, as we all know, TCS is the flagship and frontline IT company. And over the last maybe about a year or so, especially over the last 2 or 3 quarters, the earnings momentum for the IT sector has only improved quarter on quarter. And our sense at Geojit is that this is going to be much better in the third and the fourth quarter in the coming financial year and even after that. So we have a disclosure coverage fundamental side, buy side on TCS with target of somewhere close to about 4,600. And I would very humbly disagree with Nimish that the stock has not done anything. I think if you look at the stock for the last 6 months, 1 year, year and a half, 2 years, this has been one of the performing stocks along with other frontline IT stocks as well as mid-cap and small-cap IT. And we have almost about maybe more than half a dozen companies on the fundamental side coverage long-term in the IT universe. But I would say that this is a large cap name, and on the number side, it has done quite well.
All right, and of course, IT just seeing a little bit of profit taking yesterday, but the index as a whole has done particularly well in the month of November. I'm coming to you, Kushal, in the next one, which is a short-term view on Canara Bank, which is a question coming from Jalandhar. Anil is writing in. He points out that he's a senior citizen at 74. Sir, thanks so much for taking the time and for viewing Ask Profit. Hopefully, the direction on this show is helping you out. He's bought it.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
Welcome back to Ask Profit. For viewers who are just tuning in, you can ask all your stock related queries, whether they're fundamental or technical, on the number that is flashing on your screen. You can call us on the number that is flashing right now, and you can also WhatsApp us to the number that will flash immediately on the screen. There you go. The next question is from Lavish, who's from Indore. His query is for Gaurang, you especially. He's bought TD Power 500 shares at 455 a piece. He wants to have a view on the stock, whether he should keep holding it or not. Gaurang?
Yeah, so on TD Power, we used to cover this particular stock. Currently, we don't have a coverage. That's a disclosure on my side. But I think one needs to be very thoughtful about investing into power transmission and distribution and equipment related sectors. So our sense is that this is a very strong company in terms of balance sheet. And with the capacities that India is going to come up in terms of new power generation, power transmission and power equipment related companies are going to do extremely well.
Chandan is joining us from Karnataka, and he's got an interesting stock that he's bought in IPO, and that's KRN Heat. Chandan, thanks so much for calling us, and good morning to you. What was the thinking when you subscribed to the IPO?
I was investing from long term.
Okay, and so when you read about the company, what stood out to you?
It was good. It was one of the only company in heat exchanger. No? So I applied it and I got an IPO.
Excellent. And you've been rewarded for that thinking as well, Chandan. So what do you want to know? You want to know whether to hold on or to sell, right?
Whether to hold for 1,000 or book profit at CMP.
Okay. And what is the quantum of shares that you got?
65 shares only.
65 shares. Okay, so Gaurang, on the fundamentals, Chandan has got allocation in the IPO, and it's done particularly well in that time frame. The question is, should he add more, should he hold at the current price or sell? It's an interesting company, wouldn't you agree?
Well, it's one of the best players, Alex, in terms of the heat exchanger market, an emerging player. The floor was at about 209 to 220. This was in the month of September 24. We had an IPO note on the subscribed side from a long-term point of view. This company basically manufactures core components which actually go into air conditioning and refrigeration, aluminum and copper fins, and along with that, other condenser coils, etc., is what the fluid and steam coils, etc., they manufacture. They've got some niche and marquee names as clients like Daikin, Schneider, Blue Star, etc. And the overall global market for heat exchangers is right now growing at the space of 6.4%, which is likely to pick up speed as we go into the future. So hold on from a long-term point of view.
All right, the next question is from Ajit, who's from Bhopal. He wants to add 200 shares of Tilak Nagar in his portfolio for the, okay, so he wants to add 200 shares and he wants to know if this is the correct level to add Tilak Nagar or not. Kushal, I'll come to you for this one. Do you think the charts look attractive for Tilak Nagar right now?
Well, they do, but like you said, the stock is quite extended. The stock has almost moved up 61% from October lows. So I would recommend to, hold on for a bit, let the stock correct a bit, let some mean reversion happen. That's when you enter.
Levels that you would suggest to enter?
It should be around 380 to 370 odds.
Okay.
Okay, I believe we've got so Kantesh Reddy, who's calling us from Karnataka, and it's an interesting stock. Gaurang, I think this one's going to be for you. MRF, he's got one second. What is your holding? I'm maybe reading this wrong. You've got one share or what?
Yes, sir. One share, sir. Good morning, sir.
Good morning, Kantesh. Thanks so much for calling. What was the thinking when you bought MRF?
Sir, I am a first-time buyer in stock market, sir. Since 1 year I am invested, sir.
Okay.
1,18,600 rupees I have invested, sir. I take personal loan and invested for MRF, sir.
You took a personal loan to invest in a stock, Kantesh? Is that right?
Yes, sir. Yes, sir. Right, sir. Right.
Okay, but why did you take a personal loan, Kantesh?
Sir, I am very interested in do stock market. That's why I have taken loan and invested, sir, in the stock market, sir.
Okay. Can you?
1,50,000 I taken, sir, and I buy one MRF share and some of my sovereign gold bonds, 5-6 sovereign bonds I have buy, sir.
Okay. Kantesh, did you get some advice to take a personal loan on the basis of which you bought the share?
No, sir. No advice, sir. But my own thinking, sir. Only personal loan is 11%, sir. I have long time version also. That's why I have taken personal loan and stock market will give good return. That's why I have.
Okay, that's a good thinking. Let me just but clarify that. Okay, Kantesh, that was a thinking that you had. How old are you, Kantesh?
Sir, only 28 years, sir. I am working in professional as a banker, sir.
Mm-hmm. Okay.
Okay, sir. I have some mutual funds of 3 lakhs rupees and different portfolios.
Okay. So when you bought MRF on the loan that you've taken, what was the thinking in terms of how long you will hold it?
Sir, I am owned for nearly 20 years, sir, 30 years, sir.
Oh, you're willing to? Then why did you take a personal loan, Kantesh?
Sir, my salary is very low, sir. That's why I had taken the loan and invested, sir.
Okay, so Kantesh, the idea to buy the stock is a great idea, but the idea to take a loan to buy a stock is a very bad idea. So you should never do that, and if possible, I'm sure that Gaurang will agree with me, you must not do that, and he will give you advice, of course, on the stock that you're holding, which is one unit or one stock, one share of MRF. Gaurang, would you agree that he should ideally close out this personal loan as soon as possible and use his regular income to purchase stocks that are available to him that don't have such a high ticket price?
Alex, you need to give me 30 seconds or more to answer this because your PCR was telling me to be as short as possible and as brief as possible.
No, please, for this okay. I will make an exception.
Kantesh Reddy, my friend, you are brewing a perfect disaster, lethal recipe in terms of what you're doing. You are saying you're a banker. By the virtue being a banker, I think you should possibly be aware about what are the do's and don'ts when it comes to the financial discipline and investing into stock market. You are 28 years of age. You've taken a loan of 150,000 rupees and you bought one share of MRF at about 118,000 rupees. My friend, don't put borrowed money into the stock market. You know, that's the basic principle. You should put whatever you have, whatever you can afford, and invest that into the stock market. There is no guarantee, there is no warranty of any kind of surety as far as market returns are concerned. It can go negative, it can go positive. You are willing to wait for 15, 20 years. You should have saved, if you are at 28, you should have saved from 20 if you like the stock market, and whatever you saved, you would have put it into the stock market. That way you would not burn the midnight oil and not be able to have sleepless nights at home. By the time you possibly look that kind of horizon, how much interest you will be paying? Have you calculated that, my friend Kantesh Reddy? Please have this clarity in your mind. Though the company that you invested in, MRF, it's a very strong company. We used to cover this company, Alex, when it was at about 15 or 20,000 rupees. Then it had reached our target price and we've dropped the coverage. But this is a lethal combination what Mr. Kantesh Reddy is doing. I think you should never borrow money and put into stock.
I was stunned enough to say that this is good thinking. I did not mean it that way. Please remember, do not take loans to invest in the stock market or to trade for that matter. It's a recipe for disaster, as Gaurang has just pointed out. Kantesh, of course, what you're holding is a strong company, as Gaurang has pointed out, but the likelihood of you getting over and above what you have to pay on interest over the long term. Remember that the Nifty 50 over the course of the last several years has only given you 14% per year. And that's a reasonable return to have. But think about it, if you've taken a loan at 11%, your take home is barely anything. So why would you do that? Anyway, let's move on to the next question, and we've got several that have come through. Apologies, we had to take some time to address this. Viewers, I'm sure that you will understand the reason why we have spent this time. Asian Paints is the next counter we're talking about, and Datta is writing in from Singapore, and he's holding 70 shares, which he's bought at levels of 2,000, and he's wondering what the future of the stock is. And quite a bit has been said about the fundamentals. So, Gaurang, a quick view on Asian Paints, would you hold on?
Well, we're maintaining a hold despite of the disaster numbers in the Q2 as well as the huge competition that the company is facing. It's a niche and market name, not only present in India, has got operations in the overseas market. 3,000 plus is the target on a long-term point of view on Asian Paints, Alex.
Let's go to the next one.
All right, the next question is from Kishore, and his question is on Sterling and Wilson Solar. He's holding 4 shares at 548 a piece, and he wants to know whether he should keep holding it or sell for the next 1 year. Kushal, I'll come to you for this one. Do you have a view on this particular counter? How does it look on charts?
Well, my view is a bit bearish. I would want to wait for 528 levels to taken out. Until then, I feel certain bearish implications may persist. So my view is just hold on for the stock price to close above 530. And if you're holding, I would recommend a trailing stop loss of 466.
All right, we've got a next caller, Nagraju, who's writing in from, who's calling us from Karnataka. I'm getting my mediums mixed up. Nagraju, thanks so much for calling us. You've got TCI Express, right? What was the thinking when you bought, and what is the time frame that you had in mind?
Sir, there is a short-term trade.
Okay.
But about 3 months back, the market was bullish.
Yes.
This is a logistic company.
Yes.
I think it is in a bullish and the market was uptrending. So I thought it will appreciate. But initially it was appreciating 1 or 2%.
Yes.
And I purchased at the price of 1, 2, 3, 4. Later on, is it slowly coming down? Now it is almost 20-30% down.
Yes.
Now what I should do, whether it is, shall I hold? Or shall I hold for another 6 to 1 year?
Okay.
Or shall I book loss now?
Okay. Nagraju, since this was a trading idea, what is the time frame that you initially had?
About short term, that is only positional trading for a swing trading purpose I did it.
Sure. Okay, understood. Kushal, I'm going to come to you on this one. If you bought at elevated levels, and there are going to be quite a few names in the broader markets that have seen this kind of a move, but here's where the importance of a stop loss comes through. What would you suggest that he do with this right now? If you bought at levels of 1,234, the stock is trading just above 800. What would you do with TCI Express?
Since the stock is a falling knife and it's too risky to catch a falling knife, I would recommend to keep a very tight stop loss near 790. And if the stock is plummeting below 790, it's best to book your losses.
All right, the next query is from Amit Pandey, who's from Bangalore. Now, he's purchased 217 shares of Tips Music at an average price of 709 over the last 8 months, starting from March 2024. And he wants to know if he can add more or sell full or partial of its existing portfolio from a medium-term horizon. Kushal, let's stick with you for this one. Do you think the charts look attractive for this counter, or should he sell?
Well, the charts are very attractive and the primary trend is quite positive. So I would recommend to hold your investments, put a trailing stop loss near 839, 835. And I feel there's a good potential upside for another 12 to 15% on the short term.
Do you have the message in front of you? Is this Tips Industries or?
No, Tips Music.
Tips Music.
Yes.
I hope this. Yeah. Okay. Cool. All right. So we got that right. Tata Technologies is the name of the counter, and Manu is asking this question. He's bought at levels of 1,172. Let's pull up the chart. So he has lost a little bit of ground, but he's got a 2 or 3 year time horizon. And Gaurang, from that perspective, would you accumulate at these levels?
So Alex, the floor was I think 585 to 600 for Tata Tech IPO. We had given a subscriber recommendation on Tata Tech IPO from a long-term point of view. Well, despite the fact that he's gotten at higher levels, he has 2-3 years kind of time horizon. So I'll make that IPO report on the subscribe side as a base and give an advice that hold on to it. And possibly if you have investable amount, that I think current levels somewhere close to about 930, 940 are decent levels to even average a little bit more.
All right, then we have the next caller from Doha, Qatar. Sumit is joining in. Sumit, welcome to NDTV Profit. How can we help you?
Good morning, ma'am. Ma'am, first of all, I just want to thank you that ND Profit by sharing your research and information, and it helps us to create a portfolio. I do not have any pharma stock in my portfolio, and I just want to add one pharma stock of large cap for the next 3 or 4 years. Which one should I add?
All right, so I think your query is pretty clear to us. Gaurang, I'll come to you for this one. What is your topic in the pharma stocks?
Well, I think Sumit has identified a good sector, and within the pharma universe, we are extremely excited about the CDMO segment companies, that is contract manufacturing and kind of companies, which is a huge market, not only in India but also in the overseas market. So if I have to identify one particular, though there are almost again over here more than half a dozen companies that we cover, but I think Cipla would be a perfect investment idea because it has a combination of both local as well as global markets, and it is also operating in the CDMO space.
Okay. I believe we've got Ramakrishna on the phone line. Ramakrishna, hold on. We're going to take a couple of questions from WhatsApp and then come to you on your question. So do have a little patience with us. Realtel is the name of the counter that we're talking about next. And this is a question from Sri. He's writing in from Toronto. So we've got international on this. We got a caller from Doha and now Toronto question. He's a long-term investor holding at a price of 532. So he's got a 3 to 5 year time frame, but he's looking at the numbers and he's looking at the performance on the charts, and he's not too happy with how it's gone. The stock has given up a little bit of ground. He's bought at 532. Stock is just above 400. Kushal, on the charts, what's the strategy that you would employ right now?
For Realtel, right?
Yes.
Well, my view on Realtel is it's turning a bit positive. I feel 415 is an immediate resistance level. Once the resistance level is surpassed on a closing basis, I'm expecting a target of 456.
Okay.
All right. I think we have our next caller. We have Ramakrishna from Bengaluru who is joining in. Ramakrishna, welcome to NDTV Profit and a very good morning. How can we help you?
Hi, thank you. Thank you for allowing me to ask a question. I have 2 lakhs of investment on Tata Consumer, around 155 shares. At a price of 957.
Okay.
At a price of 1025. Now it is at 957. My long-term view is 3 years, so I would like to know if I can continue.
All right. I just want to know with what perspective have you bought Tata Consumer? What were the rationale?
The simple reason is I have been using some LIC, and I see that a lot of LIC are having those share in their portfolios, so I thought it is a very good bet.
Okay. Gaurang, I'll come to you for this one. Do you think that Tata Consumer is a stock from the FMCG space that he should keep holding?
I definitely think so. I think Mr. Ramakrishnan has identified a strong company from the Tata Group, Tata Consumers. It has got power brands like Tata Sampann. It has already ventured into organic food products as well and has launched a couple of products over there and many more to get launched. Unfortunately, the second quarter for FMCG pack was a little bit below the weather, and hence we saw the correction. 1225 is the target as of now from a long-term point of view. A disclosure, if the earnings improve, we will scale the target upwards.
We've got a next caller, Vishwanath Reddy, who's calling in from Andhra Pradesh. He's got GAIL at a price of 41. Vishwanath, what was the thinking when you bought? How long do you want to hold it for? Morning. Vishwanath, hi, can you hear me? Okay, I think we've lost him. Do we have another caller? I think we might have another caller. We have Vinay on the phone line. Vinay, I believe you're calling in from Hyderabad. What do you want to know about?
So I have two stocks with me. One is Zydus Life with a shares of 435 with a price of 975. And Tata Motors price of 1049 with 415 shares.
Okay.
Can I do the average? I'm just looking for a long-term horizon of 1 to 2 years.
Okay. Let me take your question on Tata Motors, because I know that we've got Gaurang, who's got a very specific view on Tata Motors, and he's been a long-term bull on the counter. Gaurang, it's given up a little bit of ground in the recent past because of the various factors that are playing out globally. Would you say that it's a good level to accumulate?
Well, I think from 1150, 1200 plus levels, correct me if I'm wrong, Alice, this is corrected to sub 800, 750, found a base, and then it's kind of recovered its lost ground. We're maintaining a target of 1100 on Tata Motors. I think things are going to change around as we go forward into the launches and, of course, the domestication of GLRs in its plant in Gujarat, Sanand. We maintain a positive view with 1100 targets on Tata Motors.
Okay. It is now just about winding up time for this program, and we're going to have to shut the phone lines, but it's time to hit the rapid fire segment, and this is where we throw as many questions, gentlemen, at you over the course of 2 minutes, and do try and answer as many as you possibly can. The first one I'm throwing your way is Ambuja Cements, and this one's for you, Kushal, on the charts. If you've got a time horizon of 6 months, Jaya wants to know whether you should buy at this current juncture.
No, I would definitely recommend to avoid buying the stock until unless the 603 levels are crossed, because that is supposed to act as very heavy resistance. So yeah, I believe once those levels are taken out, I think then it'll be an ideal buy. Till then, you should avoid the stock.
Alright, the next question is from Sonal. She's from UAE and she wants to have a view on Raymond Lifestyle. She's bought it at 2,400 rupees. Gaurang, your view on Raymond Lifestyle?
Well, on Raymond's, we have a coverage from a long-term point of view, and my sense is that the opportunity is going to open up positivity in terms of numbers.
Okay. Coming back to you, if you've got a view on PG Invit, Power Grid Invit, if you've got a purchase price of 99, you're planning to hold for the next 10 to 15 years, it's still a good idea. Ajay wants to know, Gaurang.
Well, so we're positive on Power Grid as such, Alex. I don't know how much it will reflect upon the InvITs, but the entire transmission and distribution sector looks quite good.
Okay, Bala Murugan from Chennai is asking whether this is the right time to enter Reliance stock or not. Kushal, your view on this?
Well, if it's a risk taker, I would definitely advise to start entering Reliance, because it's quite at a crucial demand zone. So I think the risk reward is quite favoring. So probably it's a good buy. Keeping a strict stop loss in mind, which should be around 1200 levels.
Okay. Prashant wants to know about the defense space, and quite a few of these stocks have been buzzing in the recent past. Kushal, on the charts, does anything look attractive from the period of 6 to 12 months?
Well, I'm positive on BEL and Mascot from the space. I feel they're forming a nice basing pattern and they're attempting to bottom out. So yeah, those are my two picks for a potential 12 to 15% on the upside.
Alright, one last quick question to you, Gaurang. Ajit is holding 100 shares of Avalon Tech. Should he keep holding it?
I'll give it a pass. We don't have coverage. I'm sorry.
Alright, then just one last view on BEL, since he mentioned, Kaushal, your view on BEL?
He's positive.
Kushal already gave his view. So Gaurang, I'm asking you.
Well, 335 is a target, and I think it's one of the best placed stocks in the defense PSU category.
Okay. Gaurang, Kushal, thanks so much for taking the time. Pleasure speaking with you as always, and happy Friday and happy weekend to you. Viewers, we're completely out of time on this edition of Ask Profit. We've tried to help a lot of you over the course of the last 1 hour. Thank you so much for your patience, and hopefully this helped you. From Mahima and myself and the team that put this show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
One who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Hello and welcome. You're watching the Small and Mid Cap Show. I am Agam Akil, and in this show we take you through, conversations with managements on their outlook going forward. But before we bring in our first conversation around Gulf oil, I'm going to take a very quick look at the markets and how they're faring. So a trend of sorts. Today as well, we have substantial gains in the Adani Group companies, with the Nifty 50 itself advanced by around 1%. So we do have a little bit of recovery playing out after yesterday's day of trade. But we all know that to a certain extent, a lot of the weakness yesterday was attributed to expiration and the volatility induced by that. Today we have Reliance Industries, Bharti Airtel and L&T along with ICICI Bank providing the bulk of gains as far as the up move is concerned on the Nifty 50. And of course, even in terms of the broader markets, it is going to be another day of trade where we have seen advances. The mid cap and the small cap indices specifically, so the mid cap index up around, marginally higher. And let's bring up the small cap index as well and see what's it's doing. That's also advancing, but it does seem like there's outperformance for the Nifty 50 in today's day of trade, along with the Sensex. Today, of course, is also the Sensex weekly options expiry, so we should be keeping that in mind as well. But this is as far as markets are concerned. Let's get on with our management conversations. And right at the top, we have with us Manish Gangwal. He's the Chief Financial Officer of at Gulf Oil Lubricants India, who joins us on the show. Manish, good afternoon, and thank you so much for joining in. I want to start by asking about the company making significant acquisitions in the EV-related businesses, and I want your view and your way forward as to how things could potentially pan out for the business is in this area specifically.
Yeah, good morning. Thanks for having me on your show. Basically, as a lubricant company, we are primarily a lubricant company, and we have been, servicing our entire range of automotive and industrial lubricants for last many decades in India. But as EVs started becoming sort of talk of the town, and more people will be looking at EV as an option going forward. While we believe that lubricants market is going to continue to grow in India for many decades still, but we as a company, wanted to look into the EV value chain and where we can play as our role in the EV value chain. And what we figured out was that we have a very strong brand which is known to the automotive consumers. Today they may be an ICE vehicle consumer, tomorrow they may be an EV consumers or EV buyers. how to remain relevant to those consumers, those buyers. At the same time, we have a very strong connect with OEMs who are doing currently, let's say, ICE vehicles, and tomorrow they may venture into some sort of EV models they may bring out. So how to use those strengths and our distribution network. With that thought process, we started looking at the sector, and what we came through was that manufacturing of chargers is a good opportunity. And as the EVs grow, there will be a requirement of more and more chargers for EVs. And that's where we started acquiring companies. We acquired a company called Indra Technology in UK, and their expertise is slow chargers, slow AC home chargers for cars. And then we acquired another company in called Tyrex Transmission, based out of Ahmedabad. They are having DC fast charger products. So we have now complete end-to-end charger solutions for any of our consumers, buyers, customers, OEMs. So right from AC chargers to fast DC chargers, we have a complete range.
Right. Manish, at least as far as Tyrex is concerned, we understand that you had strong revenue growth in the second quarter. Even your other acquisition, taken together, can you give us an idea about kind of contribution that these companies can bring forward to your consolidated numbers, if not for the next 6 months, for perhaps the next 18 months?
See, our objective in Tyrex, particularly where we have 51% stake, and they are fast growing. When we acquired this company in October 23, their last reported FY23 turnover was 12 crore rupees. So on a very small base, then we doubled it in FY24 to nearly 25 crore rupees. And as you rightly mentioned, in H1 itself, Tyrex has delivered 25 crore so growing at nearly 300% over H1 last year. So this company, overall, the demand is very good. And we believe that the company can at least double the turnover every year for the next 3, 4, 5 years. And should be easily doable, which means that we are aiming at roughly 500 crore rupees at least turnover in next 3 to 4 years from this acquisition.
And when it comes to profitability for both these companies, Manish, what's the way forward? When can we expect them to be in the black?
So currently, they are EBITDA neutral at this stage. What we are also doing is that the company is investing into R&D. Company is investing into a lot of service network required for servicing those chargers and installations and all those capacities, plus strengthening the manpower. We are expanding the capacity of the plant now. So there is a lot of investment which will be there in these building the company into a very, very formidable company, a very strong player in the market. But we believe that once we reach a size and turnover scale, the company should be able to deliver at least 12 to 15% EBITDA margins, which is what the lubricant business is doing. So it will not be a margin dilutive business on the consolidated basis for the company.
Right. Well, moving on, let's talk about your core business. And at the moment, what can you tell us about growth expectations going forward? Keeping in mind how your first half of this financial year has been for you, what can we expect in the second half?
So we had a very good first half, I can say. Growing our revenues nearly around 8%, growing our EBITDA by 15% and PAT by 20% plus. So we had a very good H1. Typically, the lubricant season starts from October onwards. So H2 is usually better than H1, as that's the past trend suggests. So we are hoping for a good H2. Also, I would like to add that some of our segments like factory fill business, where commercial vehicle is our primary segment for factory fill, they have not been doing lifting that much from OEM perspective. As we know, commercial vehicle production has slightly gone down. So if we foresee that commercial vehicle will also be now lifting more and H2 will be better for them, that should also add up. So overall, we are looking for a good H2 and while delivering an excellent H1, I would say.
All right. What I also want to talk about specifically about AdBlue, and in this case, if you can give us an idea about the kind of traction that you're witnessing here, the kind of market share that this particular product has right now, and what can you tell us about the outlook here? So
AdBlue as a category, as you know, is mandatory now for all BS6 vehicles, diesel vehicles. and it's been rapidly expanding in terms of requirement. We have nearly made our volumes 6 times in last 2 years. So our FY22 volume was around 16,000 KL, and then we did 78,000 KL in FY23 and nearly 1,28,000 KL in FY24. So we have nearly grown more than 6 times in last 2 years. So that is a massive, I would say, expansion. But and obviously, as you mentioned, we have close to 25% market share here. But we believe that this category will continue to grow now. Double-digit 15-20% growth annually is what we are expecting in this category. This is a relatively, high volume, low margin business, but and in the end, it is need of the consumer, need of the customer, which is already buying our lubricant. So, and synergistic to our distribution. And that's why we have gone in ahead with the approach of delivering a value product and a very good quality product to our customers. We are quite hopeful that AdBlue will continue to grow at least 15% for the many, many years from now on.
Right, Manish, a question also on your overall operating margins. Now, we've seen some amount of volatility in your key inputs. And the question really is that, firstly, how much of that volatility in the key inputs comes in the ongoing quarter, or is there a delay? And based on that, what is your overall projection on your consolidated operating margins for this financial year?
So we have been guiding a band of 12 to 14% EBITDA margin. And we are quite hopeful that we have delivered it in H1. We are quite hopeful it will be, even slightly even better than H1 in H2. Also, we have seen that crude has sort of stabilized around $72, $73, below $75. And if that remains, typically the lag effect of that is on the base oil with 1 to 2 months of time lag. And we believe so far, we have not seen any major impact on base oil, but we are quite hopeful by Q4. If there is some improvement in base oil pricing and the market price competition scenario remains stable, we should see positivity in the margin. But we are sticking to our guidance of 12 to 14% margin band for H2 as well, while investing more in our A&P. As you must have seen, we have a mega campaign going on right now, which started in September, the Unstoppables, where all our 3 brand ambassadors, MS Dhoni, Hardik Pandya, and Smriti Mandhana, have come together for the first time. So it's a mega campaign, on ground, off ground, in movies. There is a lot of activity going on, so we are spending slightly more on A&P as well.
All right, and a final question then, Manish. Going forward, at least as far as your second half of this financial year is concerned, are you going to look to consolidate on your current product line? Or are there going to be newer introductions here as well in store?
We keep introducing new products. Right now, as a part of our Unlock 2.0 theme, which we unveiled sometimes in June, we are focusing internally on premiumization, which means the high margin products, synthetic products. More and more of those will be part of our portfolio and sales efforts, and that's where we see new products being launched quite regularly in requirement with the market needs.
All right, Manish, we leave it at that. Thank you so much for joining us and taking us through your views on, the company, of course, as well as the, outlook going forward. We wish you the best. That's the management of Gulf Oil telling us about what's in store, the plans on the anvil, and also, of course, we've discussed plenty in terms of this performance. The stock itself has as well as done reasonably well, because it's up as much as 58%, as you can see on your screen there, in the last 12 months. So certainly an outperformance, if I can call it that, even with respect to your key indices coming through. But with that, we shift focus to yet another company which has in fact also outperformed the key benchmarks, and that is NCC. This one has gone up by as much as 85% in the last 12 months. So certainly substantial gains coming in. A bulk of those gains, however, coming in the first half of these 12 months. And it maintains itself, notwithstanding the overall market volatility. Well, to take us through the outlook for this particular company, we are now in conversation with Neeraj Sharma. He is the head of strategy at NCC. Neeraj, good afternoon, and thanks for joining in. Neeraj, we I actually wanted to take stock of the second quarter right at the top of our conversation here. You suggested a guidance of around 15% growth. Post elections, have things changed for you, and do you think that this potentially could require some change here in terms of your top line expectation growth?
Very good morning, Agam. If you really look at the performance of our company in the H1, there is a revenue increase of about 13%, and flattish kind of parameters as far as the profitability of the company goes. That said, as you rightly said, we have guided for a revenue growth upwards of 15%, and as we speak, we continue to stick with the same number. If you really look at the performance, I mean, I'm just trying to extrapolate that a bit. If you really see the performance of the company in the last couple of years, the H2 traditionally has been better than H1. If we really try to sum that up in terms of a number, you will get to see about 20 to 25% growth generally in the H2. So as we speak, we continue to stick with the same guidance that we have shared with the street, and hopefully hit those numbers.
Moving on, I also want an idea on the execution that you have in store for the second half. If I'm not mistaken, and please correct me if I'm wrong, your current order book stands at a little over 52,000 crores. How much of that is going to be, or rather be expected to be executed in the next 6 months? And if you could just give us an idea about on the further timelines on execution here.
Out of this, you are absolutely right. The order book that we have had, at the end of September was 52,370 crore. If we really talk about the next 6 months, about 12,000 crore, from this bucket should get executed in H2.
All right. And can you also tell us a little bit more about your latest order? This is the 3,400 crore order for Dhaudhan Dam under Ken Betwa Link project. The timelines under which this project is going to be executed, and if you could give us more details here as well.
Sure. Firstly, this is one of the first project that has been awarded for what we have been talking about for about a decade or so, that is interlinking of the rivers. What this scheme intends to really do is to, connect the water surplus areas with the water, in the areas where the water is a scarce commodity. So this project is a project that is expected to be executed in about 6 years' time. What the project intends to do is to really, draw the water from a water surplus area called, Ken Betwa, and bring that water to a, to what we call Bundelkhand region of UP, close to Jhansi. So that is an area in which the water continues to be a very, very scarce commodity, So this scheme intends to bring water to that part of UP. So this, and as I have shared with you, this project is required to be executed in about 6 years' time.
Okay. Well, also moving on in terms of the order flow, and from what I understand, the awarding activity increases in the second half, specifically in the fourth quarter of the financial year, usually. Is that the case, and is that how you're expecting the things play out as well? And based on that, what is your expectation of order inflow in the next 6 months?
Yes, you're absolutely right. Generally, the award picks up in Q4 and Q3. That said, I also take this opportunity to share with you the fact that you are already aware, that in the first quarter of this financial year, we have had, central government elections. So generally, the award, the pace of award has been, bit slow but things are picking up. To answer your question specifically, As we speak till today, we have bagged total orders worth 11,645 crore. I repeat, 11,645 crore, which is about 58% of the lower band. We have already shared one order inflow guidance with the street, which is 20,000 to 22,000 crore. If we really take into account all the awards that we have, all the projects that we have bagged till today, we have already achieved about 58% of our target. And we are quite hopeful to achieve the order inflow guidance that we have shared with the street.
All right. Also, question on your debt, and from what I understand, your net debt stands at around a little over 1,600 crores. I believe that you want to bring this down further to around the 500 mark. What are the timelines that you're working with here?
Maybe next 2 quarters, we should be able to bring this down close to 500 crore net number.
And also, when it comes to private sector contracts, can you tell us about what kind of exploration you're trying to figure out here? If you have, in fact, made any headway when it comes to private sector contracts, what's the way forward here?
See, primarily the infrastructure sector is a sector that is that continues to be dominated by the central government, their agency, the state government, and various arms of the state government. But we have been able to bag some private sector contracts as well. It would be close to 5-6% of the total order book that we have with us.
Okay, and also want to know a little bit more about the water division. Now, we've had several companies, in fact, talk about the focus on Jal Jeevan Mission. In fact, we've had more and more companies being listed from the same space. You, from what I understand, at least about 12 to 15% of your order book is based on this particular aspect, that is the water division. Just want to understand better if your mix could potentially change because of that. What kind of growth are you seeing in this particular category and the kind of traction that you're seeing in the sector?
As you rightly highlighted, we have about 12% of order book from this division, what we call, the water division. Other than Jal Jeevan Mission also, Jal Jeevan Mission is a flagship scheme of the government of India, and we understand a lot of households have already been provided potable water connection, but about I think 4 to 5 crore households still needs to get potable water connection. That said, other than Jal Jeevan Mission, also in the water space, we are of the view that we will get to see a lot of water supply projects, waste treatment plant, sewage treatment plant. So this is a space that is very interesting to us.
All right, Neeraj, we'll leave it at that. Thank you so much for joining us and taking us through the company's outlook as well as the business going forward. Thank you.
Thank you very much. Thanks.
But there you have it. That's the management of NCC telling us about all that is in store for the company. Of course, this is yet another company which has done very well over the course of the last 12 months, as you can see. And along with that, we are also looking at the markets largely holding on to the gains of around 0.7%. The Nifty 50 specifically, even though the banking index is marginally in the red. With that, it's a wrap on this edition of the Small and Mid Cap Show. Lots more lined up on the other side. Stay tuned to NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinarily.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome to NDTV Profit. You're watching Hot Money. I'm Hiral Dadia and with me is Mika Barve. Clearly, if you see from a market's perspective, let's pull up Nifty 50 on the screens and see what that is doing. In trade, there was pressure that was building up, but now 0.8% higher, nearly at the day's highest levels, is where we are. Let's pull up the Sensex as well as then Bank Nifty and the sectoral heat map. There is pressure on Bank Nifty today. We are seeing cuts of around 0.2% coming in there and gains of little over 600 points on the Sensex. In terms of overall sectors and the broader markets, mid-cap and small-cap index absolutely become key because there have been slightly divergent trends between what's happening between the benchmarks as well as the broader markets. Today, you're seeing the mid-cap index, which is down, whereas you have the small-cap 250, which is seeing mild gains of around 0.1%. And if you see in terms of sectors as well, pharma, the top gaining sector, in fact, everything that it lost last month, that is seeming to be coming back to the pharma sector in terms of buying opportunities from here on. Infras up, which are down and about. But moving on, let's look at what are the key themes for today. On number one, we have, will consumption see a recovery after a mixed second quarter? That's what we're going to speak to Karan Taurani. On number two, we will be joined by the management of Dhanuka Agri to discuss about the global rights that they have taken from Bayer's key fungicides to boost growth. That's number two. On number three, we will be talking about the cement companies, whether they will see a revival in the second half of FY25. And you have Goldman Sachs on credit access Grameen. That is the brokerage of the day. Moving to, will the two-wheelers continue the uptrend? In fact, the auto pack has been in focus over the last couple of trading sessions as well. So, Mika, lots to talk about.
There is. But, let's pick up the first key theme of the day, and that is consumption. Now, Elara Securities does expect India's consumption story to remain muted and a mixed bag in the third quarter. Now, this is because of several reasons. One is inventory pile-up in the fashion space, as fast fashion and premium segments are the only ones that are actually witnessing growth. Quick service restaurants are also seeing muted growth, and in-dine as more consumers are opting for food delivery. Retail stores are also closing down, and as a result of higher demand for quick commerce, meanwhile, footfalls in theatres are also decreasing, and the ad revenue is expected to remain muted at around 5 to 6%. So the key question is there actually recovery inside when there's such a mixed bag? And to talk about this with us today, we're joined by the Senior Vice President at Elara Capital, Karan Taurani. Karan, I'll start off with this question. Q2 was a mixed bag, but one of the key takeaways was, while urban consumption did see a slowdown, we did see pockets of recovery in rural. So how do you expect consumption in urban and rural areas to pan out in the second half of FY25?
Hi. So I think the consumption is going to be mixed across various categories. I think online business models have kind of had a negative impact on many traditional business models. Take the example of cinemas, wherein OTT is somewhere impacting cinema footfalls. take the example of QSR chains, wherein delivery is growing faster as compared to dine-in. If you take the example of the grocery stores, the modern trade, wherein quick commerce is kind of giving a tough fight to them as well. And obviously the fashion segment remains to be highly fragmented with so many players. Some are omni-channel, some are pure online players, D2C brands, everything put together. So I think there are concerns wherein online businesses are doing well. If you look at the advertising spends as well, traditional ad spends are quite muted. Digital ad spends are doing phenomenally well in terms of growth. So again, that's a similar traction here. So I think online is going to grow faster, whether it be retail, e-commerce, quick commerce, or any other segment for that matter, even delivery, food tech. That will grow in anywhere in the range of 15-25% in terms of where the category is, except for quick commerce, wherein the growth rate is about 60-65% because of a small penetration number. And I think traditional businesses will continue to grow at mid to low single digit kind of numbers, clearly because of the struggle that we have seen in terms of footfalls, in terms of customers adopting to traditional business model, traditional businesses doing.
Right. Karan, that's an interesting point that you make between traditional versus the modern, I wouldn't even call it modern trade, but the quick service space or quick commerce, I would put it that way. But let's break this down. When you talk about quick service restaurants as well, as your report states, again, a good same-store sales growth coming in terms of Wow Momos at around 8%. Now, the dine-in aspect is expected to remain muted. Delivery is growing, right? So if you have to look at the delivery part of it, let's say a Zomato, a Swiggy and a Zepto in the unlisted space, where is your preference between these two companies versus, say, if you have to just look at a listed restaurant space, where would your bets be?
So in terms of the QSR and the food industry, we are clearly seeing very differential growth rates, right? So if you look at the QSR chains, I think the growth rates therein has converged more in the range of 10 to 15%. And that's primarily because of two reasons. One is, certain categories like pizza are highly penetrated in terms of number of outlets. Beyond Domino's, we have, more than 12 to 14 competitors, which are, sizable in nature. Some of them are even franchise spaces. So a lot of competitive intensity has picked up, a lot of outlets have opened. We are somewhere in a situation wherein there is more supply than demand. So store growth is not going to be that aggressive in terms of number. Second thing is, of course, pizza is a delivery-friendly product. So because of high exposure to delivery, you will see pizza, reporting better SSG as compared to other categories in QSR. But if you look at the other categories of QSR, like for example, burger, fried chicken, I think there the pain in terms of SSG remains. Most of them would report maybe just a flattish SSG in a best case scenario or a small decline as well, despite this entire festive euphoria, the festive quarter wherein things have always been very strong. And a lot of these things are coming at the cost of discount. So discounting, promotions, these are things which have been, picking up since the last 1 year. And, margins of all these players have been coming down on a consistent basis to protect growth rates. But somewhere the growth rates are not able to kind of come as compared to expectations because of increased competitive intensity. So as far as traditional QSR is concerned, the food business, the growth rates will be more in the range of, low teens or, early double digit kind of numbers. Now, if you compare that in terms of a food tech segment, very clearly Zomato, Swiggy kind of platforms on their food delivery business, you could see a growth rate of anywhere between 20-25%. And obviously, even these growth rates have somewhere converged because food as a business segment has kind of penetrated, in terms of the metro markets, the non-metro markets, everything put together. The growth driver right now is coming more because of frequency. So, about 3 to 4 years back when the food tech business, just took off in a very big manner on a pan-India basis, you were seeing growth rates of even 35-40% in terms of the food revenue for aggregators like Zomato and Swiggy. That was primarily because of more user addition. I think user addition was, more than 18-20%, wherein penetration was happening. Users were getting added. There were a lot of customer acquisition costs, a lot of promotion, a lot of discounts being given. But now, as we see, the market is kind of matured. We have just two players. Discounts have kind of come off. Players are focusing on profitability. So now a bigger lever for growth is frequency, right? So clearly frequency is going to see strong growth because of loyalty programs on both Zomato and Swiggy. And that will drive, you can say 40 to 50% of the incremental growth that these companies are trying to target right now. So very clearly, I think still there is ample room that for the next 2 to 3 years, you will see that the online business side and the food business outperforms the traditional business side by anywhere between 1.4 to 1.5 times.
Let's move on to the grocery space. I mean, quick commerce has been hurting these chains. We've seen large retail stores shutting down stores. But so there has been a shift in the way consumers are actually buying their groceries. First the trust was, to actually go to the stores. Now they're preferring the quick commerce. So do you see the shift necessary for the old grocery chains? Do they have to make the shift? We had Flipkart that is started with its 10-minute grocery delivery thing. Even Big Basket making moves on that space. So is this key, the digital aspect in terms of transformation or transition?
So definitely, I think quick commerce is hurting growth prospects of both the Kirana stores, which is the pure play brick and mortar traditional business model for FMCG and staples, and it's also impacting modern trades so to a certain extent. But of course, the impact on Kirana is much more as compared to modern trade because Kirana stores are more for impulse buying. They operate at a larger base. So I think, more than 70% of your FMCG grocery sales are coming from Kirana outlets today. And the digital online e-commerce, quick commerce put together is not more than 10-12%. So on that base, you are seeing some bit of negative impact because the customer is able to get the product in terms of, within 10 to 15 minutes. And it's more of impulse buying, impulse categories, which is seeing massive amount of traction for now. Second thing is that modern trade is also seeing negative impact of quick commerce, but currently this is limited only to the metro markets, the top 10, 12 cities that these quick commerce companies operate. And if you look at companies like DMart, other larger modern trade players, they would not be driving more than 40-50% of their sales from the metro markets as such. So currently the impact on modern trade is much lower as compared to Kiranas. So one of course is the revenue split in terms of metro non-metro. Second thing is that quick commerce companies are not giving at a price as compared to what the modern trade companies are offering in terms of prices, right? So the prices are more reasonable, more value centric for modern trade players. So modern trade purchasing behavior remains to be constant for now. I mean, it's not seeing a big negative impact, but a lot of top up purchases, during the month in terms of, when the customers want to top up something, they want to order something extra. So the frequency of going to modern trade outlets in the metro cities has kind of come down, and that is impacting the SSG. Which in turn is putting concerns on the store growth as well to a certain extent. So this year, companies like DMart will probably do store growth of 40 stores, which is around 12-13% store growth as per what they are being guiding for. But in the medium to long term, the way quick commerce pans out, if at all this expands in a very big manner in the non-metro markets, you could see concerns on that front as well in terms of growth rates. So clearly, the bigger pinch is going to happen for Kiranas, which may see a decline in terms of sales. Trade, I think the decline is quite limited for now. Growth rates of maybe 20% could come down to 15-16%, but the growth rates are going to sustain in the near term, medium term for now.
Right. Karan, coming to you with regards to where cinema is concerned, right? You've already seen that downtick that has happened. I mean, there's nothing to talk about in terms of how much competition is hurting them. Now, they're still, let's take a PVR, they're still going on that expansion spree in terms of theatres. How do you expect an investor to look at a company like a PVR, because occupancy is low, ad revenues are low? How do you talk about sustenance?
So PVR also has got its own set of concerns from content. I mean, of course, there are 2-3 reasons here, structural reasons, which are, kind of denting their overall occupancy level. One, I think the kind of variety of content that one has on OTT, this entire thing of, the ease of watching OTT content, the bandwidth speed becoming better, higher broadband penetration, too many OTT platforms, sort of packages being available. I think that is taking away more than 10 to 12% of the footfalls on a permanent basis. So we don't foresee that occupancy levels, on a sustainable basis, could come back to pre-COVID levels. We believe that 10 to 15% of occupancy is a permanent dent because OTT is here to stay, and this entire digital initiatives are also here to stay in terms of better bandwidth speeds. The second issue is on the content side. Now, let's say 15% impact of OTT, let's say, on a sustainable basis, cinema chains should at least operate at 85% of pre-COVID occupancy levels. Now, even that is not happening very clearly because structurally a lot of things have been changed on the content side as well. So in the pre-COVID times, you had people going to cinemas more frequently. You had a lot of medium budget films doing very well in terms of box office. But in the post-COVID era, clearly frequency has come down. People are only going to watch films if it's large budget in nature, if it's worth their time, effort, money. And, the risk is highly skewed rather to the larger films. So there are about 15 large Hindi films which are made during the year. even if 3 or 4 of them don't do well, eventually you could end up at a 20% box office return on a YY basis. That's the kind of stakes large films have. So it's become a more risky proposition as compared to pre-COVID times where everything was very scattered. Content was doing well across budgets, medium, small, large, everything put together. But now you can say 85-90% of the box office in today is coming, from the large budget films, and medium budget film frequency in terms of them doing well is very, very low. I mean, once in 6 months, once in 8 months, which may not do good to overall occupancy levels. So clearly there are concerns because of these two factors. And I think ad revenue, F&B revenue, all of the things are just a function of occupancy. So unless occupancy doesn't come back on a sustainable basis as compared to pre-COVID levels, you will see concerns on the overall profitability as well.
Karan, we've spoken about a couple of segments of consumption, which is absolutely pretty mixed as a trend that we've looked at. If an investor has to look at investments in this space, say between food revenue, that's the quick service restaurants, versus your modern trade listed players, right? Or if you talk about cinema players or fashion or the beverage space, where would your bets be? Which segment?
I think in terms of an overweight stance, we would like to put our bets on the fast fashion segment because this is one segment which is doing very well. I think in terms of both SSG and in terms of store expansion, there is ample opportunity for this segment to penetrate. So, companies like Trend, Zudio are expected to do very well over here. Of course, competitive intensity will increase, and Zudio growth rates, what we've seen in the past of 45 to 50%, may not sustain. They might see a convergence of growth rates as well because of
I think we've just... Right. I think there's some bit of a glitch in terms of the audio as well. But an interesting point that Karan is making is that fast fashion becomes a top pick. So you talk about the likes of a Trend, which owns Zudio. That becomes important as a stock to watch out for. In fact, that stock has been on an uptrend after the kind of fall it saw post the numbers. But apart from a Zudio, a few of the other names that we should be watching out for, that's the space. That's an Aditya Birla Group company also, I think, which owns, fast fashion stores. So V2 Retail, in fact, that was one of the managements we spoke to as well. And that company has also done really well. Let's just quickly pull up V2 Retail also on the screens and see what that counter is doing in trade. Pretty much flat in today's session, but good moves in the last 1 month. There you go. Last 1 month, smart moves coming in there. But if we can just, do we have the V2 Retail bite? If we can have that bite, because the management had given a very strong guidance in terms of moving ahead. Let's hear the management out as well.
About 2 years back, the revenue per store per month was about 68 lakhs. In 2 years, this year we'll achieve more than 1 crore per store per month. And we plan to reach 1.2 crores. That is about 1,200 rupees per square feet per month in 18 to 24 months. So even if we grow at a 9 to 10% SSSG for the next 2 years, we will reach that number.
Management of V2 Rail expecting to double the same store growth, and that's going to be interesting to watch out for. In fact, HUL is another aspect from a consumption story that is in focus. They had their capital day and a couple of aspects that they've given out in terms of what they're expecting going ahead, especially with regards to where the demerger of the ice cream business goes. A small portion right now, but I'm sure there is some strategy behind it as well, because then once it starts boosting growth there, it'll be competing with the likes of a Wadilal Industries, which is also listed. We have Mahima who's standing by. Mahima, what are you picking up? 1.5% up move. You're seeing some bit of moves in terms of HUL, but what do they have to say?
Right, Hiral. So in terms of key takeaway, the entire presentation points out to 3 or 4 points. They're saying there's headroom from premiumization and they'll focus more on the premiumization side of things. They're seeing 2 to 4x opportunity potential in every category that they have at present. And the cash conversion is 100% due to effective working capital management. And in terms of financial ambition, the management has said that they're aiming for double-digit EPS growth, which will come and driven by the top line. They're seeing 100 basis points margin savings going forward, and margins to moderate due to favorable mix and turnover leverage. Now, in terms of their big bets, they have given 6 big bets. This includes premium face, hair, body wash, home care, the condiments and well-being, and they see high double-digit growth in all of these 6 pockets. Lastly, in terms of ice cream business, as you rightly mentioned, well, they've said that in FY24, ice cream business contributed around 2% to the total revenues, but the category is projected to grow in double digits going forward. And certain trends that they've been seeing is that there is low penetration and per capita consumption. All view of the key takeaways from the HUL's Capital Market Day.
Right, so that's with regards to HUL. Thank you, Mahima. In fact, we will try doing a deep dive on what this ice cream business would mean. If we can just quickly have a Vadilal Industries on the screens and see if that is seeing any impact, because probably there is something strategizing there. 1% up move coming in terms of Vadilal Industries as well. But on number 2, as we mentioned, Dhanuka Agri has bought global rights to Bayer's key fungicides. Joining us on the show is Harsh Dhanuka, Executive Director, to discuss more. Harsh, good afternoon and welcome to the show. My first question coming to you is, with this kind of a deal with Bayer, by how much will your top line and bottom line get a boost?
Yeah, hi, good afternoon, Varsha. So the numbers for 25 we have not shared as yet. However, I can share for the year 2023, the revenue for these products for Bayer globally was to the tune of 200 crores.
Right. Mr. Harsh, so how much revenue from existing partnership, if any, you have in Q2, and are there such more partnership in pipeline?
So these are the first time, this is the first time we have purchased external brands from a company. As per Dhanuka's business model, we've been registering a number of products from partner companies from Japan and Europe and India. And other than this, right now there's nothing on radar for adding any products through this mode.
Also, in Q2, we've seen a strong improvement when it comes to your EBITDA margin. Now, what were the drivers for the same, and what was the mix between the specialty and generic portfolio, and will you be able to sustain that margin, or you're seeing more improvement in the margins going forward?
So during the last quarterly call, we have updated that this year we are expecting EBITDA margin improvement of 100 basis points. And with respect to the reason for the improvement in the margins in Q2 was majorly product mix. Some of our new products which we have launched this year, Lenovo, Myco Super and Perch, they have performed really well.
Right. So Harsh, coming back to the Agri-Bayer deal that, the Dhanuka-Bayer deal that we've been discussing right now. First, you mentioned Bayer had a revenue of around 200 crores from these products, right? Now, second aspect to it is that you will be taking over manufacturing as well as sales. So how is it that the manufacturing is only going to be at the Dahej manufacturing unit, or you will be looking at some other aspect as well?
So these products are sold in combination with other technicals. So out of the 2 active ingredients that we have purchased, iprovalicarb and tridimenol, one of the products will be moving the manufacturing to Dahej over a period of time. It requires regulatory approvals in India. So it will take 2 to 3 years for the product to start manufacturing in India. With respect to the arrangement with Bayer, they will continue to supply the products for the time being. And the other co-formulants which are part of this product, they will be acquired from various companies who are manufacturing them.
So the ones that you'll be acquiring from Bayer, what's the kind of royalty that you will be giving them till you start manufacturing them for the next 2 to 3 years?
So that will be just a supply agreement where they will be charging a service fee for the production on top of the costs.
How much would that account for?
That number I cannot share at this stage.
Okay. And in terms of after 2 to 3 years, once you start manufacturing these products as well, how much will it boost your margins? To what extent?
That definitely, because one of these products currently is being manufactured in Europe, and in India, we believe our manufacturing costs will be much lower, and with the optimized production processes and leveraging our existing infrastructure at Dahej, we believe that we can definitely improve the cost. The numbers will share in the due course.
Also, Harsh, so these products from Bayer, that comes under specialty one or the generic portfolio?
So for Bayer, definitely it's part of the generic portfolio because they are not covered under patent any longer, and they contribute less than 1% to their global revenues. So it is not part of their strategic portfolio. However, for Dhanuka, it will form an important part of our product portfolio, and we'll be focusing on renewing marketing efforts to revive the volumes which have been on a declining trend.
Got it. Also, I wanted to understand about your recent launches and the products that you have in pipeline for, say, next 2 years.
Yeah, so recently in the current FY, we have launched 3 new 9(3) products, which is Purge and Linevo, as well as a biological growth stimulator, which is Mycor Super. These 3 products have received great response from the market, and we have been achieving our revenue objective for all the 3 products in this year. Going forward, we have a few more products in pipeline, including grape fungicide, paddy fungicide, and a paddy herbicide, which will be launched in next 12 months.
Okay, and so with these launches, what are you expecting your volume growth to be? Because in Q1 you had a volume growth of around 38%. In Q2, if I exclude your sales return, the volume growth is about 20-odd%. So in H2 FY25, how are you seeing this volume growth?
So for the financial year, on an aggregate, we are looking at a 16 to 18% value growth, and which will be close to 18 to 20% of volume growth.
Okay, and also margins. So for FY25, what kind of margins are you targeting? Will you see an uptick in margin?
As I mentioned earlier, the EBITDA margins, earlier we had forecasted a reduction in the EBITDA margins, but in last call, we have upgraded our forecast to 100 basis point improvement in the EBITDA margins in this year.
Right, because that's interesting to watch, Harsh, because clearly your top line has been revised from 18% to 16%, but your margins have been revised upwards by almost 200 basis points. So that's going to be interesting to watch out for. Thank you so much for joining us on the show. Completely running out of time on this segment, but let's quickly slip into a short break and we will be back with lots more. We'll be talking about the auto space, the cement space comes in light as well, and you have the top brokerage of the day. Be right back.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay.
Hello and welcome back to NDTV Profit. You're watching Hot Money, and the next theme that we're going to be talking about is actually the cement space. And it's actually, the counters across the board are seeing some some upticks in, and some kind of green shoots. We have ACC that's up, we have Ambuja Cements that's up 2%. Even, stocks like Ramco Cements and Shri Cements, if you can have them up on the screen, even they've seen some movement in terms of 2 to 3%. And this comes after few weeks of corrections in the stocks. We've seen, when you look at it from a 1 to 3 month perspective, we've seen stocks correct as much as over 10%. And this was because of a bad first half of the financial year. We had two factors that played spoil sport. We had demand, which was very weak on the back of many things. We had the elections coming into place. We had labor unavailability because of the of various festivals during the first half. We had even low infrastructure as well as construction activity that impacted demand. And another factor on the other side was pricing. Pricing has been falling for a couple of months now. Cement prices pan-India actually hit multi-year lows in August of 2024. And even when price hikes were undertaken across the regions, they didn't sustain. So when you talk about what lies ahead for H2, we're actually joined by Rajesh Kumar Ravi, who is the Senior Vice President of Institutional Research at HDFC Securities. Rajesh, welcome to the show. Let me start off by asking, at first, I want a quick view on how will H2 shape up. Will it be better than the first half? Will we see some green shoots in the cement space?
Hi, good afternoon. So yes, the second half, the outlook is for sure positive versus the first half. As you rightly pointed out, first half we have seen demand, flattish demand after the industry was growing at 10% plus in the preceding 3 years. We have seen a flattish volumes in H1. However, for H2, there is hope, among major players that the industry should see 10% or, at least volume growth. Q3 so far the growth number hasn't picked up meaningfully, at least for South, and all the numbers which we are hearing is flattish to marginal decline. But net there is a hope that the demand should start to look up because the elections is over, and there is a pickup in the government project awarding and execution. On the pricing front, again, first up we have seen cement prices continue to drift. Last time we had seen major price increase had happened in the month of September last year. After that, prices have been drifting lower. Now we expect this trend to get arrested, and we have seen some price uptick happening in the month of October and November. And for the quarter as a whole, we are expecting at least 2% of realization improvement on a sequential basis. So margins apparently have bottomed out on the lower side in Q2. We should see at least 200 rupees margin recovery in Q3 quarter on quarter, and another 200 rupee odd in Q4 quarter on quarter. And we are premising this predominantly 100 rupees each through realization improvement and 100 rupees odd through operating leverage gains.
Rajesh, but you said Q3 demand has been weak even now, at least in the start of. So could you expect a pickup only in Q4? And if so, and you have a quarter of, again, a muted demand scenario, in terms of a whole year figure, will that actually translate into at least high digit volumes for the space?
So see, Q3, these are preliminary. October numbers have not been great. But, if prices are improving, there has to be some sensibilities, some rationality on the demand side also, which should be backing up the price improvement. So we're expecting the volume should be better off compared to H1 in Q3 and Q4, the momentum should, the pent-up demand should single digit. On the lower side, it should be. So if Q3 is, say, a low single digit, Q4 grows by 10% plus, we should be looking at 3 to 4% sort of volume growth for FY25, which is not at all a great number, but at least a positive trend. And then most of the spillover impact should look up in FY26.
Right, Rajesh, a quick question in terms of pricing, right? Now, a couple of notes that do mention that a price hike of 10 to 50 rupees per bag that could be expected in November. How are you looking at it? Do you think prices have bottomed out from here on, and how much, according to you, should be the price hike that should be on the cards for the cement companies to see this kind of a revival?
So, there are a lot of hopes which is we are all building in on the pricing front. Why so? Because there has been major consolidation in the industry in past 2 to 3 years. And, the cement industry is not at all making any great margins or return ratios for the amount of investments which has gone into the sector. Most of the initiatives which cement companies are talking about, 200 to 400 rupees cost reductions, they're all getting passed on, or largely getting passed on to consumers because of this stiff competition. So demand also has not been supportive, and because of the recent acquisition and the top players not focusing on rational pricing and margins, the market share gain in the short term by the bigger players is what is driving to this aggressive pricing. So, given that Q2 numbers have been very poor, the top players also margin profile, if you look at between 650 to 750 rupees EBITDA per ton, is too far away from 1300 to 1500 odd rupees margin, which these companies have been guiding, over next 2 years. So it cannot be an overnight journey, and companies need to focus on the pricing front. While cost, there is room for players to increase their green power consumption, and that will be the major delta on the costing side. That also has some limitations. So pricing, we expect that the consolidation should start playing out. If not in FY25, the rub-off effect of the same should start looking up in FY26 and onwards, and hence margins should look up north of 1100 odd in FY26 versus 850 900 odd, which we are targeting for FY25 at industry level.
Rajesh, so with all these factors into play, consolidation, pickup in pricing, better demand expected, which players do you feel are well placed? What would your top picks be?
Yeah, so see, because of the recent issues, Ambuja has fallen sharply, and we believe that the valuation is quite in a comfortable zone, given that both Ultratech and Ambuja have strong volume growth visibility, and margin profile should also move in tandem, given that the initiative which even Ambuja has taken up on the green power and other cost reduction initiatives. We believe Ambuja at 500, 520 level offer the valuation is at a discount, 20 to 25% discount compared to Ultratech. So we expect Ambuja to do well from a medium next 1 year perspective. It should rebound to 600 odd plus in shorter period of time. Ultratech obviously is a good play, but given the valuation is already on the higher side and prices, major price uptick visibility is still far off, we believe there is still some time one should wait and watch. Amongst mid-cap companies, Dalmia is undervalued, $95. A concern which Dalmia is facing is predominantly, will they be able to recover the volume growth 10% plus with steady margins? And when I say steady margins, it is north of 900 rupees odd per ton. If they're able to deliver that, the valuation is extremely undervalued, and it should see a run-up. Yeah.
The topics coming in there, an interesting one, Ambuja Cement, which is on the day's highest levels, Dalmia Bharat, and you have Ultratech Cement. Thank you, Rajesh, so much for joining us on the show and sharing your views. But let's also welcome in Ajit Kumar Mishra. Ajit, good afternoon and welcome to the show. My first question coming to you is to pick it up from the cement space. We have been seeing pressure in the first half, second half. Green shoots could be emerging. There could be some bit of consolidation going ahead. How are you looking at the space, and what are your topics for this from this sector?
Yeah, good afternoon, Neeraj. So yes, we are seeing recovery in terms of price and overall sentiments also towards the sector. And we feel that within the space, the sectors or the stocks which are outperforming from the beginning, like Ramco, we have seen strong recovery in the prices, and the stock is almost inching closer to its record high. This is one stock which can outperform within this space. Going forward also, provided that this recovery continues. So from the short to medium term perspective, one can definitely look at Ramco as a bet with 950 as a closing stop loss, and positionally you can wait for roughly around 1120 to 1150 as a target area.
Right, so that's with regards to where Ramco Cement goes, a buy coming in on that one. But let's quickly move across to the auto space, an interesting space that we will be watching out for as well. On Monday, you will have the auto sales numbers that will start trickling in. A trend that we have been witnessing is that the two-wheeler space is expected to continue the up move this time around. And with regards to two-wheelers, the MOM numbers are not really comparable because of the festive season that did come in. And that's the reason why we are seeing a degrowth if you pull up the numbers on the screens. But overall, it's expected to be Bajaj Auto, TVS and Hero Motor that will be in the limelight. If you see from a four-wheeler perspective, there is that down growth that is expected to continue, but M&M continues to lead this time around as well with the kind of launches that it has packed up in the SUV space, and their deliveries have improved. Maruti Suzuki is expected to come in as a surprise as well this time around. And you have Tata Motors and Hyundai that will be watched out for. Commercial vehicles, I think the companies are really waiting out for in terms of how the government spending increases, because that's been a back burner for them. And so you have something on a slightly slow move in terms of Ashok Leyland, Eicher as well as Tata Motors. And tractors, Escorts is expected to see a mild degrowth year on year. A small up move coming in again with regards to M&M as well. Ajit, a quick view in terms of the auto sales numbers that are expected to trickle in. What will your top picks be?
So, Hiral, in fact, this sector is, slightly on the back foot. If you exclude a couple of names like Eicher, Ashok Leyland, or M&M, majority of the counters are either trading below their major averages or struggling in a very tight range. So I feel that one should stick with the performers wherein we are seeing relatively higher strength, and Eicher and M&M, these are the top two names which one can definitely look at. Eicher, post this move, there is a possibility that we might see further consolidation, but the downside seems cap. So one can look to accumulate Eicher in this 47 and 4800 range, with 4650 being the closing stop loss, and the 5100, which is the previous swing high, as a target area. And for M&M, which is anyways leading from the front when it comes to the overall auto space, 3150 is something that one can maintain as a target area for M&M. Strong base we have at around 2800 mark, so that should be your stop loss.
Got it, Ajit. So M&M and Eicher Motors is your top picks, but we also have Bajaj Auto in focus, and the company expects 8% growth in the coming quarters thanks to the uptick in rural demand. And we actually spoke to the executive director of Bajaj Auto, Rakesh Sharma, who explained how the demand is panning out. Do listen in.
We started the year with an expectation of about 6 to 8% growth in the motorcycle industry. And it started off slowly in Q1, Q2, but picked up, and particularly picked up very well in the festive. I think the next few months, we should be looking at, for the industry, a growth of about 8% or so. Now, it could lie between 6 to 10%. So I'm saying about 8%, which according to us is a very healthy growth, particularly if you break down that growth between the higher end of the industry, which is the 125cc plus, which is going to be in double digits, and which is healthy because that's where you get better revenue and better margin. So that's a very good sign. I think various factors, things like a reasonably stable economic backdrop, advancing penetration of retail finance, a reasonably okay monsoon, which is ensuring that the small town wheelers moving, All these things are combining to say. But of course, there are issues like, the very bottom end of the market, whether there is enough economic inclusion to lift those people up into the consumption cycle. We are still seeing a little bit of softness over there.
Right, so that's the management of Bajaj Auto as well. Ajit, let me come back to you on the auto space once again. In fact, more than about auto, the auto ancillary space. How are you looking at it, taking into consideration the kind of slowdown that is on the cards, specifically with passenger vehicles and CVs? What would you have to say with the auto ancillary space?
So, Hiral, yes, and started reflecting in the stock prices also. So, if you'll see Madasumi, which was doing exceptionally well, in the recent month, is also, witnessed roughly around 30% kind of a cut from the record highs and still trading below their major averages. So, it's a kind of a similar trend that we are seeing in the auto space is reflecting in ancillary space as well. But at the same time, select tire counters, they are doing well, means Apollo tires, when we are seeing traction, on every dip, and it's kind of like a base formation that is also going on. So maybe selectively one can look at picking within this space. But yes, overall, as we've shared about the sector, that if you exclude a couple of names like Eicher, M&M, majority of the names are under pressure. So until we see some stability and recovery in this space, I doubt there'll be any meaningful recovery in the ancillary space as well.
Got it, Ajit. So in terms of, you expect the muted demand, but in the auto anchor, if you had to take your top picks, what would it be? What counters that are placed better than the others?
After this correction, I feel that Motherson Sumi could be one name, provided that if there's no negative surprises comes off, especially from the US and European markets. The stock was at 215 and now we are currently quoting at 160, and that's the zone basically from where last time we saw the stock witnessing a surge. So we are very closer to the immediate bottom. So one can start, accumulating this stock gradually in the range of 150 to 160, and wait for a position target of 190 or 200 plus.
That's with regards to where Motherson Sumi goes. But moving on, it's time for the top brokerage note of the day. Goldman Sachs has actually double downgraded Credit Access Grameen to a sell from a buy, and they've placed the target price at 564. Mahima brings in as to what's the key rationale for this kind of a downgrade, Mahima?
Right, Hiral, so as you rightly mentioned, they've double downgraded the stock, and this is the target price has been cut to 564 from 1426 previously. Now this poses a 42% downside from its yesterday's closing, but today also the stock has tanked almost 7% in trade as we speak. Now the rationale behind downgrading the stock, there are three main key takeaways. First one being that they expect a further build-up of stress due to over-leveraging in the industry. Secondly, they are negatively surprised by the accelerating decline in the asset quality that was observed in Q2 FY24 for the counter. And lastly, they are viewing the recent sector derating and which is kind of structural rather than cyclical. So this is this could kind of have an overhang on the particular counter, is what the brokerage is saying. So these are the key takeaways from the brokerage and why it's bearish on the particular counter.
Thank you, Mahima, for the details. Ajit, we just have 10 seconds more. Your quick view on this counter.
Actually, I missed the name. Can you please?
Credit Access Grameen.
Okay, so Credit Access, the stock has been under pressure for almost nearly a year now, because we were quoting at 1750 last year December, and we are currently at 900, and still there is no sign of recovery. Though there was a marginal rebound, of late, but it fizzled out. Today, after the initial gap down, we are seeing some buying interest emerging. Overall, I would say that the downside seems capped, because it seems like the negatives are already discounted, and 800 could be the area where it might form the base next. So for those who are holding longs, they can continue to hold with 800 as a closing stop loss. And for those who are planning any fresh trade, they should wait and let the stock surpass 1000 levels decisively for any fresh trade.
Thank you so much. So this is going to be an interesting topic to watch out for as well. Thank you, Ajit, for joining us on the show, but we're completely out of time. Thank you from Mika and myself and the team that has put this show together. Lots more lined up on the other side on NDTV Profit. Please stay tuned.
member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
And the whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.
Hello and welcome to NDTV Profit. You're watching Market IQ. My name is Ruja Sumaya. Let's take a quick look at the markets first. Well, seems like a pretty day for the market. Nifty 50 is up in trade by almost about 1%. Nifty Bank, however, rose early in the trade, but now seem to have been given up on some kind of losses. It's almost flat as we speak right now. Sensex up almost 1%. Nifty IT doing well, is doing good as well in the trade, but let's move on to talking about constituents of the Nifty IT, of the Nifty 50 index. Well, the highest gainer is Bharti Airtel, up about 5% in trade, as we can see on our screens, but this is also supported by Reliance, L&T and ICICI Bank as well, all contributing positively to the Nifty 50 index. But down in the red, we also have some of the banking names. HDFC Bank, SBI is what we have, SBI Life to be precise. We also have Hero Moto, IndusInd, which is contributing negatively to the index today. But let's move on to talking about Nifty Banking Index, which is largely flat in trade. Most of the indices are in the red in terms of Nifty Banking Index, but we'll have a look at which ones are contributing positively. As we speak, it is ICICI Bank. Now this comes after after the Life Insurance Corporation clarifies on the banca insurance allegations, but we also have Kotak Mahindra Axis up about 0.5% in trade, but down in the red, the ones which are pulling the index down, largely PNB, Bandhan down about 2% in trade. But with that, let's talk about the hot sector, Nifty IT. All the constituents in the green as we speak, largely gains led by Persistent Systems up about 2%. We have Coforge, but it is largely flat, not contributing much negatively over here. But names like HCL Technologies, Wipro, Emphasis as well. Nifty IT as a whole is given around 9 to 10% return in the month of November. Looked at one of the defensive sides of investment. But let me move on to talking about some of the stock specific names as well. Z, if we can pull up the chart of Z Entertainment, the stock opened up by almost 7% gap up, and as we speak it is up about 5%. This comes after Puneet Goenka was not reappointed for his position as the director on the board because he did not get a nod from the shareholders. More than 50% of them voted against the proposal of reappointment of Puneet Goenka. But lastly, talking about Credit Access Grameen, well, this one is down about 8%, a big slump today. This comes after the brokerage house Goldman Sachs have cut its rating from buy to sell, and target price cut to 564 rupees. The price is at 906 right now, 564, almost about 40% downside is what we can see over here. But lastly, we'll also have a look at insurance names like HDFC Life. If we look at HDFC Life, down about 0.64%. SBI Life also down about 1.75%. But if we can pull up the auto names as well, like M&M, that one is also doing nice. Nifty Auto is up about 0.8% in trade, and I think the numbers for the month of November are expected to come over the weekend. But we have Puneet who is joining in on what to expect from those auto sales numbers. Puneet, over to you.
Well, thanks for that. So it's going to be a very interesting month for the auto sales numbers in November. And that's because, in the same time last year, basically November 2023, we had Diwali falling between 14th and 18th November. In this particular month, in this year itself, Diwali has been split between October and November. And that's why the sales were expected to be on the lower side. But we are going to see some surprises in this particular year. When you see on a year-on-year comparison, Month on month, of course, the numbers are going to be lower because Diwali had the first couple of days between 28th to 31st of October. So it's going to be a fall on a month-on-month basis, but year-on-year is something that we want to look at. And of course, the first one's Bajaj Auto. It's expected to be roughly about, a couple of percentage points on a year-on-year basis, month-on-month, as mentioned, not to be looked at in this particular month. But TVS is going to be one of the biggest winners in this particular month, growing by around 6 to 7%. That's going to be highest in the two-wheeler space. When you move and look at, someone like a Hero MotoCorp as well and Royal Enfield as well. So Hero is expected to have a subdued month, down about 3% on a year-on-year basis, while Royal Enfield is expected to have, a decent month, 2 to 3% growth, the second highest as per brokerage estimates, or roughly about Jeffries, Motilal Oswal and others as well. When you look at the car makers, it's going to be a subdued picture, but there are going to be two key factors and companies to watch out for. First is, of course, Mahindra & Mahindra. They continue their outperformance, 11% growth estimated compared to the same time last year, the highest in the four-wheelers. But the second and the most important one is Maruti Suzuki, because it's expected to have a 7% growth despite having a very strong year and month also in November 2023. So clearly a big winner to watch out. The other two, Tata Motors, is going to be a subdued time in this particular time frame, roughly down about 5%, continuing its degrowth for the 9th straight month. And the last one's, of course, Hyundai, a very recent listing, estimated to be almost flat on a year-on-year basis, roughly about 1 to 2% on the negative side. Finally, commercial vehicle makers, another key thing, they're anticipating a decent growth of about 3 to 4%. That's the first for them in this particular year. For Ashok Leyland, it's a 3% growth. When you look at someone like a Tata Motors as well as VECV, which is the Eicher Motors commercial vehicle arm, so 13% growth for Eicher. If you look at Tata Motors as well, it's expected to be decently at 10 to 11%. So it's a decent month in the first such for commercial vehicle makers. Finally, for tractor makers, again, is a similar trend, with Mahindra & Mahindra being an outperformer. Escorts is going to be down 2%, and finally on Mahindra & Mahindra is going to be a decent show by the company, growing roughly about 4 to 5%, a very strong month-on-month recovery. So overall, key hits and misses, of course, Maruti, Mahindra as well as TVS and Eicher is something to watch out for in this particular month.
Definitely, Puneet. Thank you so much. Auto names is what we'll watch out for over the weekend. But let's shift focus to the consumer space. Well, we have Electronic Smart, the management joining us. But before that, let's have a look at the stock. Electronic Smart, as we speak right now, largely trading flat in trade, up about 0.8%. But what is interesting is that Nuvama, the brokerage house, has initiated the coverage on the stock with a buy rating, target price of 237, implying an upside of about 36 to 38%. And after which the stock was up almost by about 5% yesterday. But to talk to us more about this, we are being joined by Mr. Premchand Devarakonda, the CFO at Electronic Smart. Thank you for joining us on the show today. And with me is my colleague Mahima Vajrajani, which tracks the space very closely. My first question to you, Premchand, is what do you think about the consumer durables sector as a whole? Do you think this is a fast-moving space going to pick up in the second half as well?
Hi, good afternoon, and thank you very much for having me on your show. This consumer electronics, there are two elements here: large appliances and the IT and mobile. These are the two things. So there is definitely decent double-digit growth in IT and mobile segment, whereas in large appliances there has been single-digit growth, and it is going to continue for next at least 4-5 years.
All right, Mr. Devarakonda, always a pleasure speaking to you. I wanted to understand that, in the notes specifically, that Rucha talked about, they've said that, you're one of the regional gems that they're positive about. And, overall, I want to understand, since, we're already into the festive season, how is festive sales playing out, first of all? And does this change your targets going forward for FY25, considering the sales have already gone up because of festive season?
See, our targets remain unchanged, because we were targeting about 15% year-on-year top-line growth, and we are on that path. And that's the clusters where we entered in the last couple of years, like NCR and tier 3 and 4 cities in AP Telangana regions. So they are performing exceedingly well. So that's why our targets remain unchanged.
Okay, Mr. Devakonda, I also wanted to understand that you have a strong foothold in the southern region, as you rightly mentioned, but you're also trying to expand in the NCR region. I want to understand what is the strategy with respect to that. What kind of capital will you be deploying there? And I believe that there's a lot of cash surplus at present that is coming in from the southern markets already. So, will you be using internal accrual for the kind of capex plans that you have for NCR? Or will you be, borrowing some money?
See, to add 25 stores year on year, so we have adequate internal accruals. So we need not reach out to any finances to fund our expansion plans. And that is our expansion existing organic, the expansion plan is organic. And we are going to add 25 to 30 stores year on year. We can comfortably meet that capex requirements out of internal accruals. If there is any inorganic expansion, that's the time we might approach the finances.
Okay, and this 25 to 30 stores will be divided between the NCR region and the Telangana region, or this is just for the NCR region?
No, not NCR. Maybe 10 out of 25, 10 will be in NCR, 15 will be in South Cluster. And we are exploring other peripheral markets also around NCR. So we might add a couple of stores there also in the next 1 year.
Okay, so then what is the strategy in place with respect to the NCR region as a whole? Because right now your focus is on the southern markets, but going forward, if you're expanding in NCR, what is the kind of, let's say 3 years down the line, the top line that you seek, NCR contributing to your overall revenues?
See, currently our NCR contribution is around 5% to the top line, and we have to take it to 20%. That is our target in the next 3 years.
All right. And in terms of the robust cash flows that are coming in from Telangana, I just wanted to understand that you will be deploying these cash flows only for expanding into the NCR region, or there are other plans in the pipeline?
There are other plans. Our teams are aggressively working on ground in exploring the markets around NCR like Western UP, Haryana, Punjab, Uttarakhand, Orissa. And see, once we have the clarity of thought, then probably in the last quarter of this year or the first quarter of next year, we will come out with the detailed plan for the next 3-4 years.
All right. Mr. Devakonda, there was a very interesting that I had come across in one of the recent reports, which was talking about the kind of consumption that is happening in terms of mobile phones. The report said that now mobile phones are having a larger life as they used to before, which is why there is a slowdown in terms of selling of mobile phones. So first of all, I want to understand that have you observed a similar trend, and is your sales mix changing because of this?
See, compared to last year, post 5G rollout, so there is definitely pent-up demand for mobile phones because most of the customers, they were upgrading their phones. So that's why if you compare between last year and this year, in the first 2 quarters, so last year we could see more than 25% growth coming in from mobile segment, whereas this year it has been around 13%. So we could clearly see there is little bit slowdown in mobile segment. Coming to that product mix, I think our product mix will remain unchanged even next year also, because in our mix, mobile contributes almost 40%. That is going to remain more or less same next year.
All right. And Mr. Devakonda, in terms of the sales mix, can you give me a breakup as to you're doing fully store sales or are you going online? And what is the kind of breakup if you're already doing online?
See, we are not selling online. We have certain identified models which are allowed to be sold on Amazon and Flipkart. So that's how we are selling, and that contribution is less than 0.5% of the top line. And we have one wholesale division where we are selling certain slow-moving inventories. That is where we are, both put together less than 1% to the top line.
Right, but the wave right now is about e-commerce and quick commerce. So do you see yourself changing your strategy towards your sales mix, or will it remain the same going forward as well?
These offline players cannot sell online. So that is the precondition set by the brands. So that's why as of now, we don't have any plans to go aggressive on online.
Sure. Thank you so much, Mr. Devakonda. But because of crunch of time, we'll have to wrap this conversation. It's always lovely speaking with you. And thank you, Mahima, for joining us in this conversation. But with that, let's move on to talking about another stock in the consumer segment, that is Hindustan Unilever. Well, the company has identified 10 brands that are well positioned for premiumization and 6 long-term bets with the potential to deliver high double-digit growth in the coming years. As the consumer goods giant seeks to bolster its performance amid shifting market dynamics and intense competition, we have Sessa joining in with more details.
Hindustan Unilever Limited has pinpointed 10 brands primed for premiumization and identified 6 long-term growth bets expected to deliver significant double-digit growth in the coming years. Now, these strategic categories include premium face and hair, body wash, home care liquids, condiments and minimals, as well as prestige and well-being, which cumulatively amounts to rupees 7,000 crore in FY24. The 10 brands that HUL said is in sweet spot for premiumization include Surf Excel, Dove, Lakme and Horlicks, each generating over 1,000 crore in revenues. Notably, Surf Excel is projected to exceed rupees 10,000 crore by FY25, and HUL also aims to triple Horlicks Plus sales by 2030. Overall, HUL sees a growth potential of 2 to 4 times across its categories in the next decade, driven by rising income, growing aspirations, and a young demographic. In fact, the company has introduced Winning in Many Indias 2.0, which is an ongoing shift from its traditional one-size-fits-all strategy. As part of the strategy, it will further identify clusters of affluent population to drive its premiumization agenda. Additionally, HUL is shifting its advertising strategy from traditional TV to digital and social media, with TV's share decreasing from 60% to 39%, while social media's share increasing to 15%, and OTT share has also risen to 17%. Now, while these are long-term projections, HUL projects a low single-digit price growth if commodity prices remain stable in the short term, as well as it also expects the demand environment to remain stable as far as the short term is concerned.
Well, that's from the consumer segment, but let's shift our focus to the economy as a whole. The second quarter GDP numbers are expected to be out today, and economists believe that we could see the growth at 6.5%. I'm now being joined by my colleague Pallavi to tell you what else to expect from the pin. Pallavi, over to you.
Right, so GDP figures are set to be published a short while from now, and GDP is estimated to grow by 6.5% in Q2. That's according to economists polled by Bloomberg. GVA growth, meanwhile, is being pegged at 6.3%. Now, if figures are in line with these estimates, GDP growth would have eased to the slowest in 6 quarters. And we could also see rising divergence between various subcomponents of growth. This would also mean that slower growth in this quarter could pose downside risks for the full year growth forecast. According to the RBI, for the full year, we're expected to see GDP growth at 7.2%. Now, looking through details, Agri GVA is set to see some rise compared to Q1. That's largely on the back of elevated Kharif food production estimates. What could see some loss of momentum is industrial GVA, so mining, utilities, and maybe manufacturing. What we're also going to be watching out for closely is what government capex comes at. That is also expected to see some easing in GDP. We did see government spending remain very low in Q1. The expectation that time was that there was going to be an improvement in subsequent quarters, and that was expected to help support economic growth. However, in Q2, that was something we did not see rising substantially.
Right, thank you so much. But let's take a look back to the markets where we'll have a look at the new kid on the block. We have Enviro Infra Engineers, who had a stellar debut on the Lal Street, marking a 48.5% premium over the issue price of rupees 148. On the BSE, the stock opened at 218 rupees, reflecting a 47.3% premium. While the listing is the biggest mainline IPO debut in November and the 15th largest overall in 2024. As we look at the price currently, well, it's It's trading at around 211, a tad below the 218 number that we saw. Well, the IPO of Enviro Infra Engineers received a robust subscription of nearly 90 times thanks to the heavy bidding from the institutional as well as the non-institutional investors. We caught up with the management and also started by asking them if the 100% growth that they saw in revenue, EBITDA and profit in FY24 is sustainable or not. Listen in to what they have to say.
Total debt in the company was 233 crores for FY24. On a standalone basis, it was 143 crore and 90 crore it was coming from the term loan from our one of the HAM projects which we have recently concluded. It was for Bareilly. So out of this 143 crores, we plan to repay the debt of 120 crores. So we intend to and plan to make the company debt free. The working capital which we have proposed through this IPO, it is 181 crore. So since the company was growing at a very fast pace, so the cash flow from operations for last year were negative. Going forward, we will work hard to convert these cash flows to be positive. I will do it for FY25 itself. So the working capital cycle and the cash flow cycle that are going to improve substantially going forward. With a decent order book and with the execution capabilities, the way the executions are going, the projects moving on forward, so that growth should continue and the cash flow cycle that will also improve substantially. The total working capital gap presently for FY24 was 40 days, so which is very much aligned with the infra companies. However, we will further improve the efficiency.
Well, with that, let's change our focus to politics. We have Mahayuti's meetings that were to be scheduled in Bombay today, but these are now cancelled. NDTV's Radhika Ramaswamy joins us with more details. Radhika, over to you.
That's right. There is an inordinate delay as far as government formation in Maharashtra is concerned. It's been almost a week since the results have been announced, but no direction as far as chief ministership post is concerned, and even as far as oath taking ceremony is concerned. Today an important Mahayuti meeting was set to take place after the leaders met Amit Shah yesterday. There were discussions on CM post, there were discussions on portfolio as well, and then power sharing formula. A tentative one was arrived at, but today they were supposed to sit together and then announce chief minister's name, which is not going to happen as Eknath Shinde has decided to go to his hometown. So it may take a couple of more days for them to sit together, come up with a consensus on chief minister's name. Most likely it will be Devendra Fadnavis, as Eknath Shinde has very categorically stated that he will abide by whatever the BJP decides. So two deputy chief ministers most likely. Will Shinde take up deputy chief minister's post? That remains to be seen. As far as portfolios are concerned, BJP most likely to get 22. Shinde Sena about 12 and NCP 9. This could be the arrangement. Again, Eknath Shinde is trying hard to bargain as far as some plush portfolios are concerned, including Home Ministry as well as Finance. But will he get that? Not entirely certain. Many compromises being made by Shinde, but more delay as far as government formation is concerned.
Right. Thank you so much, Radhika, for that. But that's all that we have on the show from now. It's from me and from all those who have tried to put this show together. Thank you very much for watching.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extra.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
NPS वात्सल्य ये किसने दिया?
ये हमने दिया है। सभी चाहते हैं अपने बच्चों की आज की नहीं कल की जरूरतों को भी पूरा करें। इसीलिए हमने चुना है एनपीएस वात्सल्य, जो सालाना 1000 रुपए के निवेश से भी शुरू हो जाता है।
एनपीएस वात्सल्य आप 18 वर्ष तक के बच्चों के लिए ले सकते हैं, जो 18 वर्ष बाद खुद ही एनपीएस अकाउंट में कन्वर्ट हो जाएगा।
इसीलिए कहता हूँ, हर उम्र के लिए एनपीएस जरूरी है।
How much money do you need to have to be considered wealthy? Back before I was born, and even in the early 2000s, in fact the year 2000, being a crorepati was considered the benchmark. It was something that India aspired to. And that's why Kaun Banega Crorepati, which was launched in 2000, was such a big hit, and why it captured the imagination of the populace. Now, 1 crore may not be what it once was, but it is still a major landmark and a major milestone in the journey to building wealth. It is also a significant bottleneck though. But even if it sounds daunting now, but without taking undue risk. Join me today is Shalini Sekhri, the Chief Growth Officer at Renaissance Investment Managers. Thank you so much, Shalini, for taking the time as always.
Thanks, as always. Great to be here, Alex.
So let's talk about that magical number, 1 crore, crorepati. It's etched indelibly in the minds of so many people, and it's something that they aspire to. Why is it so magical?
So, Alex, I'd like to start by saying that the 1 crore number is so much more than just a financial milestone. It, in fact, is almost like a gateway to a world of possibilities. So think of that first journey to 1 crore as opening a door. And once you step through it, the path to even greater wealth becomes far more accessible. So why 1 crore? It's not a number that's been plucked for thin air, right? So the relevance of 1 crore is that for so many of us, maybe the salaried class, maybe this large middle income India, 1 crore represents a number that can, in a very meaningful way, change your life. It could mean securing your financial future. It could mean not just living, but living well currently. And it could mean achieving all of your dreams. So that's why it's a really meaningful number. Now, it's not something that you just put down on a piece of paper and say that, you know, here it is and my job is done. It requires a lot of work to be able to be extremely thoughtful about what is your lifestyle, what is it that you want to aspire, and what is the life that you want to live. And once you know that, to be able to align these financial goals with your life's aspirations makes it a far more meaningful journey. Rest assured, it's going to be a tough journey. And to be able to have the motivation of what lies at the end of this can prove to keep you, on the path even when the going gets tough.
So let's talk about the journey to that 1 crore mark, because a lot of people, now that they are accessing content like this and they are speaking about building wealth much earlier, they have access to so much more in the way of avenues to build growth, investments, that they're starting earlier than a lot of us did. So from that perspective, how do you go about starting this process of building 1 crore?
Like you said, Alex, it's quite a daunting thought when you're starting out as a youngster, maybe 23, 24 years old. You're making maybe at best 1 lakh a month as salary. Even that's a big number, right? So I'm saying let's assume that's where you're starting out after your first few years of internship. It seems like a long ways off, but there are certain basic principles you have to start with, I think, which will put you on this path and make it far less daunting. So I would start by saying start early. I cannot emphasize that enough. Time is truly your ally as you're building, your financial wealth. So that's number one. The second thing is to have very clear goals, because this in a way becomes your guiding star, your north pole towards which everything you do should move towards. Thirdly, live below your means. And I would say not within, but below. And once you have these savings, invest wisely. Lastly, try and create multiple streams of income. So for example, your investments themselves become income besides your regular salary, right? So these are the basic principles. There are few things you need to think of in terms of financial discipline.
Yes.
You mentioned some of them. So obviously you need to budget. It cannot be, a Bhagwan Bharose number. What am I going to save? You need to know what your post-tax income is and budget from that. You need to know how your savings are going to come about. Thirdly, you need to plan for your loan repayments, which are generally quite a large part. If you have taken a car loan.
Are there rules that govern this?
Yes. So we'll come to how to really split, your post-tax income. Then, of course, you also have to plan for your taxes, because today, when you're compliant, you do have to give some money back to the government. And lastly, you should also plan for an emergency fund. So all of these financial guidelines kind of, take you towards this. There is a broad thumb rule of budgeting. To keep it very simple, I would call it the 50-30-20 rule. It differs. I mean, some people would be able to save much more. Some people are struggling to make ends meet. But what the 50-30-20 rule says is that 50% of your income would go towards necessities, which would include your rent or EMI, depends whether you're in a rented accommodation or not. 30% could be for
your
wants.
Lifestyle expenses.
Right, so needs are your basics which you have to take care of. 30% are wants. You have to live a little, you're only young once. It's so important to also enjoy the journey. So we're not talking about a very frugal lifestyle. You must enjoy your money as well. And the last 20% should be kept for savings. So I would say this is a lot of tweaks possible, but this is a good simple rule, because firstly, you don't need a complicated Excel sheet to execute this. You don't need any financial advisor to execute this. You can, compute this yourself.
And that's the bare minimum that you can do. You can, of course, do more.
Yes. So many people can save a lot more. Many people would find even this number daunting. Maybe as their salary increases over time, they may be able to get there. Perhaps today it's not possible. But as they say, it's never too late to start. So perhaps at the initial years of your career, it may be a stretch, but as you move ahead, do this. I also know a lot of people who work backwards. They're so motivated to their end goals that they decide how much they want to save. They subtract that from their income, and what's left is all they allow themselves to spend.
Wow.
So that's a highly disciplined, committed way to your future goal. So it's all about the motivation, what it is that you're trying to achieve, and how you stay on the course.
So you mentioned 1 lakh, but I know a lot of people that are sub 25 that are much, much lower than that. So we're talking about 5, 6, 7 lakhs even. People are starting with that. Of course, they do grow into that 10 lakh, 12 lakh bracket, but it takes a good 5-7 years for them to get to that point, which is not to say that they can't start, right? So are there any calculations that you've made that may, lay out this journey that they can take up for them to reach this 1 crore mark?
So, Alex, I'll start by saying that there are three main parameters around which, this journey to 1 crore wealth creation begins, right? So one is, how many years do you have to accumulate this wealth? Whether you're starting at 25 or 45 makes a great difference,
right,
to this outcome. Secondly, how much are you able to save? So whether you invest 20,000 a month or 50,000 a month, for example, would also make a great difference to the final outcome.
Yeah.
And lastly, what is the return on your portfolio? So whether you're starting with a, initial saving of 5,000, whatever that number might be, maybe try and use the 50-30-20 rule. So if your salary is not 1 lakh a month, it's 50,000, you can still apply the rule and you would still have, say, a 10,000 rupee SIP to start with. So somewhere I think that journey must be begun. And if one is disciplined and carve aside that saving right at the start of the month, rather than it being a byproduct, okay, now the month is over, what do I have left? I think you can start on the journey irrespective of what your salary is. So that's what I genuinely believe. And eventually, as you tweak each of these metrics, you will see how the journey becomes quicker and quicker. So I'll take an example. Say I'm investing 20,000 rupees a month as an SIP. I do nothing with it. It's lying in a bank locker under my mattress. It'll take me a whopping 42 years to get to 1 crore, well past retirement age.
Right.
If I were to tweak one parameter, that okay, it's not lying under my mattress, I'm earning, say, 12% return through a simple mutual fund SIP.
Which is reasonable.
Which is very reasonable. Equity has given 14% return in the last 20 years. I find that number from 42 years comes down to a very doable 16 years. If I tweak the third parameter, how much am I investing? Say 20,000 goes to 50,000 a month. That 16 years comes down to 10 years.
And it's not incremented. It's 50,000 straight over.
So I'm not even talking about stepping up your investment. Now, coming back to your point, suppose initially my salary was much lower. I was starting with much less. There is a concept of, say, a step-up SIP.
Yes.
Right? Which basically says that if you invest 20,000 and stick with 20,000 for, say, 16 years, you'll get to 1 crore at 12%. Even if you increase that slightly, let's say you're doing well, you start getting, a jump, a promotion, an incentive, increment, and you take that up by, say, 10% every year. So you start with 20,000, you take it up by about 10%. You'll find that 16-year journey has come down to a 13.2 year or something like that, which means that all the money that you're getting by way of, say, an increment should not just go into increasing your lifestyle, equally should be, channeled towards increasing your SIP. So even these small tweaks, no matter what salary you're starting with, will eventually get you there. Slightly slower or slightly quicker, but if you're able to stay these courses, use these very, very simple guidelines, you will certainly get there.
But it's still a considerable amount of time, Shalini. We're talking about 13 years, even if you've started at 20,000 rupees and you've incremented it by 10% per year. And we're assuming 12%. Of course, we've gotten more than that in the past, but there's nothing to assume that we will get that in the future. So it's going to be a considerable amount of time. Now, having said that, I want to understand why it is so important to hit that mark and how quickly things can escalate going forward.
Sure. So this is what we call the magic of compounding, Alex. We all know about it in theory, but I'm very keen to explain it through, again, another very simple rule. I'm all about rules today. So we call this the 8-4-3 rule. So one is, of course, start early. Just to take our example, even at 25, if you started this journey, even with 16 years of getting to 1 crore, you're still only 41 years old. So it seems like a considerable time, but at the end of the day, you still have almost perhaps 20 years of a earning life ahead of you, and you've already hit the 1 crore mark. Now, coming to the power of compounding, what the 8-4-3 rule says is that once you start investing, say, at 12% return, let's keep the same example, it takes about 8 years to double your money.
Sure.
The same amount which has taken you 8 years to create, it'll take you only 4 more years to create the same amount.
With the amount that you've accumulated.
Which you've already accumulated. Right. And the further doubling happens in only 3 more years.
Right.
Right? So basically, again, coming back to our 1 crore example, say I do a 21,000 rupee SIP every month. At the end of 8 years, this amount will be about 33 lakhs. It'll only take me 4 more years to do the next 33 lakhs and another 3 years to do the next 33 lakhs.
Right.
So by the time I'm 15, 16 years through the journey, I have accumulated this 1 crore. let's assume now I take early retirement, I don't want to slog it out anymore. Even if I do nothing to further add to this corpus, 1 crore in 6 odd years becomes 2 crores.
Yeah. Rule of 72.
Yes. And if I don't do anything and don't touch it, in another 5 years, it would have doubled to 4 crores. So same example, start at 25. By 51, I'm now sitting on 4 crores. So the power of compounding says not only am I earning on my initial capital, I'm also earning on the return. And as the amount gets more and more scalable, you'll find that it becomes a snowball effect. So the first 8 years is slowish growth, but steady. The next 4 years, it accelerates. And by the final 3 years, you have the snowball effect. So I think that is really the power of compounding and starting early. I think everyone can think about retiring at 41 in case they follow this rule. Just think about it, 4 crores, even if it gives you a 10% return, you have a 40 lakh income every year.
Absolutely. Yeah. And the beauty is that if there are periods of significant outperformance that can give you a leg up as well. Sure. Like we've seen over the last 5 years, we've seen a tremendous journey in the equity markets, which has resulted in wealth creation for a lot of people. Now, it goes without saying, therefore, Shalini, that if you get a leg up, if, for example, like my dad, he wished that I would do a certain educational course, and I decided I'm the black sheep of the family, so I decided not to. And 5 years back, he said, look, I wish that you would have done this, but since you didn't, I'm just giving you the money, you do what you want with it. And thankfully, I decided to invest it. Now, if you do get a leg up, it's a significant benefit if you use it right.
Sure, right? You could receive an inheritance, you could receive a large bonus in a good year, some of your shares did well, you cashed out, you could be a business person, you've had a particularly good year. So there are a lot of these instances where, you're able to add significantly to your kitty, and then you have even more time and even more money on which to compound. So somewhere I think the strategies and the habits that you inculcate in this journey become second nature, Alex. And money gets money. So once you've pushed through that first 1 crore benchmark, as you talked about, it might seem a little daunting at first, but once you step through that door, so to speak, you just kind of take off and you just accelerate to even greater wealth. So I think that is the magic of this 1 crore number.
So the thing is that when people look to achieve this mark, it is so, it's so beguiling, it's so aspirational, it's so interesting to have, and you dream about this moment, you want to reach there faster. And so unfortunately, people tend to take on too much risk. How do you go about identifying how much is okay? Because a lot of people tell you that investing in small caps is great for you if you are early on. In your example, if you were 25, and if you're talking about building wealth over 15, 16 years, you don't need to touch that now. So you could potentially have tremendous growth, but some people take on too much risk. So how do you justify that?
So one is the principle of asset allocation is also really important. So if you think of the main broad categories, say equity, debt, real estate, and gold, right? It's so important to have a balanced portfolio, to have some of those assets in your portfolio, no matter what stage of life you're at. A lot of these asset classes have a very low correlation to each other, which means no matter what the market cycle is, some pocket of your investments will perform. And this is important because, there are certain market cycles where, say, for long periods of time, equity may not do well. Yeah. And perhaps it's the real estate part of your portfolio, or, maybe the gold. Gold has been such a surprising asset class. You never thought about it seriously, but, it's been doing great things. So
25% so far this year, approximately.
Amazing, right? Otherwise, you just think inflation beat or just helping us keep up with inflation. So all these asset classes have very different cycles and very often not correlated to each other. So that's very important for a portfolio construction. Now, at different life stages, obviously, of our life, our ability to take on risk changes drastically, right? Affected by a few things. What is our income? Is it stable income, or are you like a gig worker or, a freelancer? Secondly, what are my expenses? Thirdly, what are my responsibilities? When you're young and single, it's just all about you. Then you get married, you have kids, their education, older parents. So that as well determines how you're able to invest. The other thing is age. And lastly, I would say market dynamics, because at all points of time, markets throw you curveballs. So, you do need to readjust. So the broad thumb rule for asset allocation, which is where really risk gets mitigated, is again a rule of 100 is a very standard thought, which says that 100 minus your age is how much you should have in riskier assets.
Okay.
So for example, in equity, you could have various types of equity, say direct equity, you could have, that is you're buying
mix,
stocks,
right.
you could have equity mutual funds, private equity, international equity. Then you have the whole debt bucket, which would range all the way from, say, FDs to PPF to debt mutual funds, InvITs, REITs, the range is immense. You have real estate, again, through a fund, or you buy a physical apartment or a shop on rent, you give out on rent, or a piece of land. And lastly, gold, which you might buy an ETF or a coin or, jewelry for your wife. All of this.
Husband.
Or husband, yes. So all of this can go potentially into a portfolio. So as you can see, individuals have a very wide spectrum through which they can construct a portfolio. The riskier assets would perhaps give you somewhere from 12 to 15%. Your fixed income can give you anywhere from 5 to 10%. And accordingly, real estate, gold would also be, in that 8 to 10% range. So it's not just equity, for example, which is the path. Like you rightly said, if I was 25 years old, the rule of 100 says that I can have 75% in risk assets and 25% in safer stuff. And that reverses. By the time I'm 75, I would have, only 25 in riskier, enough money coming in. So taking on undue risk, I think, is a problem. In fact, as we were discussing, Alex, to our mind, what we learned conventionally in school and college, that higher the risk, higher the return, we think of it as a straight line.
Yeah.
It really isn't, because after a point, there is an undue amount of risk that creeps into a portfolio, either by taking only small cap funds, because that's in favor, or micro cap funds, or you buy really risky stocks. Now, what could happen is it all does well for short periods of time, but since we're here for the long game, at some point when markets turn, you can see a significant loss of capital.
The bottom falls out.
The bottom falls out, you cannot catch it however good you are. So which means not only have you lost return, you've also lost your principal. So to our mind, risk return is more like a bell curve when you're investing, which means that the path to high returns is not very high risk, it's moderate risk. Because that very high risk comes back to bite you in ways and at times that you least expect it, eroding even your capital.
So it's not a, it's
not a linear,
it's not a linear progression.
Trending.
There is a reversion to the mean.
There is. And once your capital starts to erode, then all the good work you've done over the years gets undone and can set you back by many years. And then time is not on your side, so you can't always catch up. So it's very important to have the long game in mind, like I keep saying. Think about not 1 year, 2 years, what's happening now. Don't watch the news as much. Don't get carried away by what other people are doing.
Don't say that.
But, jokes apart, I think it's very important to stay disciplined and not get carried away that this is what everyone's doing. This is what's sounding really cool, easy money. How many direct equity investors do you talk to who will tell you about only their success stories? And rest assured, having met many of them in my career, I would say for every success, there would be at least 2 stocks that they've lost tremendous amounts of money on, which they're not really talking about.
And so it balances out.
So eventually, it's like 1 step forward and 2 steps back. And when you're trying to create a long-term wealth journey, that can be pretty counterproductive. So just consuming risk in the hope that it plays out, again, I would say can be extremely counterproductive to this 1 crore journey for sure.
A significant milestone, of course, is that 1 crore mark.
Yes, absolutely.
Thank you so much for joining in and for speaking to us on MoneyWise. And, well, here's my wish to you. I hope that you accumulate this 1 crore very quickly and you have the option of sipping coconut juice or kawa in the hills, whatever you like, earlier than maybe some other people in years gone by have achieved to do. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome. This is India Market Close. Well, at the moment, we are at the final trading day of this week, which has been, well, nothing short of volatile. But it does seem like we're set up for at least a positive end to this trading week. And along with that, the Nifty up around 1%. Back above the mark of 24,000, which seems to be a little bit of a perennial battle off late. And, you know, the Bank Nifty also advancing, but not a lot of gains coming in on account of banks. It's essentially and largely a lot of names beyond the banking sector, which is actually contributing to the up move on the Nifty. So let's take a look at the heat map. So firstly, a significantly larger number of gainers on the Nifty 50 today as compared to yesterday. In fact, we have less than 10 declines, and substantial gains for something like a Bharti Airtel, Sun Pharma, Cipla, M&M, along with Adani Port. So a lot of gains coming in there. And on the losing end, we have a little bit of weakness in HDFC Life and SBI Life, something that we've been talking about this morning as well. Power Grid under a little bit of pressure, but we don't have too much selling coming through as far as your names in the Nifty 50 are concerned. Let's move on and talk about the advanced decline ratio, and that's where you will see a positive market breadth, which always is taken as okay. So we've actually seen a little bit of broadening of the breadth in just the last 1 hour, which is of course again a positive. We have about 13 gainers for 8 losers, which is not bad, which is not a terribly bad ratio. And with that, let's also take a look at the broader markets then. The mid cap index and the small cap index are also advancing, but not to the momentum with which we've seen that in the benchmark. So mid cap index up around 0.3%, the small cap index is also up around 0.5%, and if you enter the F&O segment today, we have an up move and easy trip. Piramal Pharma is up around 8%, Lloyd's Metal up around 7%, along with Praj too. And what's under pressure is Credit Access Grameen on the back of that big downgrade from Goldman Sachs. Poonawalla FinCorp, Triveni Turbine, and Home First Finance along with KPIT Technologies under pressure, but the momentum in terms of selling is not been as much. I guess it comes down to how things could potentially pan out in today's day of trade. But that is what we have in terms of markets so far. It's unlikely that we could see any change in the last 1 hour trade, but you can't ever tell, especially given the kind of volatility that we've seen here. But yeah, this is what we have in terms of markets right now. Neeraj?
Well, let's try and get a sense of what to do in a scenario like this. Nagraj Shetty, trader of HDFC Securities, with us on the show. Nagraj, good having you. Thanks for joining in. How are you looking at trade this afternoon?
Hi, good afternoon, Neeraj. The bounce back of Nifty is indicating that yesterday's decline in the market was indicating like a bad trap after range bound actions. And the overall near-term trend setup remains positive for the market. Yesterday, we have seen some attempt of downside breakout of the range movement, but immediately market has bounced back. I'm expecting this time the market is likely to not only reach towards the immediate resistance of around 24,350 odd levels, and even it could surpass above the hurdle in the coming next few sessions.
Nagaraj, top picks then at the moment for you?
Yeah, I have two stock picks from the mid-cap segments. First one is Praj Industries. If you look at chartically, Praj Industries has witnessed a decisive upside breakout after moving into a larger range bound action in the recently and currently placed at the higher levels. Overall chart pattern is looking positive. Even volume and RSI has broken out of the range, which is indicating August well for the buying. Currently trading around 844. One can buy Praj at current market price, and immediate target would be around 895. One can place a stop loss at 815. I have another stock that is one Majgaon Dock. Chartically, Majgaon Dock was moving in a range bound action over the last couple of months, 2-3 months, and recently on the weekly chart, it is placed at the edge of breaking above the downsloping trend and resistance around 4,600 levels. The overall chart pattern is looking positive. It has moved above the weekly 10 and 20 period EMA, all set for the upside breakout. I'm expecting this to move further. One can look to buy Majgaon Dock around 4,612 or 13, which is the current market price, and target would be around 4,950, and one can place a stop loss at 4,450.
It's interesting that you've spoken about Majgaon Dock, but there's yet another company from the defense sector which has been holding up its gains, and that's Bharat Electronics. What is your reading here? Because it's currently at about 310, and of course it's certainly at a several-week high. But do you see more strength in this counter at this point?
Yeah, similar to that Majgaon Dock, this chart pattern looks like, and I'm expecting it has indeed broken above the range hurdles and likely to move further. I think the next overhead resistance to be watched for this stock is around 335 to 340.
Okay. You know, the interesting thing, Nagaraj, according to me, was that some of these stocks in the IT space, which had corrected quite sharply yesterday. Very quick 30-second view. Are you negative IT, or do you believe one can accumulate large cap IT?
IT as a sector, I'm bullish. It has recently showed some good outperformance. Currently showing some consolidation, and any consolidation or a dips is going to be a buy on dips opportunity for the IT sector as well as the IT frontline stocks.
Okay. Well, you know, I would want some views on some MFI stocks, because Credit Access Grameen has been the center point of attention today after the Goldman Sachs downgrade. Mahima has spoken about this all through the day. Johnson right now to tell us some of the key points. And Mahima, I mean, now that you've read the note so many times, is there something that really stands out in that note?
Right, Neeraj, so as you rightly mentioned, the stock is seeing a lot of pressure because GS has downgraded the stock to, double downgraded the stock to sell, and they've cut the target price to 564 from 1426. Now, there are three key takeaways that stand out in the entire note. First one being that they expect a further buildup of stress due to an over leveraging in the industry. Secondly, they were negatively surprised by the accelerating decline in the asset quality which took place in Q2 FY25. And thirdly, the note says that they view the recent sector derating as a structural rather than cyclical change. So these are the three key main factors why Goldman Sachs has double downgraded the stock, and we've seen the stock reacting negatively throughout the day.
All right, Mahima, thanks for getting us that update on Credit Access. But Nagaraj, the same question for you actually. Well, the stock seems to have taken quite a hit today. Do you think that at this point in time, would you go ahead and perhaps sell for everyone who's going long? I believe this one is only in the cash markets. So what's your opinion here?
I think this was in a downtrend over the last intermediate downtrend over the last many months. We have seen some lower tops and lower bottoms formations on the daily and weekly chart, which is indicating a strong downside momentum in the stocks. Recently, it has made an attempt to show upside bounce, but on the news, on the backdrop of the news, it came down again. I'm expecting a small upside bounce from the lower levels, around 850 odd levels. And again, if there is any positions left, can be exited at the higher levels on the pullback, bounce back from the lower levels.
Okay. Vineet Bolinchkar with us as well. Vineet, good having you. Thanks for joining in. Vineet, before I talk about a call on which you went stupendously correct amongst many, of course, and that is the Adani Group stocks, I would want to talk to you about the MFI space, Vineet. There is stress today. One of your peer groups, Goldman Sachs, downgraded the stock. That's down about 8.5%, 9%. What is your personal view? If somebody is holding on to the MFI stocks, is it prudent to get out of them? Because some of the things that have been mentioned by Goldman or by Sridhar Shivram of Inam a few days back are not necessarily company specific, but might be applicable to the whole gamut of companies.
So, let's read into what corporates have been saying in their commentaries over the last, the last month when the earnings seasons was out. So we had Nestle, one of the largest FMCG companies, say that middle class has somewhere disappeared. There has been talk of slowdown. Third thing is someone is saying that, the urban consumer has vanished. So, obviously what you're getting a sense of is that somewhere the cycle of liquidity has been compromised severely. And, the earning power of these people are getting affected, which is affecting the spending too, despite the government dolouts of close to 3 lakh crores. Right? So this macro factor will impact the lowest levels of strata significantly. And they borrow money at very, very usurious interest rates. Even 24% in today's times is usurious, right? So I think that the stress is there unless and until the situation at the ground level does not improve. I don't think we are going to see any kind of, positivity come about for the micro sector. And that is going to lead to severe defaults and NPA cycles going up. So I think the good story for these guys is way behind us. And now a challenging period which could last between 12 to 18 months is ahead of them.
Right. Hold a thought, Vineet. It's time to get in an NDTV Profit exclusive, where from what we understand is that there is serious fraud. Where an investigation office which has sealed Hero Electric's premise in Gurugram over FAME 2 violations and unpaid dues to dealers. And my colleague Tushar is now standing by with exclusive details. Tushar, what do you have for us?
So, SFIO has actually sealed Hero Electric's building in Gurgaon over FAME 2 violations as well as unpaid dues to dealers. What sources are telling us that SFIO has served a restraint order to Hero Electric to seal its premises in Gurgaon, has been ordered to not move in part or otherwise any of the equipment kept inside the building premises. Any violation will result in criminal proceedings. Now, we have to remember that it has been actually in violation of FAME 2 EV subsidy norms in the past as far as bundling of chargers was concerned with its scooters. According to a previous NDTV Profit report, about rupees 500 crore is due to dealers which has not been paid in any form until now. What happens next, we'll come to know from SFIO. We are tracking this story.
Wow. Shah, this seems serious. And when would a resolution of any sort for something like this can happen?
I tried to reach out to Naveen Muljal, the managing director of the company, and he was unavailable on WhatsApp texts or calls. The company's spokesperson actually directed me to him. So there's no concrete statement so far from Hero Electric. SFIO can only talk about it. This is basically a developing story at this point of time.
Got it. But thanks for breaking this, Tushar. This is important and a big corporate story. And thanks for bringing this to us. Well, some of these electric vehicle two-wheeler companies could be not because of this, but certainly it's a fast-moving piece, and therefore everything which is electric vehicle linked could be in focus over the course of the next 12 months as the pace of competition picks up. This is, of course, more regulatory action that has happened on an unlisted stock, by the way. Keep in mind, the listed Hero has no connection to Hero Electric per se. But Vineet, speaking of this, Ola Electric last couple of days has had a really good move. Do you guys track this one? Were you constructive there? Are you constructive now? What's the sense?
So, I think Ola will definitely sustain the kind of growth rate that they are talking of. And this is despite the fact that, the market which was saturated with many players is now gradually devolving into a 3 to 4 player market. And with all the biggies being there. So what I believe is that Ola will sustain. Pricing points are extremely attractive compared to a Honda, which launches a similar vehicle at double the price. And, people are going to go for these vehicles. Yes, there have been a lot of concerns around quality after sales service, but the company is rapidly ramping up. And in my mind, I think, Ola in its transition from a higher taxi mode, is moving to manufacturing and should do really well. I think the price of this stock should be somewhere around 140 over a period of the next 2 to 3 years.
Vineet, I want to talk about defense stocks as well because, you have a ever so slight up move in some of these counters which hit life highs just a few months back. And after the outcome of the elections, we had a little bit of temperance in the likes of Mazgon Dock, Cochin Shipyard, some of the other naval names like Garden Reach. But even if you look beyond, something like a Hindustan Aeronautics, right now we have something like a Bharat Electronics. We're seeing a little bit of an uptick coming back here. What is your stance here, especially given a lot of these companies have very, very lumpy revenue recognition and hence the profitability varies from quarter to quarter, but it does seem like when it comes to an annual outlook, it seems to be strong. So at this point in time, if you consider just the valuations, do you think that they're in a slightly more comfortable place to get into?
My contention is that India needs a lot of defense and we are doing the right things by indigenizing everything. Two is, if you see the globe, America, Russia, Israel, and France are the countries which is to export the maximum. All of them are at war. And in that kind of a situation, India has quietly and stealthily started relationships on defense with almost 190 countries. It could be components, it could be ammunition, it could be spares, it could be services. But, India has set up a platform and, our products are extremely competitive in pricing compared to what the United States does, right? Countries would shy away from buying Russian-made equipment because they would get sanctioned by the West. And therein comes the play for India, which I think Indian players are geared to benefit from this, not only from a resurgent domestic market, okay, but also the export opportunity. So to my mind, I think this sector is going to do really well, and it could be one of the sectors which could, kind of buck the negative trend that we are seeing in the markets. Early green shoots of a revival, and I'm quite positive on them.
Okay, that's as far as the defense sector is concerned out here. I want to pull up another interesting counter, and that's Anup Engineering. It's called the Anup Engineering. It's up around 2.5%. What we've seen is a little bit of consolidation now at the moment over the past, I would say about 2 to 2.5, 3 weeks. This is after, of course, following very strong set of earnings coming in, which actually was followed by a very sharp surge in the stock. But let's take a technical view here. Nagraj, can you pull up Anup Engineering and tell us what your view is? Do you think that at this point in time you'd want to initiate longs, or if not at this moment, at what point in?
Anup Engineering, technically, the chart is looking positive, continuously moving up. We haven't seen any sharp declines so far for the stocks, and higher tops and higher bottoms on the longer term charts, indicating the strength of stock price. I think this uptrend, what has started recently, is likely to continue, and the next resistance to be watched around the 3,800 levels.
All right, Nagraj, hold that thought. But on that note, we slip into a short break. But stay tuned, lots more lined up, and we'll be back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
News just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At
Welcome back. You're watching India Market Close, and it's looking like a happy Friday. What a turnaround, really. Look at the heat map for the Nifty, which is now 1% up. I mean, 24,000 crossed and sitting. This morning we were wondering whether we would hold on to the 23,900 mark. So it's been a good day. Let's just pull up the intraday chart for the Nifty to give you a sense of what that move has been looking like. The Bank Nifty also not half bad, about 1/4 of a percent point up. But yeah, close to the day's high even now as we see. We'll pull up the heat map very quickly as we see what is really powering, and most stocks in the green. I'll start with the losing side. SBI Life, HDFC Life, insurance play in focus for a variety of reasons. Both of these companies came out yesterday, last evening, and said that they are clarifying that any possible move by the regulator of insurance companies, the IRDAI, to cap the amount of insurance. We should pull up the contributors, the Nifty contributors, just to give you a sense where that strength is coming from. And Bharti is the big one, contributing almost 42 points, followed by Reliance, ICICI Bank and L&T. So those are the top four. On the losing side, HDFC Bank seeing a bit of pain. But Neeraj, even though the indices look good, I mean, the question really is whether the broader markets are following and whether advanced decline ratios and other indices are following through.
Yeah, I mean, it remains a key question for sure. And just look at what's happening to any of those broader end of the spectrum stocks. Actually, let's just get the heat map up on the screen for a moment, or the advanced decline ratio for a moment. And then we'll get to tracking the move of some of these stocks. But the market breadth first on your screen. And you will see, quite unlike yesterday, there's a yawning gap, but in the positive. So the market breadth has looked very, very strong in the session today. Just very quickly, a few stocks that you should watch out for. And just tracking the moves of some of the winners. So if you look at Adani Green, for example, or Adani Energy Solutions, as the case may be, some good moves there today. But if you look at the 3-month, 6-month, 9-month chart, well, the stocks may have been a bit languishing. But Piramal Pharma is the other one, which has actually had a really good move today, and that supplements the kind of move that the stock has had the last few. The losers, unfortunately, Credit Access Grameen, down 8% today, key loser, and has been that way throughout the last 12 months. Similarly for a Poonawalla FinCorp, 10% down over 3 months, over 6 months, 21% down. And Triveni Turbine, after having a really good move though, is correcting. So no patterns out there, but select stocks, particularly the financials, have looked very, very wobbly in trade. The winners for today, I mean, just one last mention of the BSE 500 winners and losers before we get to G. Chokalingam of Economics Research. The Adani Group stocks, there is Piramal Pharma, there is Lloyds Metal, Hudco, Praj and LIC, which is the new kid on the block, if you will, on the FNO side. On the losing side, aside of Credit Access Grameen and Poonawalla FinCorp, which we discussed, KPIT Tech stands out, as does Colgate, which is taking a bit of a breather after a really good rally in the recent past. G. Chokalingam with us. Mr. Chokalingam, good having you. Thanks so much for taking the time out and being with us on the show today. The MFI space, and we talk about Credit Access Grameen, has had a really sharp pullback today. A lot of stocks are cracking, particularly Credit Access. Are you negative for somebody having those stocks in the portfolio? Is it better to get out even now?
We have been negative on these kind of finance companies for simple reason that the competition has intensified and multi-layer of competition has come in the finance services field, particularly lending side. And secondly, the whole industry, including bank and NBFC, all put together, there has been a considerable slowdown in the credit growth also. And even in the listing space, the competition has increased to attract the investors to invest in such companies. So therefore, I have been negative. I continue to be negative. Of course, they are all beaten down very badly. To get out, one can wait and see whenever there is some, technical bounce or some tactical recovery. That opportunity can be used to exit. And I am of the firm view that opportunities are plenty outside these finance companies.
Okay, so obviously Credit Access Grameen having a tough day as was expected after a double downgrade from Goldman Sachs. But we've kept the focus on Adani stocks. They've been surging for the past 2 days of trade. A lot of positive news which has come in for the last 24 hours or so has also fueled it. And Agam is joining us for more details on this.
So we have a whole host of institutions and entities across the globe coming in support of the Adani Group companies, especially following and in the wake of the group releasing that statement suggesting that the key members in there, Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been implicated when it comes to certain charges with the FCPA. And on account of that, we have more and more good news coming in. I'm going to start off with Kerala, right at home, where they have in fact signed a supplementary concession agreement with the group when it comes to the Adani Verinium Seaport. And this actually paves way for, well, earlier than expected when it comes to revenue gains from the Verinium Seaport. Of course, the port will be fully operational by 2028, but it's not just Kerala. Moving on to, well, the former Andhra CM, Jagan Reddy, who has also refuted claims with respect to bribery and the Adani Group, and in fact has also suggested that he may look to sue for as much as 100 crores when it comes to media companies reporting these incorrect, allegations. Moving on, we also have a lot of updates coming in from Africa. Tanzania has in fact extended its support. Back in May of 2024, the Tanzania government had signed an agreement with the Adani Group company. This was to operate one terminal in Dar es Salaam, and well, Tanzania is suggesting that there's no change in that agreement. Neither has there been any change with agreement when it comes to the Sri Lanka Port Authority, where once again the chairman has said that they're not looking to cancel any of these terms of agreement. Well, moving on, we also know that Abu Dhabi's IHC is unworried about the outlook of the Adani companies, and they haven't made any changes with respect to their investments in the Adani Group companies. But even later on today, we had an update from CRISIL where they have in fact reaffirmed their positive outlook, and they cite strength of the group's financial and business profile. And they also say that allegations haven't led to any negative actions from lenders or investors. And in the latest, we also have a whole host of Japanese banks lending support to the Adani Group company, where in fact Someone like Mizuho Financial Group has suggested that the charges will not have any long-term implications, and there are no plans to pull back when it comes to Sumitomo Mitsui or Mitsubishi UFG Financials. So all in all, a lot of entities from across the globe coming in support of the Adani Group companies.
All right, thank you so much for that, Agam. Kunal Shah joining us. He is Senior Technical and Derivative Analyst at LKP Securities. Kunal, very good afternoon to you. Let's start with your take on the indices. Showing some kind of a pullback. Question, of course, of whether this continues into next week. What would be your position?
Good afternoon, Tamanna. Definitely, we have seen the volatility move in yesterday's in the Nifty index because of the expiry. So the undertone continues to remain bullish. We are bullish on the index. We feel that Nifty will go towards the mark of 24,700 in the very short term. So it's a buy approach. 23,900, 800 is a very strong support zone. So I think that support zone will not be breached. And eventually we are expecting 24,700 on the upside. So it's a buy even at the current levels. And even if you get any dips on the downside, that should be utilized to buy the index. Coming back to Bank Nifty over here, Bank Nifty, yes, it has been consolidating in a broad range. Bank Nifty still needs to have trigger on the upside. So that might continue to consolidate. Nifty might continue to outperform on the higher end. So we are bullish on Nifty, be aggressive. Bank Nifty, wait for a breakout above 52,200. Once that is taken out, then one can initiate long positions.
Okay. And what would be your stocks on your radar this afternoon, Kunal?
So I think two stocks here I would like to highlight. First is LIC Housing Finance. Again, the setup is very good. The stock has been making higher low formations on the daily chart, has been in the oversold territory, and now witnessing a bounce from the lower levels. So that is a buy from the current levels, keeping a stop loss of 630, looking for targets of 645 to 651 on the upside. So LIC Housing Finance is the first pick. Second stock, which I like over here from the current levels on the stock perspective, where we have seen the broader markets being participative. Pharma as an index has been doing quite well. So Zydus Life is showing early signs of bottoming out. So here the bottom has been made. The stock has been a big underperformer in the recent times, and now we can see a good pullback rally on the higher end. So Zydus Life is a buy at the current levels. 940 is the stop loss. 1,000 and 1,030 are the targets on the upside.
Okay. Well, and thanks for that, Kunal. Speaking of pharma, that space is, well, you could argue is on a bit of a roll. The CDMO companies in particular are the focus of attention. Divi's Lab is gaining after Citi's buy number from buy report, but more than just the target, I think it's the nature of the commentary which is very interesting. My colleague Varsha looks at this space very closely. Varsha, tell us what Citi is saying and what's happening in this space, independent of what Citi is saying, because there's a bit of traction out there for the CDMO players.
Yes, Neeraj. So one of the reasons why Divi's is actually buzzing today is because of the Divi's being the contributor when it comes to US Biosecure Act. So Divi's will be one of the companies which will gain a lot when it comes to US Biosecure Act, because Divi's is already into custom synthesis business, which so Divi's make API for innovator companies, which forms almost 50% to their overall sales. But I want to highlight why Citi has given buy rating to Divi's. So one of the reasons is, so the note actually gives a whole perspective of one of the drugs called Entresto. So Divi's make API for this hard drug Entresto, which is made by the innovator company called Novartis. Now, US court decision to stay for approval of the generic version of this hard drug has brought relief for the Divi's Lab, because the potential generic launch of this product could have intensified competition affecting sales for this API for the Divi's. Now, Divi's CDMO, if you see, so this drug actually forms 8% of the total sales for Divi's when it comes to FY24, and forms 19% of the overall CDMO sales that Divi's does for FY24. Now, the second, so Citi feels that this
entrance to API drug could actually increase for DVs rather than street expectation of a decline. So one good thing for that. The second reason that Citi has given a buy rating is contrast media pipeline. So DVs is close to launching 2 contrast media products. Now contrast media is nothing but which is used in your image. So radiologists use contrast media for better pictures. Now 4 more products are actually in early stage of commercialization, showing strong future potential for DVs. Now the third reason why DVs has been given a buy rate is the US Biosecure Act, which we have already spoke about. But the interesting thing according to me, Neeraj, here is one is their custom synthesis business, which DVs is actually seeing rise in the inquiries that DVs has been getting, and this quarter in Q2 we saw a good growth when it comes to custom synthesis business, which forms almost 50% for DVs. The number 2 reason why I feel DVs can have a good growth is robust pipeline when it comes to generic products. So there's a $20 billion opportunity when it comes to DVs for generic products, which will start contributing from FY26 on the back of patent expiry that DVs is expecting.
Okay, so that's the Citi view on Divi's lab. I mean, we've covered pharma, but quick and good to revisit a stock and a sector which is completely roaring. It's not just Divi's. Look at Cipla, look at Sun, the entire space doing pretty well today. Choka, do you see anything exciting here that you'd pick up and this momentum continuing?
Momentum may continue because, as all of us know, Mr. Trump has not included in India in any of his protectionism policies. So, which is very favorable to pharma because India depends heavily on US for 2 major sectors. One of them is a pharma, apart from IT. The second, the rupee has been depreciating, and FIs have been selling, and they may continue to sell in the short term, which could weaken rupee further. That is also positive. And third, any adverse development against the imports from China would also favor Indian pharmaceutical industry in terms of exports. So therefore, I believe the current momentum may continue in the pharma stocks.
And Kunal, take on Divi's, Cipla, Sun. What is your favorite in this space and Divi specifically?
I think firstly we'll talk about DVs here. I think on the technical charts, it has been consolidating in a broad range. In the weaker market, a stock consolidating is a good sign, and now it is showing signs of fresh breakouts on the technical chart. So clearly a bullish bias from the current levels. We can see for the short term, the stock going up to the levels of 6,400, 450 in the very short term. So DVs is a buy for me at the current levels. And even Cipla, that is something which is looking interesting at the current levels. We have already seen a good amount of correction from the higher levels. Now the stock has broken out about the previous 7-week high with trading volumes, as well as the stock has surpasses 20 DMA as well. So clear cut a buy signal from the current levels for Cipla as well. I think it can easily go up to 1580, 1600 levels in the short term.
Okay, well, certainly active, some of these pharma names in trade today. The other one which is very active today, Kunal, is Airtel. And that stock is up about 4%. As the Nifty, by the way, roars higher to 1.12%. Look at Airtel, 4.5% higher. And the points contribution shows that telcos probably have it in them. I reckon that the move in Reliance might also be linked to that maybe. I doubt oil and gas has anything. So Kunal, but Airtel is the name that I wanted your view on. Big roaring move today. From Airtel's parlance, 4.5% is indeed roaring. What's your view here?
Yeah, I think exactly from the current levels, what I see on the technical chart, that the corrective decline has been completed for Bharti Airtel. Now it is ready to test its all-time high level as well. So I'll not be surprised that the stock is going to surpass its recent high what it made. The recent high was made at around 1779. So I'm expecting even that level to be touched and breach on the higher level. So 1630 is where it is trading. The support on the downside is now placed at 1560, 1570 zone. So till the time these levels are not breached decisively, the view remains bullish. You can keep 2 targets. First will be 1690 on the upside, and second will be 1750 or 1770 on the upside.
Okay, it's a day of NDTV Profit exclusives. Frankly, I mean, it's raining exclusives today on NDTV Profit. And to talk about another big one coming in, the Finance Ministry has received the Oil Ministry's request on scrapping windfall tax. My colleague Shrimi Chaudhary joins in with more details. Yes, Shrimi.
So what we are picking up from the top sources in Finance Ministry is that, they have received this request from Petroleum Ministry on scrapping the windfall taxes, which has been levied on export of petrol, diesel and aviation turbine fuel. So what is happening here is that Finance Ministry said that we are evaluating the request, because the global crude prices is being stable for some time. But there is no decision has been taken yet on the idea. In fact, they are also contemplating whether to keep a provision, in a way that it should be zero and not scrapping it fully. There are also talks on, whether to bring natural gas under the ambit of, GST. What the sources is also telling us is that the Petroleum Ministry also pitching to, make this inclusion in the GST purview, which they are also, looking at, and it may be the part of GST Council meeting agenda, which is slated for, December 21st. Remember, when the GST was introduced, it was explicitly, mentioned in the regime that GST Council shall recommend the date on which the GST shall be levied on the petroleum, crude or high-speed diesel, motor, spirit, etc. But any call needs to be taken by GST Council as far as, the date of taxation is concerned. So we are getting hint that it could be the part of the upcoming GST Council agenda as far as, bringing these petroleum products in the GST ambit. On the windfall tax, they are still evaluating and no decision has been taken yet.
Okay. Thank you so much for that, Shrimi. And, it makes sense because the question is that are these companies going to see huge windfall gains? So how does this development impact the listed players in this space? Mihika joining in for more perspective on that. Of course, she tracks the sector closely. Yes, Mihika?
Yeah, thank you for that, Tamanna. You actually saw some uptick in the oil exploration company, that's Reliance and ONGC, intraday high of over 2%. Now, the potential scrapping of windfall taxes is positive for these companies because it means...
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators.
All right, back with India Market Close right here on NDTV Profit. Let's talk about some small cap winners or small cap volume buzzers effectively. They could be winning or losing. Anushi Johnson with a list of some of these and why they could be moving in trade. Anushi, good afternoon.
Hi Neeraj. So most of the winners that we are looking in the small cap buzzer space as we speak. First one on the list is Easy Trip Planners, 16.4% of gains. That is the intraday high that we've looked at for this counter with about 8.5 times of volumes. Now what essentially could be one of the triggers is, one is the Nirmala Sitharaman, the Narendra Modi government has approved 40 projects under the Special Assistant to State, and this includes investment of about 3,200 crore to develop iconic tourist centers distributors across 23 states. But what the company has done earlier also, let's just get that in perspective. It was in pact with BNZ Green to promote eco-friendly travel and to integrate BNZ's green APIs into company's booking platform. Second, if you look at it, is Z Entertainment, 5% of gains that we are looking at along with 4.5 times the volumes. This is after Puneet Goenka fails to get shareholders not to be reappointed as the director of the company. 50.4% of votes were against this reappointment. To note that Goenka currently is the CEO of Z Limited. Third one on the list is Praj Industries, 6.8% of gains with volumes of over 4 times compared to the 30-day average. If we do see the trajectory of the stock in the last month, we are looking at some strong gains, 20% of gains that we are looked at. This is especially after companies' plans to triple its revenues by about 2030 and aiming for a 10,000 crore of revenues by FY30 compared to the current revenues of FY30. Along with that, the export mix also they plan to increase to 50% as compared to 29%. And the last one on the list is Jubilant Ingrevia, another stock that has seen some decent returns in this last 1 month period. While currently it is 5% up in today's trade with about 4 times of volumes, it has seen around 12% of gains in this last 1 month. So these are the list of stocks that are buzzing in volumes today.
All right, thank you for that, Anushi. Quite a few buzzers over there. Kunal, any of these that you're tracking? I want to ask you about Easy Trip specifically. Easy Trip is one of those stocks that moves a lot on news flow, no particular news flow today. But if you have a holding on this, is this a time to exit or shore up even further?
I think the stock has declared a bonus and I don't have the updated charts right now. So I won't be able to update on it, but just a holistic view I would like to give. The stock has been quite volatile in the recent times. On the lower end, what I see is the level of 15-16 on the downside, which has been acting as a major support for the stock. So at least from the current level, the risk to reward ratio is favorable for trading perspective. We can expect the stock to go towards the levels of 2021 in the short.
They have the stock now trades X bonus 1:1, and which is why you are seeing that kind of move in it. Just on the entire space, Choka, any view on Easy Trip specifically as a counter and on that space as we're going into the December season? Will travel, leisure, hospitality become a focus for you, and of course the whole wedding season?
Yeah, you are absolutely right. So some momentum can be there in the business, and therefore in the stock price also. So therefore the investors can continue to hold Easy Trip.
Ashoka Buildcon, there was a flash. Ashoka Buildcon, I think, amongst all the order wins that they've gotten, there's one more order win that came in. I think the stock has just shown a bit of a spike there. So good 3% uptake for that one as well in trade. I wonder if any of these infrastructure names stand out for you, Mr. Chokalingam. Are you buying anything?
Not stock like Ashoka Buildcon. We have a buy call on L&T. Of course, in the mid cap, one can consider JSW Infra. And in a very small cap, we have a buy call on Vindhya Delhi, which is into EPC projects for telecom and water. Particularly for water projects, it is present in UP. Recently, it had an order also from the UP government. These are the stocks we are quite optimistic.
Water, wonder what the new listing is doing as of now. It's into water management plants construction, and 40% is strong. It's not as strong as how it started off, which is about 50-55%, but still a 40% uptick is not bad. And just before I go to my colleague Shubhana, just a couple of other stocks. IG Petro has spiked in trade, so do keep an eye out for that. We were talking about pharmaceuticals. Concord Bio has had a bit of a spike in trade, so do watch out for that too. And Stuffcraft is up in trade. Concord Bio up 4%, but look at that spike. Stuffcraft is up. IG Petro is quite stunning, really, the kind of up move that has happened there. Very strong for that one. Then when I look at that stock spike there, 16.5% and on very strong volumes.
Yeah, so IG Petro want to mark today. For sure, some others which are catching my eye, LIC is one of them. Honasa is the other. I mean, can't see a clear reason for Honasa spike except for maybe now after a whole, I think, couple of weeks of the stock being sold maybe there's some recovery there, but are you seeing, let me ask Choka this, are you seeing a premise for this Honasa spot?
Honasa, I haven't tracked,
Okay.
therefore I'm not able to give my view.
Okay. Kunal, are you looking at it?
Yes, recently we have seen that post listing, the stock witnessed some rally, but now it has been trading below its listing gains as well. So clearly we have seen a good amount of sell-off from the higher levels. I think pullbacks again is what we are getting in the stock on the technical charts. Pullbacks could be an opportunity to exit. I can see again the stock coming down towards the levels of 240 on the downside.
Okay, let's take a look at a UBS Securities note today that has warned of loan defaults by microfinance borrowers have risen in October. So now, add to some of the bad news for Credit Access Grameen, look at a Poonawalla Fin as well. Look at the stock price here. Maybe that's one of the reasons you're seeing that pain point. Shubhana Sheikh joining with more details from the report. Shubhana, any specific companies that have been mentioned in the report?
They have mentioned, yes, they've mentioned certain banks who have exposure to, these microfinance companies like Bandhan Bank, which has a 45%, MFI loan book exposure, IndusInd Bank at 9%, and AU Small Finance Bank. But they still remain neutral on these banks, but they haven't mentioned companies as such. Now, the reason behind, them highlighting this is, after the fact that MFIN, who is the self-regulatory body, last week had announced had tightened certain rules for the MFI industry. Now, what the UBS report basically says is that portfolio at risk, which means that, loans that are defaulting of the outstanding loan portfolio of a particular borrower, that has risen sharply in the month of October as compared to, let's say, March to September. So, in the month of October, these portfolio at risk, which is PAR, that has risen by, 130 basis points just in October as compared to, let's say, a 380 basis point rise in March to September. Now, another data point that they have highlighted is that 1 to 30 days past due loans, for the whole MFI industry, that has risen by 30 basis points on month in October, while for March to September it had risen by 170 basis points. So it shows that defaults are at a rise. They're rising sharply. Now, what UBS expects based on this data points is that they're expecting more loans to consistently move towards NPA, and slippages are expected to remain quite high in the second half of the financial year for most of these MFI companies. While, floods and other natural calamities had affected the collection efficiency of most MFIs, but the pace of rise in delinquency actually shows that, the over leveraging that is happening at the borrower level, that is not going to resolve on its own. So, and also the management commentary that we've seen in the July-September quarter, where they said that they expect, this stress to get over by the end of this financial year. They seem that management commentaries are quite optimistic. Now, earlier on Monday, MFIN, which is the self-regulatory body for MFI, had tightened these rules, and they said that they have to cut the number of lenders to a particular borrower. Let's say a borrower has exposure to 4 loans from 4 particular lenders, so they're going to cut it down to 3. The tolerance level would be 3 as compared to 4, and they've also capped the maximum indebtedness of a borrower to 2 lakh rupees, which includes micro and unsecured retail loans. Now, while UBS Securities, sees this move by MFIN as a net positive, but they expect that this could actually reduce the liquidity of a weaker borrower, and that could result in a quicker rise and pace of delinquencies in the second half of the financial year.
Okay, thanks for that, Shubhana. So interesting pieces around that, and the discussions around this topic, I think, will continue because it's I think the last couple of quarters in particular have shown some chinks in the armor of some of the players here, and therefore needs to be spoken about with even more. It just doesn't have a shareholders impact. It also has other collateral damages. since the borrowers are, in some cases, are unable to pay at all. But Nifty Finance, about 0.25% or 0.75% higher in trade. Interesting moves there. What else? Actually, we're talking about some stocks which were active since the markets are looking up in the green. Do you track any of these movers which have inched up in the last few minutes of trade, Mr. Chokalingam? I want to bring up Avalon Technologies that's knocking on the doors of 970 after a very stupendous quarterly performance, and then brokerage notes coming out and recommending that stock. I think the last 1.5 months, it's had a fabulous run. What do you do now with an Avalon Tech if you track this one?
Sorry, I haven't tracked. Suddenly, in the last couple of years itself, more than 1,000 companies have been listed, including small micro caps. So it's going to be difficult for us to track all this. So I haven't tracked it.
Okay. What about you, Kunal? I mean, it does have a recent history of a very sharp uptick. Can it do more?
Yeah, I think definitely from the current levels, what we have seen a very good rally on the higher end. The next immediate resistance, what I see for the stock, based on the technical, that is the next target, what it can achieve is 972, 973 on the upside. From there onward, probably you can get some selling pressure from the stock as well. So I think from the current levels, 10 to 12 points more upside is left. Then we might see the stock showing some profit booking towards the levels of 875, 880 on the downside.
Slowing demand continues to trouble auto companies and is casting a shadow over November sales figures. Puneet joins us to share more details. Puneet, this is the preview for November. Wouldn't you ordinarily expect a bit of a downtick as opposed to and when compared to a festive month?
Well, definitely, it's a mixed bag, and especially as you rightly said, we had the festive period of Diwali this time, the auspicious first couple of days, 3 days in 28th of October. So a lot of come is that. Another negative point is that in the same time last year, which is November, Diwali was in November 14th to 18th. So because of that, the base effect is very strong for all these companies. Despite that, analysts are expecting some companies to outperform and show some growth as well. So it is expected to be a mixed bag overall, but there are some new winners, especially the likes of Maruti Suzuki. But let's start with, the first company, Bajaj Auto. It's done very well over the last 6 months, but it's going to be roughly about a 2 to 3% growth itself compared to the same time last year. It's also essential to not look at the month-on-month number this time because, Diwali was in October and, it's a very heavy base again on a month-on-month basis. So we'll focus on the year-on-year. So Bajaj Auto, 2% growth. Let's move on to TVS. It's going to be the highest growth, 6 to 7% amongst the two-wheeler pack, according to analysts from Jefferies, Motilal Oswal, Nuvama, among the others. They mentioned that, for TVS, it is a consistent performer and is likely to post the highest growth as mentioned. Let's look at Hero as well as Eicher Motors also very quickly. Hero is expected to be about 3% down, while Eicher Motors another expected to be roughly about 2 to 3% growth in this particular year. So watch out for Eicher Motors because it had roughly 110,000 units sold versus an average of 80,000. So it's expected to be around 82,000 this time. Commentary has been very strong. Let's see what happens. But four-wheelers, again, very interesting trends. Mahindra, again, continues the outperformance. The Thar maker has been doing very well in this particular year, 11% growth. But, the growth is slightly lower because, the base effect hasn't been as strong because, a lot of launches have happened this year, the 3X as well as the Thar. So watch out for Mahindra, might surprise on the upside. The other one's Maruti. And, we have seen a lot of launches by the company this year, especially with the Desire. And it's being the first product of Maruti to have a 5-star safety rating. That's key because that's been one of the contentious points for the company versus Tata and Mahindra. Watch out for Maruti to be the most surprising pack and the company in the whole auto pack as well. Finally, Tata Motors, another 5 to 6% fall, a very disappointing year continuing. When you look at the commercial vehicle makers, it's for the first time in this particular fiscal year, a positive growth for most companies. So a 3% growth is expected for someone like an Ashok Leyland, but Tata Motors on the commercial vehicle side is going to surprise investors. That's what, analysts are expecting. A 13% growth is expected from Volvo Eicher, and when you look at Tata Motors also on a year-on-year basis, expected to be around 11% growth, so very strong. Finally, on the tractor makers, the divergence continues between Mahindra and Escorts. Escorts expecting a 2% fall in this particular month versus someone like a Mahindra who's expecting a 4 to 5% growth. So overall, it's a very, very interesting month, expecting a downtick, but there are some surprises like Maruti, definitely. Mahindra is continuing both on PV as well as, on tractor side, and TVS and Eicher will be something to watch out for.
We had an interesting conversation this morning with Rakesh Sharma of Bajaj Auto, who is expecting 8% growth in the coming quarters on the back of strong rural demand. Listen in.
We started the year with an expectation of about 6 to 8% growth in the motorcycle industry. And it started off slowly in quarter one, quarter two, but picked up, and particularly picked up very well in the festive. I think the next few months, we should be looking at, for the industry, a growth of about 8% or so. Now, it could lie between 6 to 10%. So I'm saying about 8%, which according to us is a very healthy growth, particularly if you break down that growth between the higher end of the industry, which is the 125cc plus, which is going to be in double digits, and which is healthy because that's where you get better revenue and better margin. So that's a very good sign. I think various factors, things like a reasonably stable economic backdrop, advancing penetration of retail finance, a reasonably okay monsoon, which is ensuring that the small town wheelers moving. All these things are combining to say. But of course, there are issues like the very bottom end of the market, whether there is enough economic inclusion to lift those people up into the consumption cycle. We are still seeing a little bit of softness over there.
It'll be interesting to see what the auto names deliver, and if indeed Maruti can spring a surprise, or M&M via its tractor business can spring a surprise or no. Remember, it's been a good performing stock, M&M. Now, Kunal, before we take in your closing strategy, actually couple that up. Let's talk about M&M, which is at 2966, currently 2.5% higher. What do you do here? Couple that up with your closing strategy for the afternoon.
Yeah, I think firstly talking about M&M, we have already seen the entire auto space. The auto index has been in a big downtrend where lower high, lower low formations have been there. On the contrary, we are seeing positive trend in M&M. So if I look at M&M, it has been forming higher low formations on the daily chart. So again, it has taken a support at its 20 DMA. So you can say it is at on a short-term basis, it is at a major make or break level for M&M. So M&M at the current levels with the rising trend line support, one can initiate a buy, keeping a stop loss of 2,900 on the downside, and look for targets of 3020 to 3050 on the upside. And for the closing trade here, I would like to highlight Hudco, that is Housing Urban Development Company. I think very strong volumes in yesterday's trading session, plus in today's trading session. The stock is likely to surpass its 200 DMA, which is a trend reversal for the stock as well. So I think here it can do well. 239 is what currently it is trading at. So one can initiate a buy, keeping a stop loss of 230, looking for targets of 245 to 250 on the upside.
So Hudco is a good bet. What about an LIC or an ICICI Pru, Kunal?
See, I think both LIC is also looking very good, strong surge of volumes which have been there in LIC. But the next hurdle for LIC is again at the 200 DMA, which is placed at 991. So if in Monday's trading session, if it breaks 991 and sustains above it in the first trading hours, then probably one can initiate a long looking for targets of 1020 on the upside.
So just stay on with us. We're shifting focus to macros because post-market close, the big story is going to be Q2 or the second quarter GDP numbers for the Indian economy expected out today. And economists believe we could see growth at 6.5%. Pallavi joins us back from a very exciting break. Pallavi, great to have you back on air. What do you expect from the print today?
Hi Tamanna, so it is indeed going to be, we're going to be watching out for quite a lot in the upcoming Q2 figures. Like you've mentioned, GDP growth is estimated to come in at 6.5%, and that's according to economists polled by Bloomberg. GVA growth is expected to come in at 6.3%. Now, if that is indeed the case, then we are going to be seeing GDP growth slow down to a 6-quarter low. What does this also mean is that we might see downside risks to the full year forecast as well. Just for a quick sort of recap, the RBI projects GDP growth to come in at 7.2% for Q2, and for the full year it expects GDP growth to come in at 7% at this juncture. Both figures appear unlikely. Now, looking through the details, what is expected to be good news is Agri GVA, that is expected to see a rise compared to what we saw in Q1, and that's on the back of elevated Kharif production estimates. What we are going to see some loss in momentum is industrial GVA, with mining and utilities likely to come in even lower than what we're expecting manufacturing GVA to come in at. Now, on the expenditure side trends, what we're going to be watching out closely is capex and spending. Now, so far, post the pandemic, we had seen government spending doing the heavy lifting in Q1 because of the elections and a whole host of other reasons. Government spending was significantly lower than what we're accustomed to seeing, and that did show up in GDP figures as well. In Q2, while it is expected that we might see an uptake, it is not expected to be substantial enough to drive up GDP figures.
Okay, thank you for that, Pallavi. Meanwhile, the indicative closing price on your screen at 24,133 and 4. The Nifty, one stock that's powering it is definitely Bharti Airtel. One of the reasons could be that ICICI Securities has upgraded Bharti Airtel to buy from an ad. Rucha, what is ICICI Securities seeing in the stock?
Thanks, Tamanna. So as you rightly mentioned, ICICI Securities has upgraded the stock from ad recommendation to buy, given it a target price of 1875, implying an upside of 20%. Now the company, the brokerage house says that the EV by EBITDA valuation may hold more room to increase. So this might say that the stock might be more expensive. However, it also offers a higher CAGR, that is compounded annual growth rate, of about 14.5% over the next 2 years. Also, it expects the FCF, that is free cash flow, to be sustainable and also may grow for the next couple of years. In addition to that, it also expects the Bharti's AGR markets to remain at the same level as it is currently. Remember that Bharti has an ARPU, that is average revenue per user, of around 210 rupees, and it also targets an ARPU of around 300. Now let's look at the analyst recommendation on the Bloomberg. We have around 29 buy calls on Bharti Airtel, 4 hold and 2 sell calls. So clearly a bullish trend on Bharti Airtel is what we can expect from analysts over here. Lastly, Tamanna, talking about the share price movement over the last 1 year, Airtel has moved up by more than 60%, and over last 1 year by more than 18%, largely backed by the tariff hikes which the companies had undertaken in the month of July. So this is what we have on Bharti Airtel, buzzing on the back of an upgrade by ICICI Securities.
Okay. Thank you for that. Choka, just a view on Bharti Airtel. If you want to do the telecom play, I mean, Vodafone, most actively traded stock, but if you actually want to go into, a bet on the telecom business, how do you think about Bharti Airtel?
Yeah, not only just as a telecom play, even if you want to play on Nifty census stock, this is one of the ideal stocks for the medium to long term, because the telecom tariff is not likely to come down, rather it is steadily expected to go up, and therefore it would be one of the safest stocks. But again, the stock has given more than 60% return. So in the short term, it may not give any decent return, but for long-term investor, it's a good to hold or even buy.
Investment. I mean, it's flat for the month, 4.5% up today. Kunal, is this a stock that you would look at positively on the charts?
Yes, definitely. I think we discussed that. I'm expecting the stock to surpass its all-time high level as well. So I think the undertone remains extremely bullish for the stock. The relative strength is clearly visible. I expect 1750, 1770 to be tested on the higher end.
All right. Thank you so much, Choka and Kunal, for speaking with us today. But, let's play out for you a quick voice from Prateek Agrawal of Motilal Oswal AMC, who says that a better monsoon and hike in government spending will aid second half of FY25. Listen in.
Quarter 1 was lackluster. Now, if you move into Quarter 2, you got good rains. When you have good rains, for example, it's cooler, you use less ACs, your bills are lower, electricity guy makes less money, and so on. So the coal guy who does open cast mining is able to do less work. People come to offices later. The productivity falls if the rains are very good. Now, quarter 3 is when you get the benefit of all of this. If we look at rains, if they've been good, well spread. So quarter 3 should see benefit of that. Now, government spending, you got just 26% fiscal deficit in the first half. It will get covered in the second half, which again gives you some sight of momentum from the government side. I think if you look at today's newspapers, they cover the fact that government wants to accelerate spending in spaces where it can be accelerated. So what you are going to see in quarter 3 and quarter 4 will be significantly better than what you saw in quarter 2, is what my sense is. Now, don't look at staples for feeling better. That's not the story. The tailwinds are in spaces where government policy push is strong. This is a period when capex is going to lead growth in the economy.
CapEx might lead growth in the economy, but essence of that interview was that put in money to work because the worst is behind. Now, certainly the market seemed to show that today. So very quickly on the index and the benchmark indices, despite banks not participating, Nifty 50 up 0.8%, despite IT not participating as well. So the two heaviest sectors didn't quite participate as well, and yet the indices have done well. And the heat map very quickly on the screen, just to show you what has led the rally. Well, Airtel, Sun Pharma, Cipla, and so a bit of pharma, a bit of Bharti Airtel, a bit of auto, a bit of consumption. Across the board moves coming in and not too many losers, I think, aiding the move today, Tamanna.
Yeah, and no clear theme, I would say. You find it a little difficult to, it's a very individual hodgepodge, but I mean, no one's complaining. Advanced decline ratio, just before we get to the sectoral indices and the broader market, and we'll also tell you what the week has looked like, because what a week it has been. The ups and downs have been just like the chart today. You're ending though on a high. This is much better than what we've seen through most of the day. I will be keen to see what the FI figure is, because remember, FI sold as much as they'd bought in the first 3 trading sessions of the week in a single day. Are they coming back? That's one thing to watch. Let's also watch the sectoral indices just for a second and look at where the growth has come. Pharma is the story of the morning, and Neeraj, this is something you mentioned this morning as well on India Market Open. Nifty Pharma, Nifty Healthcare doing really well. Media as well. Banks not participating, but realty stocks and PSU stocks in a bit of pain. Not that much, to be honest, compared to what you would expect. For the week, not bad. After all of that pain that you see, you're still up about 3%. Remember, this was, a tough kind of week that you saw. The Bank Nifty also up about 3% up. Let's look at the broader indices very quickly. The small cap and the mid cap as well, 3.5% up. This one last chart I want to pull up, and I know we have to wrap up, but look at the small cap, 5.5% up. Just the top gainers and losers for today, and then we close, because that also tells you the story of the kind of market you've had. On the winning side, Adani Green, Adani Energy, and most of this week would be about the recovery in those group stocks in terms of a theme. Easy trip, 1:1 bonus, Piramal Pharma on that pharma roll, and that's what's really worked. This might go into next week as well. If there's a worry about asset quality and smaller lenders and microfinanciers, that is not a worry that's going to end anytime soon. But that's really all the time we have for India Market Close. So from Neeraj, me and the team that put the show together, thank you so much for watching.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Securities does expect India's consumption story to remain muted and a mixed bag in the third quarter. Now, this is because of several reasons. One is inventory pile up in the fashion space, as fast fashion and premium segments are the only ones that are actually witnessing growth. Quick service restaurants are also seeing muted growth, and in dine, as more consumers are opting for food delivery. Retail stores are also closing down, and as a result of higher demand for quick commerce, meanwhile, footfalls in theatres are also decreasing, and the ad revenue is expected to remain muted at around 5 to 6%. So the key question is there actually recovery inside when there's such a mixed bag? And to talk about this with us today, we're joined by the Senior Vice President at Elara Capital, Karan Tarani. Karan, I'll start off with this question. Q2 was a mixed bag, but one of the key takeaways was, while urban consumption did see a slowdown, we did see pockets of recovery in rural. So how do you expect consumption in urban and rural areas to pan out in the second half of FY25?
Hi. So I think the consumption is going to be mixed across various categories. I think online business models have kind of had a negative impact on many traditional business models. Take the example of cinemas, wherein OTT is somewhere impacting cinema footfalls. Take the example of QSR chains, wherein delivery is growing faster as compared to dine-in. If you take the example of the grocery stores, the modern trade, wherein quick commerce is kind of giving a tough fight to them as well. And obviously the fashion segment remains to be highly fragmented with so many players. Some are omni-channel, some are pure online players, D2C brands, everything put together. So I think there are concerns wherein online businesses are doing well. If you look at the advertising spends as well, traditional ad spends are quite muted. Digital ad spends are doing phenomenally well in terms of growth. So again, that's a similar traction here. So I think online is going to grow faster, whether it be retail, e-commerce, quick commerce, or any other segment for that matter, even delivery, food tech. That will grow in anywhere in the range of 15 to 25% in terms of where the category is, except for quick commerce, wherein the growth rate is about 60-65% because of a small penetration number. And I think traditional businesses will continue to grow at mid to low single digit kind of numbers, clearly because of the struggle that we have seen in terms of footfalls, in terms of customers adopting to traditional business model, traditional businesses doing.
Right. Karan, that's an interesting point that you make between traditional versus the modern, I wouldn't even call it modern trade, but the quick service space or quick commerce, I would put it that way. But let's break this down. When you talk about quick service restaurants as well, as your report states, again, a good same-store sales growth coming in terms of Wow Momos at around 8%. Now, the dine-in aspect is expected to remain muted. Delivery is growing, right? So if you have to look at the delivery part of it, let's say a Zomato, a Swiggy and a Zepto in the unlisted space, where is your preference between these two companies versus, say, if you have to just look at a listed restaurant space, where would your bets be?
So in terms of the QSR and the food industry, we are clearly seeing very differential growth rates, right? So if you look at the QSR chains, I think the growth rates therein has converged more in the range of 10 to 15%. And that's primarily because of two reasons. One is, certain categories like pizza are highly penetrated in terms of number of outlets. Beyond Domino's, we have, more than 12 to 14 competitors, which are, sizable in nature. Some of them are even franchise spaces. So a lot of competitive intensity has picked up, a lot of outlets have opened. We are somewhere in a situation wherein there is more supply than demand. So store growth is not going to be that aggressive in terms of number. Second thing is, of course, pizza is a delivery friendly product. So because of high exposure to delivery, you will see pizza, reporting better SSG as compared to other categories in QSR. But if you look at the other categories of QSR, like for example, burger, fried chicken, I think there the pain in terms of SSG remains. Most of them would report maybe, just a flattish SSG in a best case scenario or a small decline as well, despite this entire kind of come as compared to expectations because of increased competitive intensity. So as far as traditional QSR is concerned, the food business, the growth rates will be more in the range of, low teens or, early double digit kind of numbers. Now, if you compare that in terms of a food tech segment, very clearly Zomato, Swiggy kind of platforms on their food delivery business, you could see a growth rate of anywhere between 20-25%. And obviously, even these growth rates have somewhere converged because food as a business segment has kind of penetrated, in terms of the metro markets, the non-metro markets, everything put together. The growth driver right now is coming more because of frequency. So, about 3 to 4 years back, when the food tech business, just took off in a very big manner on a pan-India basis, you were seeing growth rates of even 35-40% in terms of the food revenue for aggregators like Zomato and Swiggy. That was primarily because of more user addition. I think user addition was, more than 18-20%, wherein penetration was happening. Users were getting added. There were a lot of customer acquisition costs, a lot of promotion, a lot of discounts being given. But now, as we see, the market is kind of matured. We have just two players. Discounts have kind of come off. Players are focusing on profitability. So now a bigger lever for growth is frequency, right? So clearly, frequency is going to see strong growth because of loyalty programs on both Zomato and Swiggy. And that will drive, you can say 40 to 50% of the incremental growth that these companies are trying to target right now. So very clearly, I think still there is ample room that for the next 2 to 3 years, you will see that the online business side and the food business outperforms the traditional business side by anywhere between 1.4 to 1.5 times.
Let's move on to the grocery space. I mean, quick commerce has been hurting these chains. We've seen large retail stores shutting down stores. But so there has been a shift in the way consumers are actually buying their groceries. First the trust was, to actually go to the stores. Now they're preferring the quick commerce. So do you see the shift necessary for the old grocery chains? Do they have to make the shift? We had Flipkart that has started with its 10-minute grocery delivery thing. Even Big Basket making moves on that space. So is this key, the digital aspect in terms of transformation or transition?
So definitely, I think quick commerce is hurting growth prospects of both the Kirana stores, which is the pure play brick and mortar traditional business model for FMCG and staples, and it's also impacting modern trades so to a certain extent. But of course, the impact on Kirana is much more as compared to modern trade because Kirana stores are more for impulse buying. They operate at a larger base. So I think, more than 70% of your FMCG grocery sales are coming from Kirana outlets today. And the digital online e-commerce, quick commerce put together is not more than 10-12%. So on that base, you are seeing some bit of negative impact because the customer is able to get the product in terms of, within 10 to 15 minutes. And it's more of impulse buying, impulse categories, which is seeing massive amount of traction for now. Second thing is that, modern trade is also seeing negative impact of quick commerce, but currently this is limited only to the metro markets, the top 10, 12 cities that these quick commerce companies operate. And if you look at companies like DMart, other larger modern trade players, they would not be driving more than 40-50% of their sales from the metro markets as such. So currently the impact on modern trade is much lower as compared to Kiranas. So one, of course, is the revenue split in terms of metro, non-metro. Second thing is that quick commerce companies are not giving at a price as compared to what the modern trade companies are offering in terms of prices, right? So the prices are more reasonable, more value centric for modern trade players. So modern trade purchasing behavior remains to be constant for now. I mean, it's not seeing a big negative impact, but a lot of top up purchases, during the month in terms of, when the customers want to top up something, they want to order something extra. So the frequency of going to modern trade outlets in the metro cities has kind of come down, and that is impacting the SSG. Which in turn is, putting concerns on the store growth as well to a certain extent. So this year, companies like DMart will probably do store growth of, 40 stores, which is around 12-13% store growth as per what they are, being guiding for. But in the medium to long term, the way quick commerce pans out, if at all this expands in a very big manner in the non-metro markets, you could see concerns, on that front as well in terms of growth rates. So clearly, the bigger pinch is going to happen for Kiranas, which may see a decline in terms of sales. Trade, I think the decline is quite limited for now. Growth rates of maybe 20% could come down to 15-16%, but the growth rates are going to sustain in the near term, medium term for now.
Right. Karan, coming to you with regards to where cinema is concerned, right? You've already seen that downtick that has happened. I mean, there's nothing to talk about in terms of how much competition is hurting them. Now, they're still, let's take a PVR, they're still going on that expansion spree in terms of theatres. How do you expect an investor to look at a company like a PVR, because occupancy is low, ad revenues are low? How do you talk about sustenance?
So PVR also has got its own set of concerns from content. I mean, of course, there are 2-3 reasons here, structural reasons, which are, kind of denting their overall occupancy level. One, I think the kind of variety of content that one has on OTT, this entire thing of, the ease of watching OTT content, the bandwidth speed becoming better, higher broadband penetration, too many OTT platforms, sort of packages being available. I think that is taking away more than 10 to 12% of the footfalls on a permanent basis. So we don't foresee that occupancy levels, on a sustainable basis, could come back to pre-COVID levels. We believe that 10 to 15% of occupancy is a permanent dent because OTT is here to stay, and this entire digital initiatives are also here to stay in terms of better bandwidth speeds. The second issue is on the content side. Now, let's say 15% impact of OTT, let's say, on a sustainable basis, cinema chains should at least operate at 85% of pre-COVID occupancy levels. Now, even that is not happening very clearly because structurally a lot of things have been changed on the content side as well. So in the pre-COVID times, you had people going to cinemas more frequently. You had a lot of medium budget films doing very well in terms of box office. But in the post-COVID era, clearly frequency has come down. People are only going to watch films of large budget in nature if it's worth their time, effort, money. And the risk is highly skewed rather to the larger films. So there are about 15 large Hindi films which are made during the year. Even if 3 or 4 of them don't do well, eventually you could end up at a 20% box office return on a YY basis. That's the kind of stakes large films have. So it's become a more risky proposition as compared to pre-COVID times, where everything was very scattered. Content was doing well across budgets, medium, small, large, everything put together. But now you can say 85-90% of the box office even today is coming, from the large budget films. And, medium budget film frequency in terms of them doing well is very, very low. I mean, once in 6 months, once in 8 months, which may not do good to overall occupancy levels. So clearly there are concerns because of these two factors. And I think ad revenue, F&B revenue, all of the things are just a function of occupancy. So unless occupancy doesn't come back on a sustainable basis as compared to pre-COVID levels, you will see concerns on the overall profitability as well.
Karan, we've spoken about a couple of segments of consumption, which is absolutely pretty mixed as a trend that we've looked at. If an investor has to look at investments in this space, say between food revenue, that's the quick service restaurants, versus your modern trade listed players, right? Or if you talk about cinema players or fashion or the beverage space, where would your bets be? Which segment?
I think in terms of an overweight stance, we would like to put our bets on the fast fashion segment because this is one segment which is doing very well. I think in terms of both SSG and in terms of store expansion, there is ample opportunity for this segment to penetrate. So, companies like Trend, Zudio are expected to do very well over here. Of course, competitive intensity will increase, and Zudio growth rates, what we've seen in the past of 45 to 50%, may not sustain.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Nifty Sensex rally nearly 3% during 2 consecutive weeks of gains. Most sectoral indices rise, with Nifty Pharma gaining the most. CRISIL Ratings reaffirms positive outlook on Adani Group, cites the strength of group's financial and business risk profiles. Adani Energy sees largest single-day jump in nearly a year, rising over 19%. Second quarter GDP numbers are expected to be out anytime now. Economists expect the growth to be at 6.5%. UBS Securities warns that loan defaulters by microfinance borrowers have risen in October. Also expect slippage levels to remain high in H2 FY25. Reports suggest bank insurance deals are under scrutiny of the insurance regulator. Finance Minister and IRDAI urges bankers to avoid mis-selling. Serious Fraud Investigation Office seals Hero Electric's premises in Gurugram over FAME 2 violations and unpaid. Russia unleashes a massive wave of missiles and drone strike across Ukraine on Thursday. Target critical power plants and plunges millions into darkness as temperatures hover around freezing. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So Friday cheer for markets. Nifty and Sensex ended 1% higher and have rallied 3% in 2 consecutive weeks. Most sectoral indices also rose, with Nifty Pharma gaining the most. Neeraj Shah is joining us with a wrap of all the action on the bourses.
Interesting day of bounce for the markets. Remember, yesterday everybody was grappling with the question about why is it that there was so much of bearishness in the market. You could now blame it squarely on expiry date jitters, and that bounce has been pretty strong in the session today. So 0.9%, and this is despite banks or IT not participating today. So quite stunning the move that we've seen in the large caps today. The broader markets had a fairly decent outing too, because the market breadth was good. I mean, so 1/3%, and the small caps particularly 0.78%, which brings their weekly performance to about 5.5% in the session. But for today, if you look at the heat map, smattering of green, very little red, 2 or 3 or 4 noteworthy losers, actually just a couple of them, Shriram Finance and Power Grid. The winners across the board, from Bharti in the telcos to Sun and Cipla in the pharma space to M&M, from the auto space to ONGC and Reliance from the oil and gas to Ultratech and Adani Port from infra. So it was across the board. And if you look at the BSE 500 as well, the gainers and losers, yes, the Adani Group features there, as it been the case for the last 3 days. So green and energy making their way into derivative space, some of these stocks, and doing well. But Piramal Pharma, Lloyds Metals, Spark doing well. What didn't do well? Credit Access Grameen on the Goldman downgrade. Poonawalla FinCorp down 5%. There was weakness in Home First, in ITI and Triveni Turbine too. And just a couple of mentions of stocks which entered into the derivative space. So LIC had this big bang move. JP Morgan said that the bank assurance rules actually benefit LIC, and that stock was up about 5%. I wonder what Avenue Supermarts and some of the others have done as well. But largely, it was a positive day for most stocks in trade. So not a bad end to the week. Happy Thanksgiving to everybody.
Right. Thanks, Neeraj, for that. Now, we also spoke to Prateek Agarwal, MD and CEO of Motilal Oswal AMC, about certain spaces that the government wants to increase spendings, which would affect the Q3 and Q4 results.
Government spending, you got just 26% fiscal deficit in the first half. It will get covered in the second half, which again gives you some sight of momentum from the government side. I think if you look at today's newspapers, they cover the fact that government wants to accelerate spending in spaces where it can be accelerated. So what you are going to see in Q3 and Q4 will be significantly better than what you saw in Q2, is what my sense is.
Viewers, Adani stocks have been surging in the past 2 days of trade. More good news overnight for the group. Agam has the details. Agam, what are you picking up?
So we have a whole host of institutions and entities across the globe coming in support of the Adani Group companies, especially following and in the wake of the group releasing that statement suggesting that the key members in there, Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been implicated when it comes to certain charges with the FCPA. And on account of that, we have more and more good news coming in. I'm going to start off with Kerala, right at home, where they have in fact signed a supplementary concession agreement with the group when it comes to the Adani Verinium Seaport. And this actually paves way for, well, earlier than expected when it comes to revenue gains from the Verinium Seaport. Of course, the port will be fully operational by 2028, but it's not just Kerala. Moving on to, well, the former Andhra CM, Jagan Reddy, who has also refuted claims with respect to bribery and the Adani Group, and in fact has also suggested that he may look to sue for as much as 100 crores when it comes to media companies reporting these incorrect, allegations. Moving on, we also have a lot of updates coming in from Africa. Tanzania has in fact extended its support back in May of 2024. The Tanzania government had signed an agreement with the Adani Group company. This was to operate one terminal in Dar es Salaam, and well, Tanzania is suggesting that there's no change in that agreement. Neither has there been any change with agreement when it comes to the Sri Lanka Port Authority, where once again the chairman has said that they're not looking to cancel any of these terms of agreement. Well, moving on, we also know that Abu Dhabi's IHC is unworried about the outlook of the Adani companies, and and they haven't made any changes with respect to their investments in the Adani Group companies. But even later on today, we had an update from CRISIL where they have in fact reaffirmed their positive outlook, and they cite strength of the group's financial and business profile, and they also say that allegations haven't led to any negative actions from lenders or investors. And in the latest, we also have a whole host of Japanese banks lending support to the Adani Group company, where in fact someone like Mizuho Financial Group has suggested that the charges will not have any long-term implications, and there are no plans to pull back when it comes to Sumitomo Mitsui or Mitsubishi UFG Financials. So all in all, a lot of entities from across the globe coming in support of the Adani Group companies.
Thanks, Agam, for that deep dive. Now, the Ministry of External Affairs has come out with a statement on US case against Adani Group, saying that this is a legal matter involving private firms and individuals and the US Department of Justice, and that the government of India was not informed in advance on the issue. The statement added that any request by a foreign government for a service of summons part of mutual legal assistance, and such requests are also examined on merits, and that the ministry has not received any request on this case from the US side. Now, taking a look at the new kid on the block, Enviro Infra Engineers had a stellar debut on the Lal Street, marking a 48.65% premium over the issue price of 148 rupees. On BSE, the stock opened at 218, reflecting a 47.29% premium. This listing is the biggest mainline IPO debut in the November and the 15th largest overall in 2024. The IPO of Enviro Infra Engineers received a robust subscription of nearly 90 times viewers, thanks to heavy bidding from institutional and non-institutional investors. Now on to an NDTV Profit exclusive. Serious Fraud Investigation Office has sealed Hero Electric's premises in Gurugram over FAME 2 violations and unpaid dues to dealers. My colleague Tushar is joining us with more details on this. Tushar, take us through the exclusive details that you're picking up.
SFIO has actually sealed Hero Electric's building in Gurgaon over FAME 2 violations as well as unpaid dues to dealers. What sources are telling us that SFIO has served a restraint order to Hero Electric to seal its premises in Gurgaon, has been ordered to not move in part or otherwise any of the equipment kept inside the building premises. Any violation will result in criminal proceedings. Now, we have to remember that it has been actually in violation of FAME 2 EV subsidy norms in the past, as far as bundling of chargers was concerned with its scooters. According to a previous NDTV Profit report, about rupees 500 crore is due to dealers which has not been paid in any form until now. What happens next, we'll come to know from SFIO. We are tracking this story.
Right, Tushar. Thanks for those exclusive details. Now let's go over to my colleague Pallavi on the GDP data that's just come in, viewers, along with Radhika Rao, the Executive Director and Senior Economist at DBS Bank.
Right. Thanks a lot for that. GDP figures have just come in. India's GDP growth has come in at 5.4%. That's for Q2. And that's compared to 6.7% that we had seen in Q1. Now, GVA has come in at 5.6%, and that's compared to 6.8% that we had seen in Q1. This is the lowest we have seen in 7 quarters. We were anyway anticipating some sort of easing in GDP growth. The Bloomberg poll of economists had pegged GDP growth to come in at about 6.5%, and this is actually considerably lower than that as well. The RBI's projection for Q2 was interestingly at 7.2%, so big miss on that front as well. What this does mean is possible downside risks to the full year forecast. The RBI had pegged GDP growth for the full year at 7%. We're possibly looking at a cut on that forecast when the RBI MPC meets very shortly. But for more details and her quick views on what she's making of these figures, I'm joined by Radhika Rao. Radhika, great having you back. Thank you so much.
Hi, Pallavi. Happy to be here.
Yeah, so, what are you making? What are your first thoughts of today's figures? We were anticipating some sort of easing in GDP growth momentum, but this is a surprise on the downside.
Certainly, I think it is quite a considerable miss. I think the consensus was at about 6.5%, and I think there were some who were expecting perhaps even weaker. We were at about 6.5%, so this is a percentage miss. We would like, of course, we'll have to see the details. If there are any revisions in the past data, which kind of has brought this number down so much. I think trend-wise, this was expected. After the election impact in April, June, it was expected that the next quarter would be better because the election, the impact would have gone. But then you had the interplay of idiosyncratic factors, things like, unseasonal rainfall. You also had lagged impact of what there was a delayed start after the election was over. And then there were also some macroprudential measures that were undertaken that took effect. That impacted credit growth as well, for example. So certainly a lot of things have come together in the July to September quarter. But at the headline level, this is a percentage miss. So I do think that there's going to be a risk of a downward revision for the full year growth numbers.
Right. All right. Government capex was clearly sort of one aspect, one of the drivers of growth we had seen post the pandemic. We had seen government capex almost near absent in Q1, and that did weigh down on growth in Q1. In Q2 as well, clearly we've seen very little support, both from the central and more importantly from state governments in terms of capex. What's the expectation, especially looking at the full year target for capex? And that's still fairly robust. Are we going to still see some sort of uptick there going forward that could possibly support the economy? And I also do want to understand, you think that will be enough to sort of make up for, the figure that we're seeing this time around? For the full year forecast, do you still think there are chances that we might see some upside in Q3 and Q4?
Certainly, we are counting on an improvement in the second half of the year, second half of the fiscal year. So coming back to your question on the capex, certainly if you see, the trend in the first two quarters, and then you have this budgeted target of about 11.1 lakh crores for the whole year, the government spending, the center's government spending reached to really go up by 52% in the second half to fulfill that full year target, which is quite a uphill task. And the second factor being that there will be catch up for sure. I think you can already see even in the July to September quarter. In fact, the September quarter numbers itself were quite encouraging. And the thing about capex is that while the government does its bit, there are positive multipliers to the private sector, to the construction sector as well, which again employs a lot more people. So a jump start in capex helps a lot more sectors, in lots more sectors in terms of growth as well as income as well. So we do anticipate, in fact, in the second half of the year, it will pick up. I think there is also an acknowledgement officially that, the pace is moderating. And that's why I think you had heard a couple of voices also calling for rates to be eased. Also that the quarterly used to have these ceilings on how much expenditure should be undertaken. Those have kind of been loosened to make sure that a slow first half can be followed by a faster second half. So this is on the center front. Of course, the states are also expected, they also did not spend too much in the first half, but we expect them also to be in lockstep with the central government to step up spending. The full year, there might be a small miss in the budgeted target. At about 11 lakh crores, I would think that 9.5 lakh crore might be reached. But even to get to that number, I think that's going to be very positive for the economy. Like I said earlier, it's just not just one component. You see positive effects on the other components as well. So we are certainly counting on capex and a couple of other segments as well expected to do better in the second half of the year. But that said, I think in terms of the trend, it will be hard to get to the 7% mark. Our growth forecast for the full year was about 6.7%. Where we had anticipated a slow first half and a better second half. Given that we have now got a July-September quarter, which is sub 6%, I think there's likely to be a full year growth forecast of, we'll have to reassess that number as well. So there are a couple of pockets, again, like I mentioned before, where we think there could be some catch up in the second half of the fiscal year.
All right, let's also have a quick look at some of the sector-wise trends. In terms of agriculture, we've seen growth come in at 3.5% now. This is a tad bit better than the 2% growth we had seen in Q1. That's also fairly in line with expectations given the Kharif production estimates. Mining and quarrying has come in. It's actually seen a contraction of 0.1%, maybe partly also because of seasonality, because of the southwest monsoons we had seen during that quarter. The secondary sector has grown by 3.9%, and that's compared to 8.4% growth that we had seen in Q1. Manufacturing has grown by 2.2% in Q2. That's compared to 7% we had seen in Q1. Electricity and other utilities growing by 3.3% compared to a double-digit growth of 10.4% we saw in Q1. Construction as well saw slower growth, coming in at 7.7% compared to 10.5% we saw in Q1. Dheeraj, coming to you, thank you so much for taking time out to speak to us. Coming to some of these sectoral trends, agriculture, a little bit of a positive upside there. On industrial GVA, while there was some expectation of easing in momentum, would it be fair to say this is even lower than was being estimated? What are you making of these industry-wise trends?
Sure. Thanks, Pallavi, for having me here on the show. Look, I think agricultural performance was decent and it was well expected given your monsoon trends and your crop estimates, etc. What's particularly worrying to me is how manufacturing has dropped to about 2.2%. Now, this is significantly worse in many, many quarters. And if you look at the GVA and GDP numbers in combination, you would see that even investments, so GFCF growth has slowed considerably, even though construction has sort of held up at around 7.7%, which is not a very bad number, clearly indicating that there has been a bit of a slowdown in non-construction capex, something which is generally very interest rate sensitive as well. So I do think that, the industry-wise profile of GVA and the expenditure side profile of GDP are indicating that domestic demand is weakening both on demand and supply side. So there is a bit of a slowdown, which possibly needs a policy handholding now than later.
All right. So, on that note, given that we are just a few days short of the next RBI policy, given the current sort of interplay between inflation as well as growth, what are we looking at in terms of expectations from that policy? So far, the consensus is that of a status quo. Unlikely that we will see any movement on that front from the MPC, at least before the next calendar year. But do you think today's figures sort of, change anything on that front?
I do think so. I mean, the Reserve Bank of India's growth forecast was looking optimistic to everybody at 7.2. I think it will not be reached in FY25. The second half will have to accelerate very much, which is unlikely for that forecast to be realized. So I think that the Reserve Bank of India would also be downgrading their growth forecast to something what possibly is their assessment of India's potential growth. Now, coming to inflation, of course, we have an inflation print which was 6% plus, and possibly November would also be an elevated print. But let's be mindful that it is largely because of some vegetable prices that is happening. Now, if growth is undershooting considerably and is showing signs of a cyclical weakness which is sharper than expected, I think the Reserve Bank of India will have to rebalance their outlook and rebalance their commentary and possibly even policy actions. So maybe in the coming days you would see a more divided market, which was hitherto more or less on the side that the RBI does not need to cut rates at its December meeting, but I think there would be a divided market now.
All right. So coming back to you, Radhika, I do want to understand, while we did see across several high-frequency indicators some easing in momentum, we do agree that today's print is a bit of a shocker. It is even lower than was being estimated. What do you think the nature of the current slowdown of sorts is? In terms of industrial GVA, the understanding was that also because of the fact that we had benefited from a higher base effect, this print was not entirely sort of a surprise. We were expecting industrial GVA to moderate. But do you think that the current sort of slowdown is more cyclical in nature, or is there sort of reason to be more concerned?
So coming to your question on the particular segments, I think mining was expected to slow down. Industrial activity was expected to slow down. Some of the high frequency numbers were showing us that. If you had seen even the manufacturing sector corporate performance, revenue growth had slowed down. Again, sectoral things like refineries, cement, for example, were not showing not so robust numbers. Mining, because of weather, like was already pointed out. And so you've seen, I think the numbers are telling us that it's a bit more broad-based. Now, when you look forward, which could do better, I would think, again, construction, which had slowed down, we think that could pick up. Agriculture is another one where you have seen the Kharif production behind us. Hopefully, the farmers will be able to get their Kharif-related incomes, and then the Rabi crop is going to start soon. So that cycle will also likely, at least in the Jan to March quarter, provide a bit of support. But the takeaway, I would think, is also that it's more the slowdown is much more broad-based. Services have done relatively better than industrial activity. But even then, if you look at some of the subsegments, there's been a bit of a moderation in momentum. So looking at whether your question on cyclical or structural, I think this is certainly a pace of normalization. We have come from 3 years worth of around 8% average growth for the past 3 years. And we are heading towards a phase where it's a bit more normalization in trend growth. That's why we had expected a sub 7% growth this year. And I think some of these numbers actually validate that as well. But I don't think this essentially shows that, the slowdown is here to stay, in the sense that this is a structural slowdown. There are several, reforms that have been undertaken, efforts that have been taken, which will basically be positive for productivity as well, but it's unlikely to show. I mean, these don't show in the growth numbers very fast, so it does take a bit of time. And I think there are also some, like I earlier said, some in the consumption part of the story we haven't really spoken about much, but that part of the story also needs to be able to withstand in the coming quarters. You've actually seen the wage, say for example, salaries and wage growth in the listed companies, that growth rate has weakened. And if you've seen the agriculture wages as well, we had seen the real wage growth actually be flattish in the latest quarter. I would think the consumption part will be very important to watch. There's a bit of handover expected from urban to rural. That really a lot of counterparties are hoping, and that would play out. Like I said, Kharif incomes working their way, and then hopefully that will be followed by better returns on the Rabi as well. And there's some government support as well being extended. So in all, I would still see this as a trend of moderation and normalization after coming from very strong growth. But I think there needs to be policy action undertaken from fiscal as well as the monetary side to take support growth going forward.
All right, thanks a lot for that roundup, and thank you so much, Radhika and Dheeraj, for taking time out to speak to us. We will be in touch shortly to, as you have time to look through these figures. Also, thank you for pointing out, in terms of expenditure-wise trends, in case of private final consumption, we're looking at growth of about 6% on an annual basis. In terms of government final consumption expenditure, we're at about 4.5%. And in terms of capex, we're at about 5.5%. Now, I'm also joined by Neeraj Shah for his quick thoughts on what the markets are going to be making of today's figures. So, Neeraj, it's been sort of a mixed bag in terms of the earnings season in Q2. And we have seen some slowing in momentum across a host of high-frequency indicators. Added to that, today's GDP figures aren't particularly reassuring either. What are you making of all of these, and how do you expect the markets to react to these?
Yeah, so Pallavi, good afternoon. And is this a disappointment? Yes, it is. Was this baked in? Some bit of this was. Is it fully baked in? You could answer, or you could argue that maybe not. But I think the market had come to terms with the fact that Q2 was a disappointment, which are showing in the corporate results. Will the market react very negatively or adversely to this in a sustained fashion on Monday? I doubt. Remember, between now and Monday morning, we'll have the auto sales data coming out, some other data coming out from companies which will release their monthly numbers as well. And if those numbers look okay, then the market will look at the October and November combined, and then think of maybe that the coming out of this Q2 number, which has been a debacle, has been swift, and therefore it may not look all that bad. So in isolation on this number, should the markets have gone down if it had not until now? Yes, absolutely. But because the markets have already corrected from 26,200 to 24,000 circa 24,100, and because some of the high frequency indicators have come out okay, I would suspect that the markets will not take too badly to this. One last point I want to make, the corporate commentary in the recent past, especially in the last 3 or 4 days, of at least companies who have spoken to us or have spoken to brokerages, has been pretty positive. So in some sense, there is a semblance of sanity opposed to this, what you could argue a rather insane number on the Q2 GDP, Pallavi.
All right, thanks a lot for that, Neeraj. We clearly have a whole host of indicators to look forward to. Like Neeraj mentioned, in terms of corporate commentary, at least going by that, it does get a tad better, especially on the back of expectations of a recovery in urban consumption, alongside some signs of recovery that we're already seeing on the rural front. That apart, we're also going to be looking at some sort of a boost from the festive economy as well as the wedding season. A whole host of other indicators that we're going to be watching out for closely. We will continue to unpack some of these figures and make more sense of them going forward, but that's all we have on this edition of Profit 360. But do stay tuned to NDTV Profit on our continuing coverage of today's figures and a lot more in terms of news and updates.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.